Very good morning, ladies and gentlemen. It's wonderful to see you all here today, and we have a very interesting day ahead of us with many sessions lined up for today as well. And we are just going to start the first session of day 2 in just a few moments from now. So my request everybody to kindly settle down, and we will be starting the session in just a few moments from now. Very good morning and a very warm welcome, ladies and gentlemen, to day 2 of the Global Economic Policy Forum, Strategizing Global Prosperity Amidst Polycrisis. Yesterday was indeed a power-packed day filled with discussions and conversations on varied subtopics relevant to the theme of this forum. And today, ladies and gentlemen, we will commence this with the plenary session 9, and this is on the theme of building resilient capital markets, strategies, and the way forward. And we are very pleased to announce that we have a very eminent and esteemed guest who will address us today. So without any further ado, ladies and gentlemen, please join me in inviting and welcoming Ms. Madhavi Puri Boch, Chairperson of the Securities and Exchange Board of India, SEBI. A very warm welcome to you, Madam. And joining her on stage are Mr. Sanjeev Bajaj, immediate past President of CII and also the Chairman of the CII Economic Affairs Council, along with Mr. Chandrajit Banerjee, Director General of CII. Ladies and gentlemen, the Indian capital market has displayed market resilience, and despite the global headwinds, this session shall focus on the future strategies and will further help in building a resilient capital markets to support the growing needs of the Indian economy. And with these words, I will now invite Mr. Chandrajit Banerjee and request him to make his opening and welcome remarks, and then further moderate this session. Over to you.
Good morning and welcome back to day 2. It's a pleasure and honor to welcome the chairperson of the SEBI, Madam Madhavi Puri Boch, amongst our midst in this global summit. Madam, a very, very warm welcome to you and for being with us this morning. You know, Sanjeev has been leading this conference and this summit as not just the immediate past president, but also the chairman of the CII's Economic Affairs Council of this year. So it's indeed a great pleasure for all of us to have with us the chairperson of SEBI. Besides being the first lady to head the Indian stock market regulator, Ms. Boch is also, if I can say, the youngest chairperson. She's also the first person from the private sector and the first, I don't know whether it is a good term to use, non-bureaucrat individual since 2002 to lead as the SEBI. In line with its objectives and as the nodal authority, SEBI has been the flag bearer and relentlessly working to protect the interests of investors and to promote, regulate, and strengthen the securities market. In line, of course, with the global trend, and we have so many of our global colleagues over here, India has been significant increase in the number of individual investors accessing the capital market. And in fact, the numbers of the cumulative demat accounts have gone so much significantly. What was achieved over the last 2 decades have been achieved in just about over the last 2.5 years, if I may say. This could be achieved inter alia on the back of significant adoption of technology by market intermediaries and market infrastructure institutions. I'd just like to mention that some of the things that we have seen in the recent past. Recently, SEBI announced to move to T+1 settlement cycle for all scrips from October 2023. And that means all trades are now 1 day after the date of trade instead of the current T+2 settlement cycle. SEBI, we understand, is also working on instant transaction settlement cycle to bring more transparency by improving the timeline in transaction settlements. The move definitely is expected to increase trade volume and reduce the risk of default fraud. Increased investors' participation, again, an extremely encouraging sign for the growth of the capital market in India. It is for the stakeholders, regulators, market infrastructure institutions, market intermediaries, and other stakeholders to ensure they keep their trust and faith in the market. It's great to see how SEBI has been encouraging investors to take informed investment decision based, of course, on their risk appetite. It's also greatly encouraging to see how SEBI has strengthened the disclosure norms for corporate participating in the market, leading to enhanced market confidence that we see. This is especially so in the case of the new age technology companies. Talking of stakeholder engagement again, recently we have seen SEBI has put together the pilot project to prepare industry standards on SEBI regulations, circulars to ease implementation of laws. Again, something that chairperson herself took a great lead on. The forum is progressing extremely well. We have been engaged in it, and it's working on formulating standards for implementation of specific regulations and circulars based on feedback from industry and stakeholders in consultation with SEBI. Currently, work is underway on releasing the standards of the BRSR code, ESG assurance requirements, and verification of market rumors prescribed by the SEBI LODR regulations. One can go on and on about what we have seen, the difference, the way she has, the chairperson SEBI has really taken many innovative ways and really put the if I may say, a way in which discussions, understanding, and across the table coming around on matters together is something that we have seen so very well done in the recent past. So we would like to take this opportunity to have, after listening to the chairperson, a free and fair discussion with some of you involved in this panel, so that we are able to have a deeper feedback from the industry to the chairperson and take an institutionalized mechanism forward of giving feedback and understanding from her perspectives on how she is really making such a huge difference. So with that, ladies and gentlemen, I'd like to once again welcome Chairperson SEBI, and would like you to join me in warmly welcoming her in our midst on day 2, session 1. Sanjeev, may I now request you to also give the perspectives of the discussions that we have had within the Economic Affairs Council on the matters before we request the SEBI chairperson to give her statement.
Chairperson SEBI, Mrs. Madhvi Puri Buch, distinguished guests, members of the media, ladies and gentlemen. On behalf of CII, let me warmly welcome you to this session on our second day. As some of you who were not here yesterday may not know, we had 6 themes for this two-day event, and that covers tracks including economic growth, global cooperation, digital transformation, climate action, lessons from India, and gender parity. A very warm welcome to Chairperson SEBI, and I must personally thank her for taking the time out to be here. As some of you that are involved with listed companies know, the SEBI sits in Mumbai, not in Delhi, so she's made that special effort. Thank you. We are in a phase of recovery since the global pandemic hit us over 3 years ago. And we have seen that this pace has been very uncertain all around the year, or all around the world. And India is not immune, since we are very much a part of the global economy. Whether it was initially the devastation from the pandemic, thereafter fluctuations in oil prices, fluctuations in global demand, its own impact on growth in India, on inflation in India, on interest rates, it has left the world in a fragile place. However, we've all been surprised by India's resilience, especially in the last 18 months. And while I said that we are not immune, but I believe that a very strong domestic economy driven by our middle class, a significant focus from the government with public sector driven investment in capital infrastructure, significant efficiencies in the ease of doing business, a facilitative regulatory environment, all these have come together to make India the fastest growing large economy in the world, not only for the last year or two, but expected to be also for some time. We know the importance of capital markets, and the fact that our capital markets have not only been resilient, but are also reaching new highs is once again testament to the opportunity in India. And while none of us should be talking about the capital markets because the markets stay open most of the time, we also know that the capital markets play a very significant role in the development of any nation. They are a tool for small investors, large investors alike, to invest for their own future. And that's why they also require a high level of proactive regulation. SEBI, over the last few years, has been involved in this proactive regulation, supporting minority investor rights, but also facilitating industry to grow. A significant focus in recent years on data-driven decision-making, and also establishing or encouraging industry for technology-enabled solutions, and also the more recent pilot on establishing an industry standards forum, a forum which looks at newly introduced or yet to be introduced regulations, but analyzes, interprets them so that there is minimal, I would say, translation required and a much higher chance of allowing industry to comply with them. And a lot of this in the last few years has been done under the leadership of Madhaviji. So with that, may I request Madhaviji to share her thoughts with us, and she is kindly addressed after that to take some questions as well.
Very good morning to each one of you. It's a pleasure to be here with you this morning. I think every time I stand up to say something, the very first thing that I like to say is that I believe that we are a privileged generation in India. What we are seeing today in terms of the infrastructure that has been built out in the country and where that can take us is so enormous and so exciting that I wouldn't want to be anywhere else on this planet other than here today. Many foreign investors ask us that it's been said for the longest time that India has great potential. What makes you think that this time it's different? And my answer is simple: technology. Because up until now, we had, maybe 10 years ago, 5 years ago also, we had the potential. It was always there. But we didn't have the tools to actually manifest that potential. Today, with the technology that we have in place, starting with the India stack which has been built, starting with the UPI that the Reserve Bank of India has built, starting with the market stack that our market infrastructure institutions have built, we now have the ability to manifest this potential and take it to the furthest corner of our country. This is the strength on which today 99% of all PIN codes in our country are sitting in our depositories, are sitting in our mutual funds, and that's the coverage that we've been able to get because the technology allows us to make business viable, to take business to the furthest corner of the country and actually manifest that potential. So, all the more, it's a pleasure for me to be here today. When this potential manifests, it manifests also in the markets. And therefore, when we think about the strength of the market, the resilience of the market, the growth of the market, as a regulator, what is it that we believe in? What is our belief which guides every action of ours? That belief starts from saying that the markets need to have a strong foundation. Because if we want the superstructure to go really tall, then the deeper the foundation, the taller your superstructure can be. You cannot have a shallow foundation and expect to build a huge institutional framework on top of it. It simply won't withstand turbulence in the future. So creating that depth and creating the strong foundation is what the role of the regulator is, so as to facilitate that tomorrow the superstructure can be super high for each one of you to ride on. What then drives this strong foundation? The first element of this foundation is trust. And so it is incumbent on each one of us as the constituents of the market to dial up this trust. Whether it is the trust of the retail investor, whether it is the trust of the foreign investor, anybody who is giving us that capital to grow, without trust, there can be no business. And therefore, it falls on all of us together to create that trust, to co-create that trust. What is our belief about how this trust can be built? The first and most important task is for us that the risk management of the system has to be strong. If the risk starts to manifest, as it always does, whether it is external or internal, the risk will be there. But what do we have as a mechanism in the middle that the entire market does not experience a dominoes effect? The wonderful thing about the last few years, 4-5 years, has been that we've had the opportunity, along with our market infrastructure institutions, to create huge risk mitigation measures in the market. How has that happened? Whether it is in terms of moving to T+1 settlement, and many of you would be aware that we are the first large global market in the world to move to T+1. When I go to ISCO, which is the Global Forum for All Market Regulators, the most often asked question to me is, how did you manage this? And the answer is simple. It takes two things to make this happen. The first is technology, and our technology stack today in our country is unparalleled. We are better than the best in the world. It's been now acknowledged, our market stack. The second is, it takes co-creation, because when we work with the institutions and we co-create the methodology of how this will happen, it actually manifests. Because the regulator sitting in an ivory tower and trying to make regulations which finally have to be implemented in the marketplace is pointless. So unless we do everything in a spirit of co-creation, it doesn't get done. So the technology that we've used to bring T+2 to T+1 is now widely acknowledged. As was mentioned, we are now moving to optionally T+0. It will happen before the end of this financial year, and 1 year from there, instantaneous settlement, again optional. Now, what happens when we do this? The risk in the system comes down. Imagine if you had to have, if it was T+2 settlement, you were posting margin for 2 days trades. Now it's T+1, you're posting margin for 1 day's trade. So the entire efficiency of the system has suddenly doubled, because to do the same amount of trading, the amount of margin you need is half. Right? It releases efficiency into the system. Similarly, when we are going to be doing ASBA for secondary markets, most of you are very familiar with ASBA for primary markets, right? That when an investor applies for an IPO, he doesn't actually have to part with funds. The money sits in his bank account and it's blocked there, and only depending on what is allotted, that much money is taken. Meanwhile, it sits in his account. We're now moving towards, and it'll happen maybe January, maybe February, as early as that, ASBA for secondary market. So when you want to trade, you don't need to send your money to your broker. It sits in your savings account, you continue to earn 4% on it, and only when the actual trade happens and settlement has to happen, your bank account will be debited and done. So technologically and structurally, what have we done? World over, the markets are a B2B business. The exchanges and clearing corporations only talk to the clearing members. They have only visibility up to there. The technology that we have now developed is, it's become a B2B to C business. Our clearing corporations now have direct visibility and control over the last beneficial account, demat account as well as bank account, of every investor of our country. You know what that means from a risk perspective is, the world over, people assess the risk of a clearing corporation by saying, if two of the largest clearing members default, what will happen? In India, we say, oh, nothing will happen. Nothing will happen. We've mitigated the risk entirely. Why? It doesn't matter if the clearing member goes down, because we have visibility to the final investor and we can access both funds and securities. So the level of de-risking that has happened in the market is now a global first. There is no other market in the world that has achieved this. And the kind of trust that this really creates in the system, because there's no vulnerability now to intermediary default, etc., is truly inspiring. When FPIs learn of it, with large foreign investors learn of it, they're truly amazed by what is the meaning of technology and how we have deployed it. The second aspect of building trust is transparency. This is an area which, I would like to quote an anecdote from my investment banking days. I used to have many clients who used to be very irritated when I would say, SEBI wants all these risk factors, 3 pages of risk factors, and they are fretting and fuming, saying, what is this? Kya kare sir, wo SEBI maang raha hai sir. Okay. Now when a promoter would be particularly unhappy and the team was not able to convince him that, you need to give these risk factors, then they would call me and I would go and I would meet him and I said, truly, I used to say this. Sir, actually, SEBI समझता है कि ये risk factors investor के protection के लिए हैं. Sir, actually, equally, ये आपकी protection के लिए है. Because once you have disclosed, what is the implication? Nobody can claim that you have hidden a material fact which may have changed the investment decision. So in India we don't have class action suits. We don't have them. In the US this is so common. The number of listed companies that face class action suits for non-disclosure. it won't be long before public interest litigation in our country takes the form of class action suit. It won't be long. Now the question is, being transparent, whether in the IPO document or subsequently in terms of your filings with the regulator and with the exchanges, means that it protects you. It's like a vaccination for you. It's protection. Nobody can now say class action suit, public interest litigation, because you have been completely transparent in what you have said. So the beauty about transparency is it helps both people. It helps the company, it gives them protection, it helps the investor because now he's making an informed decision. And going forward with the way that artificial intelligence is evolving around the world, you can imagine the power of that engine, to be able to identify two things. One is to process what is disclosed and make it much easier for the investor to digest. And secondly, to actually identify that something has happened but you have not disclosed. That's where artificial intelligence is going to take us. So on this path forward, this transparency and disclosure as a building block of trust is critical, not just for the benefit of the investor, but for the benefit of each of the listed companies and of course people like the mutual funds, etc., who also have a lot of disclosure requirements. Fortunately, as I said, all of this is being assisted by technology. So in SEBI, we are moving quite rapidly towards doing everything using technology. So many of you would have seen ease of compliance, for instance, automated disclosure, right? The depositories automatically disclose on your behalf many of the things which are required under our SAST regulation. You don't even need to do it now. There's no need. Why should we bother 5,000 people when one depository can do it in an automated way? Similarly, you would have seen automated blocking of accounts of key management personnel. Why run the risk of inadvertent insider trading? It's just blocked, right? So our whole move is that we want to make compliance as easy as possible for all 5,000 listed companies, and the only way that can happen is through use of technology. Similarly, having a RegTech solution. Now, referring to FICCI here, but FICCI has actually put together a RegTech solution. I was amazed that because of the aggregation of demand, the cost per company to use that RegTech solution is really very reasonable. And what FICCI has done is they've already configured that RegTech system for all of SEBI regulations. So any company can just plug and play and at a very, very cost-effective rate, and you're ready to roll and comply with everything in terms of SEBI regulations. So technology we see as the key to good governance and ease of compliance both at the same time. You can achieve both. There is no trade-off here. There's no need for a trade-off here. Similarly, data. The point was raised about data-based policy making, and this has now become core to SEBI. So we do not look at any proposal unless we see whether A, the problem that is being articulated that we are trying to fix, is it real or is it imaginary in our heads? What does the data say? Is there a real problem? The second is to backtest everything that we do. So anything that comes along, and we refer to, for instance, core ESG, core BRSR. The reason we are so confident that the Standards Forum is not going to have a problem in articulating and specifying the standards is because हमने तो backtesting कर ली. So we've actually worked at the time of formulation of the regulation itself. We have done backtesting and seen, is it going to be easy, is it going to be difficult? And the backtesting actually showed us, this was a study done by the Chartered Accountants Institute, that 95% of all the data that is required for assurance is either immediately available or reasonably available with the company itself. So 5% is what they came back and said we need to do some tweak because where are we going to get this data, etc., etc. But otherwise it was really simple, the backtesting. So we believe a lot in data, and we are clear that this is very, very important for us in policy formulation, because otherwise we can go badly wrong in terms of our impact on the market. So if we do all of this, what is now the result of this? And this fine balance that we need to have between investor protection and development of the market and ease of doing business. This is an analysis of all the circulars that we've issued, 167 of them. Of course, 167 is across, not everything pertains to listed companies. I think listed companies out of this is only 5 or 6. The rest is all, exchanges, brokers, mutual funds, AIFs, everybody, PMS and so on. All together, if we take, the proportion of our circulars which are developmental and ease of doing business is almost equal to risk management and investor protection. So what the market sees as compliance is that 48%, and what the market sees as making life easier and allowing new things. So what do we mean by development? We define it in a very sharp way. Development, any circular is allowed to be put into the development bucket only if it facilitates a new product. So for the first time we are allowing, permitting, doing something for a new product, a new service, a new investor class, a new asset class, a new channel, something which up till now was banned, not permitted, etc., is now being facilitated. That's when we put it into the bucket of developmental. Ease of doing business is all the good stuff that okay, now you don't need to do this, now you don't need to do that, or you do this once in a year instead of twice a year, etc. So the balance that we strike in terms of this is now almost 50-50, as you can see. And our belief is that this number may vary from time to time, but the important thing is we are now measuring it, we are tracking it, and we are committed to it. So in some quarters, in some year it may be 44, in some years it may be 50, in some years it may be 35. But our eye is on this balance, and we are committed to it. The other thing which has been spoken about the Industry Standards Forum, and I must say, because it's difficult for you to take credit for it, so I need to give you the credit for it, is that this is something that is so important and is working. The early days, it's still early days, the traction is so positive that SEBI has gone to its own board and stated that while we are running these as pilots right now, we believe that this has the potential to become a permanent, permanent unit of the regulatory architecture. So it is our desire to make this Industry Standards Forum a permanent feature of the way in which the regulator acts. And what that means is that the forum, of course in consultation with SEBI, comes up with a bunch of standards which are very specific, and for each listed company, once that checklist is there and you say, I have done what I need to as per this standard, there is no ambiguity, there's no interpretation, there is no need for any legal opinion, you are deemed to be in compliance. So therefore, this will just make the whole process of compliance so much easier for everybody, because nobody is having to double guess what it is that you need to do, and including many of the independent directors who come and meet us, they are on large listed company boards, and they say we worry whether the company is doing it right. And so it's so important that tomorrow if your audit committee says what is the standard and are you in compliance with the standard, it's just so easy for you to stand up and say yes. So the standards will transform into deemed compliance, and that is why it is so important for us to have this forum. And it's not only for listed companies, we've had a forum like this for the longest time, almost I would say more than 5-6 years in the mutual fund industry. It's worked beautifully. We now have one for brokers and for AIFs, etc., across our market participants. But this one, where all the 3 associations came together, and it was absolutely music to our ears. They are working together in such a collaborative fashion with one voice. I know it's hard at the back to build that consensus. That's not easy. So we really, really appreciate that this is, one of the important elements of regulatory architecture that we need to bring about, on a more permanent basis. This is just, a slide that I like to use, because when we talk about technology and risk management, often people wonder whether, there's a lot of cost and so on. And I say, well, of course, people invest, MIIs invest maybe 50 crores, 70 crores. But what is the benefit? This is a per annum number of the technology-driven initiatives that are there. And as I said, the second line, ASBA for trading secondary market, which is the biggest contributor here, is going to deliver to investors 3,500 crores per annum of hard cash saving. This is not a model, this is not hypothetical, this is real money where the entire system will get the benefit of 3,500 crores on an annual basis on account of the technology initiatives that have been implemented in the capital market India stack. With all of this, if this trust has been built, is it surprising? And more importantly, the real economy, as I said, that's like you, right? That's not us, that's just you. With the strength of that real economy and everything that's been built in the markets, today if you see India's weight in the MSCI Emerging Market Index, which is one of the most widely followed indices globally for investment, India used to have a share which was 6.6%, today it is almost 16%. The BSE market cap, which was 74 lakh crores, is now 311 lakh crores in just a period of 10 years. If you look at the mutual fund AUM, asset under management, 8 lakh crores to 47 lakh crores, and I'm told I'm a little out of date here, we're probably closer to 50 lakh crores now. This is the kind of growth we are seeing. You look at the number of unique mutual fund investors, this is PAN level, so not folio level, PAN, these are unique. We now have over 4 crores of these investors who are really, contributing to this stability in the market, because even when foreign money goes out, it may be because of Fed tightening, etc., liquidity in the global markets, the resilience comes because our investors are really coming in either directly or through the mutual fund and through other domestic institutions. While the equity side has grown very beautifully, we at our end, because we want to talk about the future, what is it we believe about the future? And I've borrowed this slide from Nandan Nilekani's presentation that he made recently, where he talks about how digital capital can transform physical infrastructure in the country. Now, this is today the example he's given is for NHAI, right? For funding roads. But this is equally true for every part of our economy in terms of every element of infrastructure. It can be ports, it can be airports, it can be power, it can be roads, everything that you can think of. Our belief is, and this belief comes from a very simplistic thought, if you think of all the economic activity that happens because of the 5,000 listed companies, and you say that that is worth 300 lakh crores, we just saw that number, the market cap. Imagine the value of all the infrastructure that is there in the country and is going to be there in the country. And if all of that were to be measured through REITs and InvITs, which is one of our most, I would say, important instruments today that we are trying to grow, it can be a whole additional 300 lakh crores. Imagine in our country we can double the equivalent of market cap, double it, by simply taking what is now a highly digital capital-based infrastructure in our country, which is becoming more and more so, and transposing it into the REIT InvIT structure, and you can have REITs and InvITs which tomorrow can potentially be valued equally at 300 lakh crores. That's our sense of where India can go. Maybe it will take 15 years, 20 years. But that's the potential that we keep talking about and how it will manifest. And therefore, we have a lot of emphasis in SEBI on REITs and InvITs. And of course, as you know, in our country, REITs and InvITs are interlinked because the viability of infrastructure projects comes from the value that is created in the real estate when that infrastructure comes up. So when you build a road, the real estate around the road gets value, and therefore the two are linked. So that's the value that we see. And we think that this is the opportunity for all of us sitting here to double effectively the market cap of the country. Where are we on that today? So if we look at today, market-led capital, okay, what is it that is being raised capital from the banking system versus from the market? So if we include corporate bonds, REITs and InvITs, and we compare that to the outstanding bank credit to industry and services, today we are at about 66%. So almost 2/3 of what the banking system gives to the economy in terms of debt, 2/3 of that is actually coming from the marketplace in one form or another. And to end, where do we think this is going to go? What we're delighted with is, on a lighter vein, thanks to the immense efforts of the government and the Reserve Bank of India, the Indian sovereign bonds are now going to be part of the global indices. This is hugely important for us as a country, not only because it will help in the government raising resources, but once the Indian yield curve is established globally, on the back of that, the corporate bond market can also get a lot of traction and a lot of interest from foreign investors. And so we are hoping that down the line, it will be a case of, my name is Bond, Indian bonds. Thank you.
Thank you very much, Mrs. Bush, for that wonderful, comprehensive, and so professionally done presentation and your comments. It was of great value, and I'm sure this house is so much more enriched. I only have one comment to make, and that is, I think the SEBI chairman has essentially talked about a 360 degrees trust, 360 degrees building of trust. And I think that was a key point, a trust-based regulation. Really value that, Madam. And we look forward to working with SEBI from the Indian industry in really building upon the trust and this format of partnership that you have laid forward. Thank you very much for that. We will open it up to the floor for questions, but I must give the first right to Sanjeev, the chairman, for the first question, and compliment of what was happening behind the scene when she was speaking in the market.
No, so I think the biggest compliment, unintended, is the market has opened at an all-time high. So, great testament. Of course, I must clarify, I'm joking, because we can all get stuck in the markets. But no, great presentation, as CB said, gives us a 360-degree view. I wanted to focus on one particular aspect, which is, you talked about it as well, the focus on SEBI to really use data and technology-enabled solutions to help drive decision-making. And that brings in a significant amount of pragmatism and transparency. You gave the example of a good RegTech initiative as well. You mentioned something called FICCI. We don't know what that is. But more seriously, I think it's a great initiative. Is there a roadmap that's available or that we can work with SEBI, all industry participants, to say that, you know, these are 1, 2, 3 things next that are material and we should take up? So any thinking from your side on where SEBI is headed will be useful to us.
Absolutely. So, you know, this links back to the question of standards. So the single biggest trend in terms of regulation and regulation-related compliance that the market should expect to see is greater and greater automation. So as I said, one half of that automation will be to ease compliance, like automated disclosures, etc. The other part will be what we call SupTech. So when we do supervision, we are also going to be using technology. So we're not going to do Baba Adam style inspections and, you know, examinations anymore. So for that, what will have to happen is that there will need to be data which is there in a very standard form, and we've moved practically about, I understand, about 70%, you know, of reporting is XBRL. We will now probably need to move to more and more. I understand that we can theoretically get to about 80%, maybe not a lot more than that. So a lot more of XBRL reporting and a lot more of automated supervision. So we will be developing a lot of alerts. We already do that for a lot of our regulated entities, where the emphasis on a human being examining something is now not relevant. Instead, we deploy algorithms to do that. So say, for instance, in the context of listed companies. So our artificial intelligence will scan the environment to say that is there anything which is happening in the context of the name of a particular listed entity coming up again and again. If it is, then the question is that has there been a parallel disclosure, right? So then this will all be automated. So people need to anticipate that going forward with artificial intelligence, the need for being proactive in terms of disclosures, etc., will automatically happen, because SupTech will also use technology just as RegTech will use technology. And that is one trend, this whole technology piece. The second is this whole ease of doing business. So as far as we are concerned, you know, and I've said this on occasion before, that the fundamental role of the markets is capital formation. Everything else is incidental. So, and which is why we are so, I would say, committed to this next 300 lakh crores, because that's where additional capital formation is going to come from. So what is it that we can do to make that work for you? So for instance, we created a specially focused standing advisory committee on REITs and InvITs, and the terms of reference of that committee were completely different from what we have ever done in the past. What we said is, each subsector of the infrastructure space is unique. We have no desire to have a one-size-fits-all, because if we do a one-size-fits-all, we have to have risk mitigation across 10 different asset classes, and then guess what? It's just too tight a regulation. So we are quite happy to say, here are homogeneous sets of, you know, subsectors. Each of these needs only one or two risk mitigations. Now allow us to raise capital with just the minimum regulation. And that is the mandate given to that committee, saying come back to us, and whatever the market wants subsector by subsector, we are here to craft our regulation in response to your need. Not the other way. It's not we have made a regulation, now maybe we'll do a little tinkering based on what you say. No, no. This is very fundamental. So this is the second big theme for us going forward, that there has to be a focus on capital formation and there has to be an ease of compliance, otherwise we can't grow the economy. The third trend is really in terms of what I would call, and I would emphasize again, it's sort of linked to the second one, but the emphasis on co-creation. So if CII were to want to plan for the future in terms of how do we work with SEBI, for instance, to me it's crystal clear. The Industry Standards Forum is the way to go. And if the practitioners come, contribute their knowledge, experience, understanding to that, then the entire system can be such that you get both. You get good governance and you get low cost. So that co-creation aspect is really very important, and that's what I would request CII to really invest in and work very closely with us.
Thank you. CB?
No, thanks, and we shall actually work in that direction. Not comment anything at that point in time, because ma'am, we've spoke just before you came in, and you've given us some great ideas when we were speaking to you earlier and just now. We will create that capacity within our institutions to see to it that we are able to have that quality interface with your institution. We talked about enterprise, we talked about startups, we talked about how they have been growing some time back, and some of them are amazing stories. And I want Kunal Bahel, the co-founder of Ace Vector. Kunal, would you like to go ahead?
Good morning. And Madam Chairperson, your discussion on technology was music to my ears as a technology entrepreneur and investor myself. You know, time is money, and I think you've mentioned this in your talk also. In this fast-paced world of new age startups, many of whom are looking to access public markets, and I feel our public markets will have hundreds of them in the coming years. What would be your advice so that they can get faster approvals and thereafter have lives as successful public listed companies in India?
So that's a double-barrel question, so let me attempt to answer. So on speed of approvals, I would say that we had a lot of work to do internally in SEBI, which we have done over the last, I think we've tracked the last 6 quarters or 7 quarters. You know that typically in a government institution, accountability typically is how long did you take after receipt of last information. So that gives a government officer, SEBI officer, a lot of leeway to say, oh, my clock is ticking, it's almost time, let me ask one more question, and then I get a reset. It's very convenient, right? Now, what we have done internally in SEBI is we've changed. We said, your performance appraisal, forget what is legally required. Legally, that continues to be required. That's how all government things are. But for your performance appraisal, you will be judged based on date of first application. So if the application is incomplete, feel free, return it and say this is an incomplete application. But if it is complete, your clock starts from there. And now, you know, I don't have that slide with me, but we track this on a quarterly basis, and the chart is truly amazing. I mean, this is one thing that I really give a lot of kudos to the SEBI team. The pendency is coming down, and more importantly, pendency in itself is not bad. If a lot of IPOs come, pendency is good. But the aging, the reduction in aging is dramatic. And in fact, I recently took stock on the IPO side, and I saw three items which were still more than 3 months. Because now in SEBI, anything more than 3 months means it's a crime. I mean, chairman's office is going to call and you will be hauled over the coals. Why is this pending more than 3 months from date of first application? And when I asked why is it pending, and then we had a discussion that when there is either a judicial intervention or a pendency due to another regulator's NOC not coming, then, you know, unnecessarily in that sense it shows up as our pendency. So we've actually said, why don't we move into an in principle approval or a subject to approval, conditional approval, कि हमने अपनी तरफ से देख लिया, we are absolutely fine with it. Now something is pending from another regulator or something, so subject to that you're good to go. So that is the level of focus that we have on saying that if a company needs to come with an IPO and the timing is right, we can't let them lose that opportunity. So the aging today is really very good. So from our side, I think we've done a lot to bring down that aging. There used to be a time it used to be like 1 year, 2 year pendency. That's all history now. But from the issuer's point of view, and this is another area where industry standards can help. We have asked the industry to say, you give us sector-wise, saying these are the standard risk factors, etc., and standard disclosures which are relevant sector by sector. And we've identified some 10 or 12 sectors. What that then means is, if you belong to that sector, you know exactly what SEBI is going to ask, because over the last 20 years, that list is there. So we've told, I think, the Association of Investment Bankers, if I'm not mistaken, that we've already, you have this whole database, कि SEBI normally क्या पूछता है? तो why are you waiting for us to read the document and ask you? आप पहले ही कर दें, हम वही सवाल पूछते हैं. We don't invent anything new, वही के वही सवाल आते हैं. So that association, once they come up with this, I expect that I can start monitoring 1-month-old cases and not 3-month-old cases. But that requires the work from the Association of Investment Bankers.
Thank you. Lots of hands I can see. I'll try to do first come, first serve basis for a few. Nitin Shukla, who's been heading listed companies and now independent directors in many companies. Nitin? Yeah, there's a mic.
First and foremost, compliments, because regulator has such an important role to play when we are moving from a controlled economy, so to say, to a market-driven economy, and compliments for that. By and large, human beings' actions are influenced by what they say, bhiti and moh, lalach and dar. To answer that, the checks and balances are in place to ensure that it does not happen. Having said that, there are always, whether the checks and balances are perfect or there are too perfect so that hardly anything moves. These are two contradicting or conflicting requirements. How do you manage that, madam?
So you're very right. Again, I will take you back. Fortunately, I come from where you come. So I still remember when I was on your side of the table, so to speak, I once was addressing the audit committee of my company, and they were asking me to tighten controls. And I said to them, very easy for me. I can tighten these controls completely. But you know what? Then I'll be building a Fort Knox and even customers won't be able to come in. Right? So I come with that orientation that there is something called risk-based regulation that is required. And depending on the risk, you have to have suitable regulation. So if you see, almost everything that we do is actually risk-based. So in respect of listed companies, for instance, if you're a relatively smaller company, the compliance requirements are much lower. The top 100, 150, 250 companies have many more compliances because their impact on the market is much larger. If there is some major blow up there, the impact and the number of retail investors it affects and the global sentiment it affects is much larger. So in listed companies also it is risk-based. Whether it is in terms of asset classes, mutual funds get retail money, so they are more tightly regulated. PMS, minimum entry is 50 lakhs, so it's less tightly regulated. AIFs, minimum entry is 1 crore, it's much less regulated. So everything that we do from a risk-based perspective so that you are not impinging on the ability to actually keep running your business. Now, having said that, I would like to underline one thing because, this is sometimes something which is not commonly understood. For listed companies, we are not like a sectoral regulator. So, let's say SEBI regulating a stock exchange or RBI regulating a bank, you're a sectoral regulator, right? So, you tell your regulated entity what you can do, what you cannot do. That's not the case with a listed company. If you see, every regulation that SEBI has qua listed companies falls into only two buckets. Please disclose the following things and please take the following decisions to the following committees. Just think about it. We never interfere in your business. We never tell you what to do, what not to do. The way that we, let's say, tell a mutual fund or RBI tells the banks, we never tell you what to do or what not to do. That is entirely your business. We only tell you these two things. Please disclose the following things and please take the following things to the following committees for approval. So to that extent, I think the more that this gets standardized, it will just get easier for everybody, and it should just be like, it should just be something which does not even come to the attention of a CEO because it's just so streamlined that it has to be done. It's done, nothing to be done. That's where we would hope it would go to.
Thank you. Janmay? Dr. Janmay Sinha.
Thank you for a really clear exposition of SEBI's focus. It was really refreshing, and the two factors that I will say that really struck me were the collaborative view, and your slide on showing where the circulars are being issued was something I think all regulators should be forced to do. So congratulations. Just as people saw that you were going to be here, some of my clients have sent me a question to ask you. So if you don't like it, don't blame me. The random allotment system for IPO and the retail and HNI system needs to be understood better, and why was the pro rata formulation stopped? Some of my iBanking clients are asking me to ask you.
Certainly, I have a very simple answer. The level of oversubscription in IPOs, to our mind, was getting inflated because of the pro rata mechanism. So if somebody wants 100 shares, the investment banker, like I was and I did, I would go to my client and say, I expect this issue to be oversubscribed 20 times. So if you want 100, actually apply for 2,000. Okay? Now, as a result of this, the price discovery mechanism was being corrupted because it was appearing as though I want 2,000 shares. Actually, I don't want 2,000 shares. I only want 100 shares. Right? And this process was leading to a certain unnatural, I'm trying to find a politically correct word for it, an unnatural price discovery. See, we have always said that SEBI will never sit in judgment of what is the price of an IPO. The market will decide based on demand and supply. That is how prices are discovered in a free market. But if your demand is being inflated because of this, the way in which allotment is done, so our regulations were encouraging that a person who actually wants 100 shares is putting in an application of 2,000. Okay? And on top of that, this was also resulting, of course, in a lot of leverage. And so you may have noticed that the Reserve Bank of India also issued a circular in terms of funding of IPOs, etc. So this was a phenomenon happening in the market which was not healthy. And therefore the question is that what is it that you need? This is the way, the new formulation. And by the way, for retail investors and to a certain extent HNIs, on the very next day or the next day or the next day, there's enough liquidity in the market. See, what I don't understand is if somebody is just putting a punt, saying I expect this to pop and become double time, then you're not an investor, you're a speculator, right? So then, boss, it's, it can go either way. But if you are actually an investor in that stock and you think it has long-term this thing and you want to hold that stock, please buy it on the 3rd day, 5th day, after 1 month, after 3 months. Right? Institutions can't do that because they need big blocks and they move the market. But you and I, with our kind of money, we can easily do it. So we were trying to correct a mechanism which was unhealthy in terms of inflating giving an impression of much higher demand than there actually was.
And I think we have over short time. If you allow, may I take one more? Bharat Joshi. Yeah, there's a mic on the right.
Thank you very much, CB. Ma'am, thank you for a very articulate explanation of how you're using technology. We're in the logistics business, and the way we see it, we saw all those J-curves of how the markets are rising. So we see that. We also see the way the Indian economy is rising. Now, for firms like us, this is an unprecedented opportunity, and one that will require capital to fuel our growth and the way we can support other companies. Now, how do you think we could access primary markets, and what is SEBI doing to promote this? Thank you.
So, as I said, that capital can come in any of these 3 forms, equity, debt or hybrids. Our belief is that on equity, the market is quite mature. So, we've not received any feedback to say that we are not able to raise capital because of this part of your regulation. We've not received any feedback. If we do, we are very happy to look at it. We've received a lot of feedback on saying for development of the bond market and the hybrids market, this is what we would like the regulator to do. So I think our focus on facilitating that is there, because that market needs to be bigger and better. But really on the equity side, it's the way we see it, it's really demand and supply. When valuations are sensible and there is demand. IPOs happen when expectations are unreasonable on either side, either on the side of the investors or the promoters. Transactions don't happen. So we don't see much role for ourselves over there, to be honest.
We are really running out of time. We have Secretary DFS, Secretary Labor, Additional Secretary Logistics, all here for the session next, and we have actually borrowed extra time from her. So I'll hand over to Sanjeev to wrap this session up.
Well, actually, there isn't much to wrap up. We've seen very clear articulation of SEBI, direction in which SEBI is headed, the transparency, the pragmatism that data will drive, the collaborative efforts that the chairperson has not just talked about, but has already started. And with industry associations, we know what we are doing to support it going forward. So thank you once again for making time out to be here with us today.
Thank you.
Thank you. Thank you very much. Thank you.
With that wonderful session, ladies and gentlemen, we will move on to our next session, which is, as you have heard, that it is a special session with our Secretaries to Government of India, who will be addressing us, and we will just take a few minutes to make the necessary table arrangements. Kindly bear with us. Joshi, Aarti Ahuja, and then Sumita. So is last. Yeah. Ladies and gentlemen, an extremely warm welcome to our plenary session 10. And this is on the panel of secretaries to Government of India. The panel of secretaries to Government of India on strategizing India's prosperity, next-gen reforms. Ladies and gentlemen, may I request you all to please join me in inviting as well as welcoming our eminent speakers for this session. May I firstly invite Mr. Vivek Joshi, Secretary, the Department of Financial Services, Ministry of Finance, Government of India. May I request him to kindly join us. Ms. Aarti Ahuja, Secretary, Ministry of Labour and Employment, Government of India. Ms. Sumitra Daura, Secretary, Logistics, Department of Promotion of Industrial and Internal Trade, Ministry of Commerce, Government of India. May I please request them to kindly join us on stage. And also joining them is Mr. Sanjeev Bajaj, past President of CII and Chairman of CII Economic Affairs Council. Mr. Vivek Joshi, Ms. Aarti Ahuja, Ms. Sumita Daura, and Mr. Sanjeev Bajaj. Ladies and gentlemen, may I request you to please welcome them. India has emerged as the fastest growing major economy post-COVID, and in part because of his continued focus on reforms to unlock the economy's potential. The reform process should continue for India to become a prosperous and developed nation. What the next reforms should India prioritize over the medium terms, and how can consensus be built on some of the more difficult reforms? These are some of the key topics that will be deliberated upon by our experts. And with these words, I would like to now request Mr. Sanjeev Bajaj, over to you.
Shri Vivek Joshi, Ms. Aarti Ahuja, Ms. Sumita Daura, ladies, gentlemen, friends from the media. We have a great opportunity today to speak in this session on strategizing India's prosperity for the next-gen reforms. Let me start by welcoming Shri Joshi, Secretary, Department of Financial Services, who is leading the current pace of reforms and those for the next generation. Under his guidance, we look forward to seeing a lot more innovative, timely reforms that will come in to guide the industry and the economy going forward. I'm also very happy to welcome Ms. Ahuja, our Secretary for Labour and Employment. She is very well known for her reformist approach to her work areas, and we very much look forward to significant benefit from that, especially in the operationalization of the 4 labor codes. Her concern for many issues around whether it's industrial safety standards, its role in safeguarding India's trajectory towards becoming the 3rd largest economy are always welcome. Finally, I'd like to welcome Ms. Daura, the Special Secretary for Logistics, Department of Promotion of Industry and Internal Trade, Ministry of Commerce and Industry. She has held numerous positions across various government roles, and her practical policies and her very supportive nature to CII has always been very well appreciated and a big support to all of us. Friends, over the last few years, we have seen the global economy going through its own turmoil, starting with the pandemic, its impact on supply chains, oil prices affecting countries like India more than others, the inflationary environment as a result of that, public health, which in the early part of the pandemic was a big challenge. And as a result of this, significant uncertainty came up around the world. And yet, our own economy has shown a very high level of resilience. And there are many reasons for it, but one of this has been a very proactive approach by the government in ensuring not only stability, but continued growth. And a very significant collaborative approach, I must say, with industry and with an association like CII. However, we cannot rest on our laurels, and we have to keep doing more. And I have a few suggestions on reforms to make to this esteemed dais. One, we need to continue to focus on building quality infrastructure. And what would be useful for us as industry is to have a longer-term roadmap from the government. If there is a guide path, say for the next 15, 20, 25 years, it helps all of us align towards that objective. Second, there are possibilities for raising additional resources from tax collections, even if in a slowing economy, by broadening the tax base. According to the 15th Finance Commission's estimates, there is over a 4% gap in our tax to GDP ratio, and that's the potential between the potential of collection and actual collections. We believe that the government should aim to reach to 16% tax to GDP ratio over the medium term from around 12%, and we know that 4% can play a very significant role in our growth. Third, once again, to unlock capital, the government should come up with a 3-year pipeline for divestment, and identified public sector enterprises should be transferred to DPAM so that they can then go ahead and go through the process of divestment. We would also request the government to expedite with the divestment of the 2 pre-identified public sector banks. The fourth area is a continued focus on ease of doing business. And I must admit, as an industry participant, there is a significant amount of work over the years that we have seen the government do. But this is a never-ending task, and that's where, along with industry, we look forward to greater ease of doing business. The next is to rationalize many costs, and this is to reduce the cost of doing business. And one prime cost is that of power, that many of us who are there, especially in manufacturing industries, know. What can we do for greater power sector reforms to reduce, for example, the cross-subsidization of power that industry does to consumers, or distribution reforms to reduce distribution losses, improving the quality of power, and bringing all fuel and electricity duty under GST. The next 6 is the need for creating avenues for the bottom of the pyramid to remain gainfully engaged. We think operationalization of the 4 labor codes is overdue and can play a significant role in greater inclusion. 7 is challenges around sustainability and climate change. These need to be linked along with the development process. And that's a responsibility not just for government. Indeed, it's a greater responsibility on each one of us to ensure that we balance the impact on climate with development of our own businesses. We believe that the G20 presidency of India has set a great opportunity for India to show for the world and for itself how this can be done. And finally, a strategy or a plan to make growth even more inclusive and empowering to all is required to ensure macroeconomic resilience and stability. Hence, it is desirable for a greater impetus, a greater focus of public investment in health and in education. I'm sure there can be many more suggestions, and based on the time today, we hopefully have time for some questions as well. With that, may I now request Shri Vivek Joshi to share his views.
Thank you, Sanjeev ji, and a very good morning to the secretaries who are present here, distinguished dignitaries and other speakers and all the participants who are attending this event. I am truly delighted to attend CII's Global Economic Policy Forum 2023 and to speak on the subject of strategizing India's prosperity for the next generation reforms. And I would focus mainly on the financial sector reforms, which are instrumental in ensuring the stability of the financial system, economic growth, and development of our nation. In the rapidly evolving financial services industry, reforms are also essential to keep pace with the technological advancements. I would first focus on the evolution of banking and digital landscape in India. During the last 10 years, the direction of banking reforms at the industry level included de-risking through new institutional arrangements for asset recovery through prudential framework for resolution of stressed assets, which was introduced in 2019, then merger of public sector banks, ease of reforms for PSBs, recapitalization of PSBs, and enactment of IBC code in 2016. Other reforms included digitalization, infrastructure financing, customer centricity, financial inclusion, Ease Next, a comprehensive program with individual bank-specific 3-year roadmaps were made in consultation with the government for the public sector banks. The entire strategy is based on whole of the government approach driven by the innovations and cutting-edge technology. With the objective for India to emerge as a fintech nation, the government has launched many flagship schemes such as Digital India Mission, Make in India, etc. Greater emphasis have been given on the creation of digital public infrastructure, DPIs as we know, Aadhaar, eKYC, AEPS, UPI, Bharat QR, account aggregator, etc. These DPIs can be utilized on shared basis by different private players for ensuring optimum outcomes. DPI is the USP of India's inclusive growth and has been instrumental in bringing transparency, scale of operations, and timely delivery of financial services to the public. Major steps have been taken to improve credit share and flow of credits to the MSMEs, such as Mudra loans, coverage of MSME loans under specialized credit guarantee schemes like CGTMSE and ECGLS, launch of TREDS platform for meeting the working capital requirement of MSMEs. Coming to the digital landscape, digital payments have significantly increased over the last few years as a result of coordinated efforts of the government with all the stakeholders. The total digital payment transactions increased from 2,071 crore in FY18 to 13,400 crores in FY23. In October this year, UPI-based payments have crossed around 11 billion plus transactions with a net transaction value of 17.15 trillion rupees. Besides, UPI has also gone global and UPI QR codes acceptance is live in Bhutan, Singapore, UAE and many other countries. GEM Trinity is a culmination of technology, collaboration and innovation, which is now globally acclaimed as a diversion-proof subsidy delivery mechanism implemented through DBT mode in India. PMJDY, which is the main pillar for financial inclusion in India, radically transformed the lives of millions of Indians. It has changed the financial landscape of the country. As a part of the FI-led interventions, the financial ecosystem has evolved in the country over time, has followed a sequential pattern wherein a large section of society has moved from an informal to a formal financial system, which followed the adoption of digital mode of payments in a calibrated manner. Cyber security and digital data protections are another area of concern. Digital payments and digital financial frauds are increasing side by side and thereby throws a lot of new challenges every day. The expenditure on cyber security arrangements needs to be enhanced by all stakeholders. Further, all the relevant entities need to be prepared to protect and secure digital personal data of their clients as per the stipulated regulatory norms laid down under the Digital Personal Data Protection Act 2023. Talking about vision for 2047, the government has set its vision for the Amrit Kal. These include vision for a prosperous society, robust financial services sector, strong public finances, and economic sovereignty. These aims at achieving significant milestones, including higher economic growth, increasing per capita income, job creation, infrastructure development, and enhanced social security framework by country's 100th independence anniversary in 2047. We aspire to increase our per capita income greater than global averages. Per capita income of India is to reach to a level where it should meet the criteria of high income as defined by the World Bank. A strong public finances and a robust government finance is also envisaged, wherein the combined debt of central and state government to the overall GDP will be lesser than or equal to 50%. The central government debt service cost will be equal to or less than 10% or 11% of the revenues, which is currently 42%. In the context of robust financial services, it is imperative that in 2047, India will have a highly competitive, viable banking sector with substantial Indian ownership, universal access to banking and other financial services for all our citizens. Lowest intermediation costs, that is the difference between the interest rate on deposits and loans from 5.6% at present to less than 3% in 2047. That is, the objective is to reach somewhere nearer the global industry benchmark. An efficient and quick access to credit and equity funding for small businesses with bank credit to private non-financial sector from 55% at present to 130% in 2047. This is somewhere nearer to global or OECD average. We also aspire to have highly liquid, efficient and well-regulated stock, bond and commodity markets. We also aspire that Mumbai and GIFT City together to be the second and the third largest global financial centers. India's financial sector need to support capital formation, promotion of trade and business, investment in MSMEs, enabling them to scale India's modern, competitive, inclusive and digital banking system needs to facilitate the economic development while having much larger numbers and size of the banks. India's data-driven financial services system, fueled by the open architecture of the technology stack, needs to become a model for the world. There is a need for us to further deepen our capital markets with active participation from diversified investors. India's financial system needs to provide much needed insurance protection and retirement security for all the Indians. By 2047, Atmanirbhar Bharat should be achieved in its entirety, wherein there is policy autonomy and low vulnerability to the country's economic system to external shocks, both political and financial. A strong balance of payments coupled with ample and well-diversified reserves to cover imports and debt servicing with large margins of safety and low external debt should be our target. Further, global Indian banks with a footprint extending across continents hold immense significance for India's economic prowess and international influence. Such banks may serve as a conduit for foreign investments into India, fostering innovation, creating jobs, and contributing to the overall development. Participation in global financial arena exposes the banks to cutting-edge technologies, catalyzing innovations within Indian banking sector and influencing the broader financial ecosystem. Now let me come to the roadmap to achieve this vision for a prosperous society. To exceed global average per capita GDP by 2047, real GDP growth rate will have to be on an average around 7 to 7.5% per annum over a quarter of century, starting at 8% for the first decade. The above growth must be equitable and employment generating growth, wherein requirement of adequate level of resources and efficient utilization of those resources are imperative. This indeed requires domestic savings to be at 31% of GDP, with India to be an attractive destination for FDIs. As far as roadmap for robust financial services is concerned, it is a fact that the countries with higher domestic credit to private sector in percentage terms tend to have higher per capita income. Private credit for India needs to be stepped up to catch up with its peer group. Calibrated increase in credit to GDP ratio is indeed a need of the hour, while maintaining credit quality for the banks. Bank credit to private non-financial sector is projected to increase from 55% currently to 130%. In short term, I envisage that we continue governance reforms in public sector banks and expand access through ongoing schemes. We must also increase the penetration of our account aggregator system. The next big step in the coming years is towards AI and ML, decentralized financing, central bank digital currency, Internet of Things, which have a large potential to disrupt the digital payments ecosystem. Further, India should evolve as a fintech nation with highest number of fintechs, highest fintech adoption rates by incumbents, fueled by digital public infrastructure. An approach should be evolved to common user data across regulators, a consultative process on regulations and compliance requirement to identify possibilities for simplifications of KYC requirements are also being initiated. In the medium term, we must move towards data-based lending instead of judgment-based lending, especially for small businesses, unification of credit guarantee schemes of different ministries should be focused with facilitation for digital banking and fintech from regulators. In this direction, we have already operationalized intertransferability of funds among the existing credit guarantee schemes. Further, there is a need for continuous review to identify regulatory gaps and overlaps and benchmark them with the best global practices. In conclusion, India is certainly moving steadily towards achieving the vision of Amrit Kal by 2047. The agenda and the objectives set forth by CII Global Economic Forum, Policy Forum are ambitious and quite far-reaching. The need for global collaboration is undeniable as factors which are affecting the economy of a nation transcends the boundaries. The future holds promises driven by responsive policy making, adaptable regulations, integrated digital ecosystem, AI, financial inclusion, sustainability, and fruitful collaboration between traditional institutions and startups. This forum stands as a platform to catalyze these advancements, contributing to the inclusive exponential growth of the nations. I convey my best wishes to CII, organizers, and all the participants for the success of this event. Thank you very much.
Thank you, Vivek ji.
Thank you very much. It's not an adjustment, it's just a great pleasure and honor that someone who is, I don't know how many jobs he is juggling with and how many fires he is juggling with, that he could still find time. He was to be with us last evening. He never regretted. He always said that I'll find time to come. I'll definitely come. And you know the Parliament is on. But it's a great pleasure and honor to welcome Shri Piyush Goyal, our Honorable Minister for Commerce, Industry, Textiles, Consumer Affairs and Food and Public Distribution. Ladies and gentlemen, please join me in very warmly welcoming Honorable Minister.
Thank you, CB, Sanjeev, Aarti ji, Sumita ji, all the distinguished captains of industry from India and across the world, ladies and gentlemen. My sincerest apologies to both my colleagues in the government for barging in into their session unannounced, unexpected, and I'm doing the cardinal sin of breaking the rule of ladies first. I just hope I don't live to regret that. But I'm really running on a very tight schedule and I'm in between the Parliament's morning 11 to 12 session and 12 o'clock I have question hour. So the good news for you is I won't take more than 10-12 minutes. But I just saw the program and I was immensely impressed with the quality of debate, the subjects that have been selected, and with the wide span of thoughts that are going to be engaging all of you during this two-day interaction. The purpose of calling for this was to know what am I supposed to talk on. I really wanted to know what is expected of me. And I'm happy that they've chosen India's roadmap for exports for me to delve a little bit on. And the question posed to me is, what will it take for India to reach $2 trillion of exports, which we have declared as our stated objective until 2030. Last year we were at $776 billion. Of course, that was after 2 years of scorching growth. We grew from 494 or $500 billion to 776 in the span of 24 months. 55% growth in 24 months. That is, of course, out of the ordinary, and I don't think we can expect to repeat that every year. But even if we stay the course at about 15-16% growth, we can comfortably aspire to be a $2 trillion export economy by 2030. We are facing challenges, the world is facing challenges. We embarked on this mission on 6th August 2021 when the Honorable Prime Minister gave this clarion call to Indian industry to pull up their socks, be competitive, go with self-confidence, engage with the world from a position of strength, provide quality and cost-competitive products, and capture world markets, both in goods and services. And I still recall the 6th August address where he interacted with some of our leading luminaries from the business world, some of our mission heads across the world, and committed the full force of the government behind you to make this happen. Today, every mission of India across the world has a mandate that they will have to focus on trade, tourism and technology, and it has become a part of their KPIs. Their performance is being evaluated to see how much they have impacted India's trade and tourism. And I am delighted that the response across the world from our missions has been phenomenal. They now handhold Indian businessmen. They now take the message of India to businesses across the world. They identify opportunities for Indian businesses to expand their operations. And our businessmen have truly done us proud with their good work. They are truly going global. And towards that end, we have a significant interface between government and businesses. We meet once every month between the government, industry associations, and all the export promotion councils. Engage, exchange notes, take ideas, learn from each other's experiences, make policy changes wherever required, and swiftly. And I have the confidence that India can do this on the back of a few very compelling situations that we have been able to achieve in the last 9.5 years. On the one hand, we are all aware how the Indian economy has transformed from a fragile 5 to the top 5. Another 3-4 years, as Prime Minister said in his third term, we hope to be the third largest in the world. But our aspiration comes on the back of strong macroeconomic fundamentals that we have been able to develop, strengthening the foundations of India's economy. We have also been successful in creating an aspirational society. 1.4 billion Indians today, with their daily needs taken care of, with the empowerment that comes from all the daily needs of food, clothing, shelter, healthcare, education, digital connectivity, good infrastructure, electricity, with water, with these basic needs taken care of, addressed. We have now a young Indian, boy and girl, who engages with the world, who's looking at what's happening across the world on their smartphone, with 930 million Indians who are connected to the internet. They know what's happening in New York. They see what's going on in Sydney or in Tokyo. They see how Singapore and Dubai have transformed in the last few decades. And that aspirational India drives our population, our people, our young population to aspire for the good things of life. We as government work to enable them through ease of doing business, working towards ease of living, working towards reducing compliance burden, decriminalizing laws, trying to create a corruption-free business atmosphere, reducing processes, procedures, simplifying them continuously, and learning from your experiences, working towards a partnership between government and business to make this happen. On the third element, we have also invested significantly through government and private sector investments to develop robust infrastructure to take care of the needs of India. Investments in infrastructure at an all-time high, both by government, state governments and center both, and the private sector. And this will hold us in good stead in terms of lower logistics costs, on which Sumita ji will throw more light, in terms of engaging with the world on, let's say, expanding our food exports, on which I hope Aarti ji also can throw some light, and going to the world on the back of a large Indian market which provides scale to our operations, whether it's manufacturing, provision of services. The domestic market gives us an opportunity to work at scale. And I think the fundamentals that will enable us to reach in the first stage the 2 trillion target by 2030, but aspirationally to add $30 trillion to India's economy in the next 24 years now, moving from a $3.5 trillion to $35 trillion GDP by 2047, making us a developed nation, taking prosperity to the last man at the bottom of the pyramid. The journey is going to be defined on the back of economies of scale, quality consciousness, cost competitiveness, and self-confidence. Today we engage with the world from a position of strength. It's a resurgent India. It's an India that is not meek. It's an India that goes to the world and engages on equal terms. It's an India that's focusing on quality, so that the old days where we were struggling with quality, we were struggling to get our goods and services accepted, that's in the past. That's a part of the colonial mindset that we want to shed off. Today's India, today's young entrepreneur or startup works with the confidence that he can better the best. Today's India engages at scale in whatever activity we do. The Indian domestic market itself is so big that it helps us enjoy the benefits of economies of scale and therefore become cost competitive around the world. Today's India is an India which is engaging with the world for more and more trading relationships with developed countries, with developed markets, with economies which have the rule of law and transparent trading systems. And given the focus of the government and the private sector and businesses working together as a team, I have absolutely no hesitation in reiterating that India will be a $35 trillion economy by 2047. The first path or the first milestone that we will achieve would be around 27, maybe 28, when we become the world's third largest economy, by when we also hope to cross the $1 trillion export. And by 2030, I have the courage of conviction and the confidence to reiterate that we shall be a $2 trillion export country. We shall be taking India to the world, going global with high quality, cost competitive products. Sustainability will be at the core of our manufacturing and service practices. We'll also be looking at expanding manifold in areas like tourism, in technology, in innovation, which will help us add to our economy. We'll be looking at saving our foreign exchange through greater adoption of electric mobility. And imagine if we can bring down the oil imports in the country. Just think of an India not dependent on oil imports. It can totally transform India's future Future is bright, but as they say, as you cross one hill, you only realize you have many more hills to conquer ahead of you. And that's the journey that we have embarked on. I'm sure all of you are together with us on this journey. I'm sure that working as a team, working as partners for the progress and prosperity of 1.4 billion Indians, a young aspirational India, a young India who has big ambitions, big missions, and a vision for the country. Together, no downside risks, no challenges, no crisis can deter India. We'll find solutions to every challenge that the world may face, to every challenge that India may face. If we are all in it together, if we all go from a position of confidence, self-confidence, and a confident nation engaging with the world from a position of strength. My best wishes to all of you. I thank CII for organizing the Global Economic Policy Forum, truly an engaging platform which we would like to institutionalize in the years to come. I hope you enjoyed the Bharat Mandapam. Many of you may be visiting this for the first time. This is New India. This is reflective of what we wish to see in India. This is how India is going to offer itself to the rest of the world. And over the next few months, Bharat Mandapam and Yashobhumi, two large exhibition and conference centers, will be hosting many conferences and exhibitions to showcase to the world our strengths. Early in January, we have the handloom, handicraft and handmade sectors presenting the India story to the world. Later, we'll have a large food exhibition. It's at Greater Noida, but possibly we may add some elements at Bharat Mandapam. Then we have Auto Mechanica, I think a large automobile showcasing to the world of India's strengths. Later we have a gem and jewelry show in Mumbai, again one of the largest in the world. 26 to 29 February, the textile industry is going to have the world's largest textile fair, spread over 2 million square feet. 2 million square feet, both at Bharat Mandapam and Yashobhumi. So India is going to offer itself and what we can provide to the world at scale. I invite all of you to be a part of all these various engagements which will continue well into the next few years so that India starts hosting world level and world quality conferences in the future. These will also spur the offerings that India has and help us take India and the various industry segments and service segments where we have strength. In between, we also have a startup Mahakumbh, about which I forgot. We have a startup Mahakumbh where about 1,000 prominent startups are going to showcase India's strengths. And finally, we are going to go forward, possibly into a large investment summit. So all the best to the conference, all the best to CII, and I seek your indulgence to leave to get back to Parliament as my orders have come. Thank you very much.
Thank you, Piyush ji. Thank you for that very encouraging and supportive speech, because when he talks of 1 trillion and 2 trillion of exports, that's exports from Indian industry, and that's what is encouraging. With that, let me now request Aarti ji for her comments.
Thank you. I have a very hard act to follow. I'll try and keep it interesting for you. Globally, so our topic is strategizing for global prosperity amongst polycrisis. So let me talk about 3 global trends and how they are impacting us and what are we doing for that. I could talk of many more, but I'm focusing on 3 in the interest of brevity. Otherwise, with a captive audience, I could go on and on. So, in the 3 trends, I'll focus on what's happened in the last decade or 2 decades and what's the current impact globally. The first is the demographic change, aging. In 2015, when the wages were depressed globally, China had a huge working age population, and that also led to depression of wages in US and elsewhere. Today, world over, there is a scarcity of labor. I'm only talking in context of labor and employment, by the way. So today there is a scarcity of labor world over. And how does that translate into the labor markets and the employment scenario? Number one, the care economy, especially geriatric care, nursing, is growing. There is a stress on government finances due to a greater need of social security. The population needing social security is larger than the population contributing in many countries. There are instances where because of a shortage of workforce, governments are cutting down on services. We have the example of Germany where they can't find drivers and conductors and have cut down on public transport. And interestingly, wages of what we call low skilled or semi-skilled workers are going up. The need for plumbers, the need for carpenters, etc. is going up, and there are not enough skilled people out there. Across the world, wages are going up. The second big trend is, of course, we've been talking about it, and that is AI. From 1980 to 2010, nearly half of all employment came from creation of new kinds of jobs. Not more jobs in existing industries or sectors, but creation of entirely new jobs. We are talking of 2010. Today in 2023, that is even more. New kinds of jobs are being created which didn't exist. I mean, who had heard of a YouTube influencer, for example? New type of jobs are coming up. And old jobs are going because of AI. The whole Hollywood strike of 4 or 5 months was because AI started competing with human beings. But all is not bad about AI. AI has also contributed. There have been studies that, for example, call center workers, when they work with a chatbot, their productivity goes up by almost 15%. I was in health earlier, so we have doctors who can diagnose, AI can diagnose chest x-rays and tell doctors whether it is TB or it is something else, and it helps the doctors, it increases their productivity. So AI can be harnessed positively. The third major trend, which often we don't talk about, but which as Labour and Employment Secretary I feel is a strong trend, that is something called decent work in global value chains. This is something that is coming, it is already there, and it is going to assume bigger and bigger proportions in the years to come. Many Western countries have already passed legislation about decent work. These are technical terms, well defined. Decent work in global value chains. ILO has it as a fundamental principle, which means all countries are bound by it. In all the FTAs or the multilateral agreements or the regional agreements that are now coming up, there are chapters on labor and environment, which was not there earlier. So what is happening? What does it mean? It means that trade and labor rights, labor welfare, environment are getting inextricably linked. Already we have instances in other countries like South Korea, for example, and their automobile sector, which suffered or faced the consequences. I don't know what's the right word for that, but their automobile industry took a hit because of the invocation of the decent work issue. So we need to be very careful about the global value chains and decent work at each stage of that chain. Our specific topic for the three secretaries here is strategizing India's prosperity. What is it that we are looking at in the context of these mega trends? What are we looking at? How can we leverage the opportunities? How can we deal with the threats? Now, again, let me go to data. The latest PLFS survey came out just a couple of days back. And what does it show? It shows that the unemployment, which was about 6% in 2017-18, today the unemployment rate is 3%, which is equivalent to many Western countries. And as any macroeconomist will tell you that there is a normal unemployment rate in any economy because people are moving from one job to the other, or they drop out of job market for various reasons, like women drop out when they get married or they have children or whatever. So there's always going to be a little bit of unemployment. So 3% unemployment is a good sign. In that context, I am going to talk of 5 things and tell you how is it that we are looking at, and collectively, all of us need to look at the next level of reform. The first issue that we need to understand is we need to understand what jobs are being created, not just globally, but within our country. We need to understand that quickly, and then our workforce has to be agile enough to fill those jobs. What do we need to do? And what are we doing for that? I was the chair of the employment working group of the G20. And as part of that, we have resolved that we'll have a global skill gap mapping. ILO has been tasked with that. And the second thing that we have resolved is that we need to have a common taxonomy of jobs and skills. All of you who are in the manufacturing sector know about HSN codes. You understand that this code means the same the world over. Do you have the same taxonomy for skills or jobs? When I say plumber grade A in India, does it mean the same thing in Italy? It doesn't. Or when I say a geriatric care nurse, does it mean the same thing? It doesn't. So we need to evolve a common taxonomy, a common vocabulary that everybody across the world understands. So if Japan needs nurses from anywhere, they will say, I need nurses of this type for my aging population. And it is standardized, that vocabulary. So that is what we have resolved in the G20. And believe me, there was a lot of resistance to that because it is also an issue of migration, of global movement of people matching with those skills. However, we were able to achieve unanimity on that because G20 is by consensus, and we've been able to push through, and now ILO is going to do this going ahead. This will be India's contribution to a systemic reform in the way labor is understood or employment is understood. The second thing is internally. How do we ensure mobility of labor once we know that these are the gaps? We know that internally we have a good system, but how do we ensure the mobility of labor? It's not the job of a ministry. It is something that happens collectively. How do people know that this is where the jobs are, this is where I need to move? And I was Secretary Chemicals and Petrochemicals, and it's a highly skilled job there. A lot of the industry people have set up their own training courses where they bring people, they train them, and then they employ them. Similarly, the systemic reform that has been done in the government is the labor codes, which the Honorable Minister also mentioned. Just think that it has the provision of fixed employment. What will fixed employment do? It provides for agility. I can work for 5 years, I will get all my benefits, or I can work for 2 years, I'll get all my benefits, and I have the agility and the ability to move immediately to another sector. It provides agility to the industry, it provides agility to the worker. So these are the kind of systemic things that will do that. The third issue that is particular to our country is that we have a large unorganized workforce. Nearly 80% of our people are in the informal sector. They are working. We have a portal called the eShram portal, which is a database of 400 occupations, and nearly 30 crore people have self-registered there. So we know which occupations, how many people, where are they, who are the migrants among them, who are the building and construction workers among them, etc. But what do we need to do for them? Number one, we need to formalize. What does that mean and how is that done? For example, the whole MSME sector. Many of the people who work in that sector are not part of the what we call the formalization process. So we need to work on that. There are government initiatives like PM Swanidhi, which lead to that. We have our own, in my ministry, EPFO and ESIC. Incidentally, EPFO database also shows, last month, for example, 17 lakh new people joined the payroll. So month on month, it is increasing. So this leads to formalization. In the labor codes, we also have provision of written contracts, which again leads to formalization of the informal workforce. What that means is that then the social security benefits that are due to the person get done. Currently, we see that a lot of our industry employs people through an outsourcing agency, and those people are denied the social security benefits or the formalization and the attendant benefits it brings. So this is something that we all need to work together on. And that brings me to the fourth point, which is about social security, which we are all mandated to provide, especially if somebody has been, let's say, a construction worker all their life. What happens to them when they're 60? How do they meet ends? So, in fact, in South Korea now, it's been found that nearly 60% of their workers are between 60 and 79 years of age. They are having to work. Right? So think of a construction worker or somebody like that. So we need to provide social security. I was mentioning about eShram. Recently, so ILO brings out the World Social Protection Report, and in 22, when they brought out the report, they showed that India had a social protection coverage of only 24% of its population. So we did the mapping of all the central schemes, not state schemes, and we found that almost 65% of our population is covered by one social security benefit or the other. It is a huge thing for our country that, just because we had this database, we had Aadhaar. We had Aadhaar hash, the ability to do hash, mask the data, ensure security. We were able to do this. So in that background of digitization and technology, we were able to demonstrate this to the ILO, and hopefully they'll bring it out in their next report. On eShram also, we have a unique identifier that is given to the person once they register. What does that mean? It means two things. One is it ensures, it's an all India number, it ensures portability of benefits. I may be anywhere, I'm a citizen. That's the concept. I'm a citizen and I will get my benefits no matter which state I'm in. The second is it gives agency to the person. So as soon as you get a UAN card, you can go to skilling, you can go look for a job on our National Career Services portal, where every day we have 12 to 13 lakh vacancies coming up and people applying for that, nearly 4 to 5 lakh employers, including the whole MSME sector, they are registered there. So in eShram also they can go there, they can go for apprenticeship and seamless integration through autofill with all these databases and all these portals. So that is what is happening in the informal sector. On the issue of, the next issue, the fifth issue is rationalization of our inspection system. I know that in the ease of doing business, that is always been an issue. So, you know, governments are mandated by law to carry out inspections. We have the Shram Suvidha portal that uses AI to determine which are the more high-risk entities. SEBI chairperson was also mentioning about that. I was sitting at the back listening to her. So using AI to identify which are the more high-risk establishments and doing those targeted inspections. But even there, we are now going to rationalize and see what are the redundancies that we need to get rid of. And just to respond to what Mr. Bajaj was saying, what is the vision? So you may be aware that the government has set up sectoral groups of secretaries across different, pooling together different ministries. And all these sectoral groups have already worked out what their visioning is for the medium term and for the future. And many of the points that you articulated are already planned for and covered in those deliberations. So summing up, I think you've heard a lot about how we are at the cusp. So in economics, there's the takeoff stage. So we are at that stage. And what again everybody has been talking about, again referring to what SEBI chairperson said, the 360-degree and trust. There is no us versus them. And I think if at all we learnt any lesson from pandemic is that there is no us, there is no them, we are all in it together. And if we work together, if we work with a collective mind, there's nothing we can't achieve. We have shown that, right? And again, what the G20 presidency emphasized, Vasudhaiv Kutumbakam. The world is one family. Whatever the bee, the bird or the butterfly flaps its wings somewhere and it rains somewhere else, we are all connected. So on that note, let me end, and I thank you so much for inviting me here and giving this opportunity. Thank you.
Thank you, Aarti ji. May I now request Sumita ji for her comments.
Very good afternoon to all. You all must have experienced some time in life writing a very important exam. You are running out of time, last 5 minutes, and you still have the compulsory question to answer. So I feel exactly like that. I know we've run out of time, and I have to give you a crash course, some highlights on what's happening in the logistics sector in the country. And I have to talk about two very important reforms which have happened in the recent past. So how do I begin? I begin by setting a time limit of 5 to 6 minutes for myself. First of all, thank you for giving me this opportunity. And we've heard since yesterday about the country having entered the highest growth rate among major economies of the world, our vision 2047, when we will be a developed economy, and our aspiration for a GDP of $34 trillion in 2047. How do we do that? You've heard a lot, there have been a lot of discussions. However, I must mention that the many reforms which have taken place, whether in the field of manufacturing, the production-linked incentives, or the EODB, that is the ease of doing business, reduction in compliance burden, and so on and so forth. There's been a focus on the strategic sectors, textiles, pharma, food processing, electronics, automobiles, and so on, which is giving a great boost to manufacturing and exports in the country, leading us to 2047. However, in the midst of all this, a very critical growth driver is infrastructure. And what are we doing to plan infrastructure? First of all, we have a historic capex push. We are aware that in the recent most budget, we've had a 37% increased capex over last year when it comes to infrastructure outlay, whether it be railway, roads, ports, renewable energy, power, you name it. How are we planning this infrastructure on which there's a historic capex outlay? And that is what brings me reform number one, which is the Prime Minister's Gati Shakti National Master Plan. What is the Prime Minister's Gati Shakti National Master Plan? Many of you would have some idea, some of you would have a very good idea as well. This is a GIS-based portal. It is an approach to planning using visualization on the GIS portal, which is indigenously developed by BIZAG, our technical partner. And if you want to plan a new railway line, or if you want to study the areas of congestion on the railway lines or the roads, you want to develop multimodal connectivity, you want to connect the manufacturing centers more efficiently to the EXIM gateways, the ports, how do you do it? You want to bring about a modal shift from road to rail and rail to waterways and coastal shipping. All this can be easily visualized on the Gati Shakti National Master Plan. We call it the National Master Plan because we have all the ministries of Government of India, the departments of the states and UTs, we have all of them onboarded with the GIS layers, whether it be road, rail, or the social infrastructure, schools, hospitals, or the natural resources, the forests, the wildlife sanctuaries, all of it is mapped. So if it is mapped, what next? Well, we are using it. In the last 2 years since its launch by the Honorable Prime Minister, the Gati Shakti National Master Plan has been extensively used to plan infrastructure in the country, and more than 120 projects have been assessed. These are all big ticket infrastructure projects running into hundreds and thousands of crore rupees. They have been planned on the Gati Shakti National Master Plan with what objective? Well, they were planned before also. Well, this is a data-based objective decision-making system where you have information from all the departments converging on the National Master Plan. You don't need to go to the different departments to get information when you're planning your infrastructure. It is all there. So it saves your time in planning. It gives you an objective, scientific approach to planning infrastructure. It gives you a visualization of the multimodality. Where do the roads meet? The state highway meets the national highway, the national highways or the state highways meet the railway stations, the cargo goods sheds, and the manufacturing industrial parks. Where are the infrastructure gaps? And in the social sector, I'd like to give you an example of a school. Imagine we have mapped around 14 lakh schools in the country on the Gati Shakti National Master Plan. Now, if you put on the layer of schools, the GIS layer, you put on the layer of roads, you put on the layer of power lines, you put on the layer of internet lines, you will see how many schools in the country out of these 14 lakh schools have gap to a road or to internet or to power. So this is the kind of power which Gati Shakti is bringing to planning social infrastructure and bridging the gaps, not just to schools. I give just an example. It could be hospitals, it could be Anganwadi centers. Which of the Anganwadi centers are at a distance? How about having new schools nearer to habitations so that children don't drop out? All this planning, whether it be planning with respect to economic, commercial clusters or the social infrastructure, it's all happening on the Gati Shakti National Master Plan. So what happens? It brings ease of doing business because your logistics cost come down, your logistics efficiency has gone up, you are making in India for the world at more competitive levels. And what happens? Your ease of living also improves, good governance. That is the revolution which Gati Shakti, digitized approach to planning, has brought to the country. So very quickly, I'm sorry, but given the restricted time, this is about the Prime Minister's Gati Shakti National Master Plan, and it's a data-driven approach, as you've gathered, brings multimodal connectivity, avoids duplication of infrastructure. When you already have a road, why do you need to make another road which is parallel to that? There are different agencies making infrastructure. They can see each other's upcoming projects. It minimizes impact on natural resources, green logistics. That's what Gati Shakti is empowering as well. You avoid disruption, you minimize disruption to the forest area, to the natural resources, and you reduce distances. We are able to reduce time, we are able to reduce the cost because of more optimum alignment. And the cost saving, for example, in the road sector is about 10 to 15 crore rupees per kilometer, wherever the optimum alignment has helped us save on the distance. Land acquisition is fast-tracked. All the land records are digitized for 20 states plus on the Gati Shakti platform. There's comprehensive approach, and also we are looking at predictive approach to planning. I wish I could give you a lot of examples. There are a lot of examples emerging, a lot of stories, a lot of evidence. I have been able to just name one example of cost saving in roads, but I'm leaving this compendium and we will make sure you get one on each table. These are 8 use cases on how Gati Shakti is powering infrastructure planning in the country. We are also going to release another new compendium next week. And I will now take just a minute to speak of the second important reform, which is the National Logistics Policy launched by the Honorable Prime Minister last year to digitize logistics services. And many of you business associations, business people would be using the Unified Logistics Integrated Platform, which is ULIP in short, and which brings together logistics related services of 34 different types onto a single platform and powering logistics ease. Number 2, we have the Logistics Data Bank, which has been hailed by the World Bank as an approach which the other countries must also look at, which is helping us track EXIM containers 100% in the country every day. And you can see where are these containers stuck, where, in which state the containers are able to move faster, in which states they are taking longer, and why. A lot of big data analytics is going on. We have the Services Improvement Group, we meet the business associations, we bring all the ministries together, a lot of issues are resolved, whether they be related to customs or they be related to infrastructure ministries. We have brought out our own framework of logistics cost, which we are going to release very soon, and we are also bringing out standardization and SOPs for the ports and for the airports in the country. I will end here, and I will just like to say that the positive impact of planning infrastructure on the Gati Shakti National Master Plan and the direction shown by the logistics policy in the country is helping us go in the direction of a more efficient logistics system in the country, and there will be many more examples to showcase when I have a little more time. So thank you very much. Thank you.
Thank you, Sumita ji. And as I close this session, as you know, we are well over time. I must thank both of them for taking the time out to be here, for their patience through this session, and for their insightful comments. Thank you.
Thank you, Sarthi Ahuja and Ms. Sumita Davra, for sharing those very detailed perspectives from and respect to your respective ministries. May I now request Mr. Sanjeev Bajaj to kindly do the honors in presenting the CIM mementos to both our secretaries, to Ms. Sarthi Ahuja and to Ms. Sumita Davra. May I request everyone to please join in extending an applause of appreciation for their time and sharing their respective perspectives on this forum. We now close this session and we will move on to the next session, which is the 11th plenary session. But before we do so, we will just take a few moments to make the necessary changes in the table arrangements.
There are also.
A very warm welcome, ladies and gentlemen, to our plenary session 11, which is on the theme of the future of global trade and impact on the emerging economies. May I please invite on stage Mr. BVR Subramaniam, Chief Executive Officer from the Niti Aayog, Mr. Richard Baldwin, Professor of International Economics, IMD and founder or editor of Economic Policy Portal, voxu.org, and we have with us Mr. Janmajay Sinha, who is the chairman of BCG India. An extremely warm welcome to our eminent panel here. Ladies and gentlemen, this session will delve into what the future of global trade world looks like and what impact it would have on India's ambition of becoming a player of global consequences in manufacturing. With these words, may I now request Mr. Janmajay Sinha to kindly make his opening remarks and to initiate the conversation with our speakers present here.
Thank you so much. It's a great privilege and honor actually to be doing this session because Professor Baldwin is really, your work speaks for itself and you've written some of the most seminal papers in this area. And one of the most foremost practitioners from a country's perspective is on my left, Mr. Subramaniam. It's actually a panel which would be really fascinating. Now, I am not actually going to make any opening comments. What I am going to do is change this format of this session. While first I'm going to ask Professor Baldwin to spend 20-25 minutes to just give a perspective on how you see the issues. And then I'm going to ask Mr. Subramaniam to just engage with that, to ask a few questions, to make a few comments, to actually try and wean that out. But in the brief, there was one thing that I wanted to add, coming from looking at all the discussions that are happening at COP20 right now in Doha, is on the carbon border tax. How will that affect trade for emerging economies or the global south? And isn't it a bit unfair for the people who have done the climate damage to charge people who haven't and use it to become green themselves? You know, I mean, I just wanted to put that also as one of the issues I would like you to address, Professor. With those opening statements, I'd like to invite Professor Baldwin. Would you like to present from there or here? Whichever.
No, I can do it.
Okay, great.
Thank you. So in principle, I have slides. Oh, here we go. There we go. So thank you very much for inviting me and giving me the opportunity to share my ideas with this very important audience. I enjoy coming to India, and before COVID, I came quite frequently, but this is the first time I've been back since 2019. But I'd also like to start with an apology that I am not an expert on the Indian economy. And most of what I'm going to be saying is about global trends in the future of trade and development. I will make some comments and show some slides when it comes to India. But I have to say that India is one of the countries where the notion that services are a way to develop is one of the nations where that point has been well understood. Okay, so here let me start. I hope you admire my graphic. That graphic I asked ChatGPT to produce. I gave it the title of my talk, and it produced that in about 20 seconds. There's something funny about its spelling. I don't know about that, but it's brilliant what this thing can do. And another thing I've learned, I wrote a book in 2019 talking about AI and all sorts of things. And one thing I learned is that innovation is different than we thought it was. Because that looks extremely innovative, but all it did was take a whole bunch of pictures and mash it up into something new. So I've reevaluated what innovation actually means. So with that, let me proceed. So the talk comes in two parts. I'm going to argue that the future of globalization is in services, not manufacturing. And I'm going to explore the implications of that for development, making conjectures. Now, what I want to do here in this talk is simplify to clarify. I'm not going to go into elaborate models and great details. I'll show some intellectual frameworks to organize thinking about the complexities of the global economy, and a few facts to argue that these frameworks are bounded in reality rather than just coming from a blackboard at some university somewhere. By the way, I hope you admire, that's the view from IMD campus of Lake Geneva and the Alps. Not quite, but close. Okay, first part's on the future of globalization, and I take the future as starting in 2016, because that's the year Time magazine and a number of other magazines called the year of AI. And you won't be surprised if I say the future was completely changed by AI becoming very, very effective, and it's growing quickly. So this, I believe, is the future, what I'd like to call telemigration. This is one of the main themes in the book I published in 2019. The idea is people sitting in one nation and working in offices in another. Now in India, that is not a surprising thing. There's an enormous industry, enormous employment of people sitting in India and working in offices elsewhere. My argument is that that is going to become the normal all around the world. The reason it happens is quite simple. International wage differences make telemigration profitable. Digital technology makes it possible. And COVID accelerated that process. In essence, it was possible to work remotely before, but the lack of coordination, the lack of investment hindered using workers who were remote. COVID, all around the world, moved the frontier, moved companies and governments and individuals up to the frontier so they can do it. And now I believe that the only barrier is some technical barriers, and those are coming down at the speed of digital technology, so very quickly. There's a new innovation which could potentially change things enormously, not just in the world, but also for India. It's called simultaneous speech translation. So simultaneous speech is instant speech-to-speech translation done by machines. So simultaneous translation allows much more natural flow of conversations. Many of you will have been at conferences which did sequential translation, which is very stiff, or some sequential, simultaneous. It's a completely different outcome. Now, this simultaneous speech translation, SST, is getting better fast, and may be, by the end of next year, may be very widespread and commercialized. So this is one of the few commercial products that does it right now, Time Kettle, WT2 Edge. And they put in these little things like earbuds, and one is speaking in one language, the other's hearing in his own language, he speaks his language, the other hears it, simultaneous. So many of you will have realized how good machine translation is now. This is not quite that. It's a slightly different problem because the computer has to do the translation before the thought is finished. So usually ChatGPT takes a whole sentence or a whole chunk of text and then translates it. When you do simultaneous translation, you have to start translating before the sentence is over. But this is something that machine learning can do. All you need is enough data and enough computing power, and it will happen. So I'm quite sure by at least the end of next year, it will be important. Oops. Think about that. SST will tap into a vast online talent pool in non-English speaking countries. China, for example, graduates 8 million engineers a year who are pretty good, but pretty much constrained to be in China because they only speak Mandarin. With SST, they will be speaking English or French or whatever necessary. I think the takeaway is that SST will unleash a talent tsunami, massively boosting international business and undermining India's language advantage. So let me spend a few minutes on that. The Indian outsourcing sector, which is one of the great wonders of the world, changed the way things were done all over the world, is naturally based in India, not just because of the excellent engineers that are produced by the Indian Institutes of Technology, but also because many people in India speak English. And that English language is necessary when interacting with companies all around the world. Even if you're the IT guy, you need to interact with people. Now that advantage, and by the way, it's also true in the Philippines, for instance. The Philippines has a big presence in telemigration because of the language advantage. But that language advantage will go away, and it could go away in a sudden and dramatic fashion. So I don't know if that's good news or bad news, but I think it's something to think about. What I like to do in my talks is say stuff that's outrageous but not ridiculous. And the reason is to make you think. Because the worst way to think about the future is to pretend it's going to be just like today, especially now with digital technology changing realities at an incredibly fast pace. And I think this is one that needs to be thought about. I hope you like that ChatGPT graphic, you know, with the tsunami, the people on top coming all over. There we go. So now I want to make the argument more generally about why the future of globalization lies in services. As many of you will know, right now about 2/3 or 3/4 of international trade is in manufactured goods, or goods in general. Say 2/3 manufactured, then some mining and agriculture. And services is about 20–25% of the whole thing. I think in 5 years or so, that will be completely reversed. And it will be the manufacturing, which will be relatively rare, and the services, which will be dominant. And that's what I want to do in the next few slides with a bit of logic and a few facts to argue that that's the way the world's going. So first of all, a couple facts. If you look at the left chart, you'll see goods trade has peaked, services trade has not. So on the left, we have the value of world trade, exports, as a percentage of world GDP, coming from 1980 at 100, so that they're looking at trends. And if you look at the orange line, you'll see that goods has peaked around 2008, has been declining since, and that trend continues at a global level. So trade is becoming, trading goods, in particular manufactured goods, is becoming less important going forward, and this is not a new trend, it's something that's been going on for a long time. The blue line is services, and there you see a little hiccup when the 2008 crisis happened, but no slowdown whatsoever. The services trade is continuing to boom, and this is the digitally enabled trade, not transportation and tourism. So on the right, you'll see the composition, the total at the modern services, which are transmitted electronically, travel and transport, which were hurt very much by COVID, so I'm leaving those out. Now, another fact is that modern service exports, the emerging market share is low, but growing faster. So services, there's India, which is an important exporter of services, but if you look globally, the developed countries dominate trade and services right now. So the pie chart on the left, that's modern services exports, and you see about 2/3 of all of that in 2021 was developed. There's China and India there, you see. But on the right chart, you'll see that if we limit ourselves to this modern service exports, developed countries since around 2015 have been growing more slowly than emerging market exports. So in a second, I'm going to make the argument that what we're going to see is a rapid growth in emerging market service exports, and the world trade will be dominated by exports of emerging markets. Okay, let's just focus a little bit on India here for a second to see the role of goods and services in India. So most of you will be familiar with this, but I thought it's worthwhile putting the experience for China and the experience for India side by side. So if you look at India from 1995 to 2020, this is OECD data, the green line is the trade balance in services. So it's growing. The exports of services of India are growing faster than the imports. Nothing will shock any of you. And the minerals that the minister was speaking about before, especially oil, that's that gray line there, which is very negative. And manufacturing has been up and down, but mostly down. So the exports are less than the imports. Now, if you look on the right, you'll see China, and you'll see exactly the opposite picture. The exports of manufacturing are much larger than the imports of manufacturing. That's not shocking to any of you. But they also have lower exports and imports on services. And that, I think, in some sense, is the two development models we have seen, one based largely on export of services and one based on export of goods. And what I'm going to argue is the China model is no longer working and is no longer going to be the wave of the future. And I'm not saying industry is not important. I'm just saying that industry export-led growth will be different. And what we're going to get is service-led development, exports. Okay, here's the argument. Why service growth will continue. Barriers to services trade are much higher than barriers to goods trade. Something like 2 orders of magnitude larger. Most barriers to trade in intermediate services are technologically linked, not policy linked. And as you will note, India's miracle in exporting services was done without signing a single free trade agreement, because the types of services that India exports do not face policy barriers. Number 3, digital technology is lowering the barriers to intermediate services at an explosive pace, and the demand for these kinds of intermediate services is huge in rich nations, and the capacity is huge in emerging markets. In essence, in services, people in Bogota or Nairobi use the same software, the same equipment to do the same task, which is completely different than in industry, where if you look at a car factory in Colombia, it looks completely different than a car factory in Detroit. So the conclusion is this intermediate trade services will grow much faster than goods for the foreseeable future. So here's where we are so far. If you look at other commercial services, which is this modern services, overall trading goods, it's going up like that. And my projection is that that upward trend will continue. It's at 20% now, and I think that's what's going to go on, but especially for emerging markets. So I'm going to have to speed up here. Conjectures for implications. So here I'm just talking about the future, so that means I'm making it up. So if it sounds good, write it down. Otherwise, don't bother. Most importantly, listen to the logic that I'm using to make these conjectures, because the outcome is not important. It's the logic behind them that you'll have to think about and hopefully stretch your minds a little bit. Good news, emerging market miracle will continue and spread, but be based on services, not industries or commodities. To a large extent, Africa and South America have been left out of the emerging market miracles unless it was based on commodities. The trouble is, geography is too hard to overcome in manufacturing. I've got these three circles. So if you look the circle around factory Northeast Asia, factory Europe, and factory North America, that's about 80% of all manufacturing in the entire world is in those circles. So that means the other 20% is spread over the whole world. And the reason is this manufacturing is incredibly intensive in agglomeration and scale economies and networks. So it's hard to break into it if you're far away from one of those. Okay, there we go. Let me see. So I think with services, time zones will matter more because these are people working in offices. So I think Latin America will provide the services for North America, Africa for Europe, and Southeast Asia for Northeast Asia. That's a conjecture. It's worthwhile pointing out that services are easier, there's lower scale economies, capacity is less of an issue, geographic distances matter less, and there's this enormous demand in the north and big supply in the south that already exists. Moreover, the same comparative advantage that could be used in manufacturing can be done in telemigration, but it's much easier. So emerging markets' comparative advantage is low-cost labor, but now they have to walk into a farm or a factory, produce goods, and then the goods are exported. And that little S-shaped thing is filled with lots of problems. It's very difficult to do. But telemigration takes the low-cost labor and exports it directly into the offices in the rich countries, so it's much easier. So we're going to have a different structural transformation. Think services export-led growth, not industry export-led growth. Think India, not China. Or as I like to say, and I thought this one up for today, so I hope you like it, Bangalore's galore. Okay? So we're going to, all the big capitals in the emerging markets will start to look like Bangalore. So think cities, services, and training, not factories, industrial equipment, and technology. The new development theory will be needed because most of our thinking about development is the stages of industrialization. And this will look very different. Just like Bangalore looks very different than South China, I think we need a new development model. And I'll just stop with that. Thank you very much.
Not at all. Not at all. That was truly fantastic, and I've picked up a set of issues which are going to be interesting during the conversation. And now I'd like to ask Mr. Subramaniam to both, from the context of, the attack on Make in India from Professor Baldwin to the perspective that he sits in at Niti Aayog, incorporate, give some comments and then ask Professor Baldwin some questions to actually engage the conversation. It's your choice. Then you can be here.
Sure. So let me just say, it wasn't an attack on made in India. It's exporting from India.
That's
right.
Thank you, Janmay. I think I'm actually happy to be on this panel today. Apart from being CII, I studied under Richard Baldwin. So the day I was invited, I said, this is a session I will not miss. It's nice to be in a session where your own teacher is there and you're a part of the same panel. So, I said, I can't miss this opportunity. Thanks a lot to CII for giving me this opportunity. I studied under him 20 years ago. And you can't have a better name than Richard Baldwin as far as thinking about trade is concerned. Two, I think he has provoked everybody's thinking by what he has said. The future is services. Manufacturing is not where global trade is headed, and services is what should drive export-led growth. I will just scrap what I thought I will say, but kind of respond to what he has said and maybe provoke him into giving some more answers. Firstly, I will make it a bit more nuanced. If you look at the globe per se, probably the growth in services trade is far more than the growth in manufacturing trade, and probably the trends are going to continue for a while. I think that's the hypothesis, and that's what the numbers say, and probably that's the truth. If you look at India's own exports, our services exports are booming, our manufacturing exports are struggling to keep up with services. And all trends say that in about 3 to 4 years' time, maybe around 27, India's services trade exports will actually equal India's manufacturing exports. So in a way that matches what Professor Baldwin mentioned. Secondly, we are looking at a $2 trillion export target by about 2030, and I think the government itself feels it will be about a $1 trillion coming from services and $1 trillion coming from manufacturing. Then the question comes, where is this manufacturing boom going to come from? Now, what is influencing services is something what Professor Baldwin said. But it all depends on what is the time frame within which you are looking at. Are you looking at 5 years? Are you looking at 10 years? Are you looking at 20? Are you looking at 100 years? Depending on the time frame you are looking at, your view on this services goods opportunity may change. For example, on the goods side, there are a lot of things that are happening. We are all hearing about near-shoring, friend-shoring, protectionism rising in the developed economies. I think that's a major shift. We are all hearing about China +1. People are no longer talking about decoupling from China, but people are talking about de-risking from China. That is an undeniable trend. I was talking to some people yesterday. You talk to anybody, it is a very clear signal to corporates from their capitals that de-risk from China. That is there. Now, it could be an outcome of geopolitics. And geopolitically, I think India is in a sweet spot. So even if global trade does not grow in total, there could be a shift in trade from one geography to the other. So is that something which India can capitalize in the short run? Is something one needs to look at. I am a believer that there is an opportunity which India can capitalize on. Apple moving to India with Foxconn and all their supplier chain is actually one part of the same story. So is there going to be more of that? Are there going to be more Foxconns, etc.? So in aggregate, there is no increase in manufacturing globally, but there could be local shifts. But this is being driven probably by a couple of other things as well. I think geopolitics is probably just one. I believe that geopolitics are always more transient. There is something more fundamental happening. And the fundamental thing, I think, is demographics. India has a median age of 28, 29 years. China has a median age of 39. Japan has a median age of 49. In fact, the lack of growth in Japan is directly attributed to the aging population. China is suffering the same problems which Japan has been going through for the last 30 years. An aging population and aging quite rapidly. And that is going to be a major change and a major driver of what's happening in China. If you look at long-term projections, India has already overtaken China in population. Good or bad, we'll come to that in a minute. But the biggest story is, by the end of the century, 2100, there are projections which say the Chinese population will be about 700 million. That is half of its population today. Can it be the manufacturing powerhouse or whatever it makes 70, 80 years from now? Now that's a big question. And these trends are there. So Chinese companies are having multiple shortages. They're having a shortage of demand because there is a population shift in terms of the age. And there is also a shortage of labor supply. And the labor is becoming more expensive. So it's not just multinationals who are trying to de-risk and move out of China. It is Chinese companies wanting to move out of China. And that brings me to a big, big concern. Are we shutting out India from that move? And I think the government also should be, and as Niti I'm saying that, should be looking at, do we capture the move out of China by not just non-Chinese companies, but also Chinese companies? And I think that's that. So the boom in manufacturing that you're seeing in Southeast Asia, particularly Vietnam and a couple of other countries, is not just multinationals moving there, but Chinese companies moving there. And I don't believe they're doing it for devious reasons. I think they're doing it for obvious reasons, which is they don't have people to make them at a cheap price. And it's cheaper to make in Vietnam than in China. I think these are one of the major drivers that's happening. There are a couple of other drivers that is there. I mean, Chinese, the entire, the capital market system is under stress. There's a huge capital flight from China. So I think in the next 15 to 20 year time span, India has an opportunity in manufacturing. We'll come to the longer trend in a minute or so. But the opportunity and the window for India is at best 2 to 3 years. Because supply chains are unwinding, they're becoming shorter, and they're looking for new geographies. This is going to be a 2-3 year phenomenon, and then supply chains will get frozen. You saw those 3 big circles on manufacturing, 20, 20, and 40, with Professor Baldwin just showed in manufacturing. There will be another 10 or 20 coming up somewhere if that 40 shrinks. If it's not you, it's somebody else. And from an Indian perspective, that becomes very important because, it's a beauty contest. And you're not the only contestant. There are others in the pipeline. I mentioned Vietnam, there's Indonesia, there's Bangladesh next door, there's Turkey, and there's Mexico. I mean, you could list half a dozen other countries who are going to be competing with you to get this shift out of China. So I think that's something we need to be very alert to, come up with a set of policies, a set of programs, make doing business and shifting to India easy. I think that's the key thing. Make the shift to India attractive. Probably that's the easier part, but make it easy. I mean, a very typical example. Customs doesn't allow import of second-hand goods. When you shift a factory, you're moving second-hand stuff. So you need to allow that to happen. This is on the manufacturing side. I think we've heard some very interesting stuff. I think there was a provocative question by Janmejay on the Carbon Border Adjustment Act. I think among the mega trends that are affecting, one is services growth, the other is demography, the third one is climate. I think we all need to learn to live with it, and the fourth is tech, and we'll come to the tech part in the end. I think the impact of climate is going to be fundamental. We may take whatever posture we want to on the global platform, be it the WTO, be it COP, whatever. That's a national position, probably we are aligned with a large number of developing countries. But for our own good, we need to know that this future is staring at us, and we need to adjust rapidly. And I know that our private sector is actually doing the adjustment. If you are a steel maker and if your market is Europe, you are jolly well going to adjust your production to make it less carbon intensive. I think it's not just the steel, it's all the downstream for steel, because it's actually the MSMEs who consume steel who also will have to comply. And if the major markets are going into situations where there are going to be carbon taxes, it's time to adjust to that fast. This is not about global discussion. This is about just get going and get cracking at the bottom. The fights will be fought by Government of India at the international level. But at the bottom level, for survival's sake, I think companies would need to adjust, and government would have to come up with policies to facilitate that. I'll come to the last thing, which is the big move, apart from climate, which is affecting both manufacturing and services. This is technology. In a way, the first few slides of Professor Baldwin were all about the speech processing and the automatic translation. I think yesterday there was a viral video of Putin speaking in Hindi in his voice. It was nothing but some such, AI stuff which was happening automatically. Now, it's clear, he was speaking in Russian, but the video was actually in Hindi, and it was happening naturally. So obviously, technologies are evolving in a manner in which we can't foresee. Some we can foresee, but some we can't. We have had all kinds of reports that, thanks to AI, 40-50% of coding jobs will vanish. India's advantage in English will vanish. India's advantage in a lot of services may vanish because of that. I am not a technology pessimist. I am a technology optimist. We thought that computers are going to come to India, and when computerization happens in the 1980s, it will wipe out clerical jobs in government, and it will reduce use of paper. Demand for paper has shot up, and demand for clerical jobs has gone up. So we're actually consuming more paper with computer than less paper. So it's a different thing. You take the same print out 30 times now, that's all, instead of typing. So I'm not clear that we can actually predict the impact of technology. Will there be impact of technology? Yes. How will it impact? Is it plus or minus? I think it's not worth bothering ourselves. We have to just prepare that this technology is going to impact, and there will be an upside which we need to catch. So if you're not going to do low-level coding work, you will do some higher order work. And the beauty of services is it's manpower intensive. And that's one thing which is India going to have in surplus for 25 years. But that's the big, big problem. And at this big issue about services and manufacturing, while India has a comparative advantage in services, and figures show that, the problem with services is the workforce that services need is far more skilled than workforce which is generally going into manufacturing at the entry level. So the massive shift which has happened globally 100 years ago and the last 50 years in other parts of the world from agriculture to manufacturing was basically because agricultural laborers moved into manufacturing at a very low level in skilling and then rose up the value chain. Services requires a basic level of skill which is far higher. And that's where the problem is. Are we having the right skill ecosystem in India? Are we having the right education ecosystem? I mean, what are we talking about? We have about 50% of our population is somewhere in and around farming, which is either agri or rural. That what are we talking of in terms of people in the working age group? We're talking of 30, 40 crore, 400 million people. If at least half of them have to move into services, we have to educate them with skills. Are they going to be nurses? Are they going to be pharmacists? Are they going to be something else? Are they going to be coders? Are they going to be, bankers? Where are these skills? Do we have the skilling ecosystem? If you don't do the skilling, the demographic dividend on services won't happen. So it's a big, big challenge. It's a struggle. I don't think we have had a great track record in the last 70 years. We're trying hard in the last 5-8 years to get the skilling ecosystem going. You can see the services boom in India, but it's restricted to certain urban pockets. Let's be very clear. There are large parts of India, including urban, which are not touched by the services boom. You'll see it in Bangalore, Hyderabad, Chennai, Pune, Noida. You're not seeing it in Lucknow, you're not seeing it in Patna, you're not seeing it in Bhopal. I mean, it's very strange. States like Andhra Pradesh, Madhya Pradesh, their agricultural growth rates are more than their industrial growth rates. I mean, it's a very interesting dynamic which you see. You keep wondering, are we going to become more agricultural in these places? So to get services going, you need to get education and skilling going. That is the future. A lot of manufacturing, by the way, is services. If you take a telecom product, 60% of the stuff inside the telecom product is services. Your mobile phone has far less hardware than software in it. You can go across, be it switches, be it whatever. So I think while the services boom is there, it's visible, India has strengths, I think we need to do a lot to capitalize on that. I'll end here. Thank you.
So I told you it would be a fascinating conversation. And I want to add a couple of things to the number of things you have to answer, Professor. And the two things that I'm going to add are, you talked about how services, in some senses are a threat to India's current exports of services, both with generative AI taking away some of the service jobs we do, and then the English advantage eroding in that sense. There were 2 points I wanted to raise. They are disparate, but they are still ones which are just require some discussion. The first is technology apartheid, or what I mean is which countries will get excluded from major technological advancements, in quantum computing, in robotics, in generative AI. Just now I feel hopeful about India because if you take US and then you take China and then possibly Israel and a little bit of Berlin and London, a lot of technology innovation is happening in these locations and a little bit maybe in South Korea. And India is good over here. But there are vast swathes of the world where they are getting excluded and cut out from technology. And what will happen then? How will the world actually, if you say 7 billion people are getting excluded from technology, or not 7, like 5 billion, it's still a large number. The second is, one of the big strengths for both Africa and India is the age of the population. Our education system right now is failing. And not only is it failing, the people in charge of the education system are committed to pedagogy as it is deployed today. And the full benefits of a reinvented technology-enabled, communications-enabled education for primary school of a much higher level, especially with simultaneous translation of vocabulary, is at one level an opportunity beyond all telling of it, because at every age of 0 to 24, India has 20 million people. So if we could actually start going after them at a level of scale, at scale, not with one school at a time, but at scale, what would you see the prognosis of that? A complete reinvention of education and delivery, and possibly a reinvention of medical services. So I knew we had, we don't give anyone a free lunch. When we invite you to Delhi, you have to earn your keep,
Thank you very much for those comments. No, it's just exactly why I come here. I get perspectives and challenges that I hadn't thought about. And I may not have the answers this time, but I'll go home and think about it, and the next time it'll be better. Now let me do this in reverse order, because I think your point about generative AI and education is one that when you said it, it really rang bells with me, but I have not thought about it. Now I use Gen AI in my little teaching, but that's all started, like a year ago. But I think you're right that at scale, it could change things radically. In essence, what Gen AI is wisdom in a can. It's experience of 20 years of teaching in an app that's super easy to use. And so I do believe that it will raise up the standard of teaching and make it easier for people to do things. So I hadn't thought that through, and I think it's probably one of the more impactful things that will happen from it. Medical is the same thing. There's already a lot more used in medicine. For instance, in the UK, they have this Babylon Health app, which is helping people out whether they need to go or not. So that's already started and started raising it. But the education I hadn't seen. The demographic point came up with both of you, and I thought that's absolutely critical, that there's going to be a young world and an old world, and the problems that we're just starting to see in Europe, for example, and Japan, those are really going to determine the course of the nations. And it will be the young nations who will be taking over the leading positions. And India, of course, is one of them. Now, the thing about the tech apartheid. So I think it's important to distinguish between where the innovation is done and where the innovation is used. So as long as, right now, for example, the United States is trying to prevent China from developing quantum computing. If that goes on systematically, that might lead to something very difficult. But if Google invents it in California, but lets the whole world use it, well, there's a few billionaires in California, but the world gets to use it. So I think the main thing is that it doesn't become exclusive. Thank you very much for that, Chairman Sinha. I really appreciate those comments. So now let me go on to return to Director Subramanian's comments. The nearshoring is a very good point. And it's not contradicting with what I was saying. So just to flesh out my idea here, if everything is made by robots, there's no reason to make it far away. So I'll tell you, a telling example was there was these Adidas shoes factory. They made football boots. And they used to make it in China and then send it to Europe. But it turned out that they could automate these things so much so that there was only one German guy turning the switch on and off, and you just feed in the order and it would produce them. So they moved it back to Germany to be closer to the people. So even though they were paying 45 euros an hour to somebody in Germany instead of 4.5 in China, there was so little labor involved, you might as well do it locally. So the argument that manufacturing is going away as an export doesn't mean it's going away. In fact, it's going to be localized, and this China plus one, which is India, and I agree with you, the time frame, this is a big time to move towards that. will be emphasized. And also, if many people in the room know this way better than me, especially my discussant, the way India industrialized is totally different than what China did. China was a import technology, import intermediates, process and export it. Now they're replacing those imports with local production. India, after the reforms, was essentially selling to the local market. But since you have 1.3 or 1.4 billion people, fast-growing incomes, and a growing population, that's enough. And that may very well be enough to be manufacturing for India, with some exports or not. Most countries do not have that luxury because their domestic market's not big enough. So let me move on to this. The 10 or 20 year window, let's talk about that a little bit more. The window of opportunity, I think that's very true. So one of the things I showed with those circles is how important agglomeration is in industry. And India is one of the few places that could potentially get a real agglomeration in car industry or aerospace or chemicals, already has it in chemicals. And so I think that is another advantage which we haven't pointed on, is the market size itself provides a benefit that then makes the market bigger. CBAM, that's, how much more time do we have here? Just a few minutes?
I think...
we're going to go to Q&A. So let me say CBAM quickly. So Europe views CBAM as a way of encouraging the world to get carbon taxes, which many people, many economists believe is the way forward. Because with a carbon tax, you get 1 billion people thinking about how to save carbon. It's not the post office that's coming down, you do this, you do that. If there's an economic incentive to save some carbon, then that will happen. So that's the idea of the carbon tax. It's politically difficult, I know that. But the CBAM, in principle, is to get everybody to have a carbon tax, so the CBAM won't be applied. And on the climate justice, I can't agree more. I mean, it's absolutely incredible that the people responsible for where we are now are not being held responsible for it. It's politics, but it is, climate justice is sort of a very, annoying is too mild of a word, but the one I'm thinking about I don't really want to say. So I think I'll leave it at that. Thank you.
I always find that if we don't involve the audience, we get booed off the stage. So just to prevent that possibility, we'll take 3 questions. Sir, the gentleman here. Yeah. You'll need to get a mic. Somebody will bring it to you. But could I just request that it be a question rather than a long commentary? I mean, I'm not saying that you were planning to do that.
No, actually, I was planning to do that, but thanks a lot. First, I want to really thank you. It was a fantastic event. Special kudos to CIA and Department of Economic Affairs, to the Government of India. It's a very thought leadership, event, and I really want to thank you for that. But I just want to get to the professor also here, and then also Mr. Subramanian, he could also answer. When you spoke about services, you showed that India and China both have 5% of the services. But we do see that Americans, and specifically in British way, I'm taking an example, they are very good in services, but they are leading because of innovation, specifically in finance, the depth of the capital markets. So that's one. So that innovation did help in services. So that was one of my questions. And second, of course, was on manufacturing. If you look at even Germany, they have been very good in manufacturing and that has sort of given them an advantage over the years. Now, of course, that also they have more than 50% of exports as a percent of GDP. So that's also sort of on the negative side. But if you look at America, which is highly driven by services, but again, then question of Tesla and other manufacturing companies coming in, shows what I'm trying to ask is that ultimately the future will be a mix of services and manufacturing, which is what also India is trying to do. So I want to take your take there also. That was from that. Thank you.
Could I just collect another question? Yes. Okay, after you.
You mentioned that India may lose competitive advantage once the simultaneous translation happens. I view it other way around. India it can open floodgates for so many bright people who are in the regions for whom English is an impediment at this point of time. There are a number of bright people.
Fair point.
And it can open floodgates.
Thank you.
And your comment on that, please.
I'm Arvinder Singh Brara, Chairman and Managing Director of Mantic Consultants. My question is that while talking about services and manufacturing, there is of course awareness of importance of climate change, which is being brought into the exports. But the issue is so large and so important that it needs to involve people beyond the manufacturing and service sector, including the common man. So just to share, I have developed a website, greenpledges.com.
So you are standing between
everyone. So my question is, what is it that can be done to involve people other than just who are in manufacturing or service, but ordinary citizens around the world to help reduce the impact of pollution and climate change?
Okay, so we are now out of time. And I think what I'm going to do is I'm going to change the order. Professor, you go first, and then I'm going to come to Mr. Subramaniam to close the session.
Okay, thank you very much. So the second question was just a good point, and I sort of overlooked the fact that a huge number of Indians don't speak English, because I think had in my mind all these people in Bangalore who do speak English, but there's many office workers, bookkeepers, accountants, graphic artists in India who are capable and underpriced by international standards who now can participate in it. So it's an excellent point. I didn't think of that. I have another talk this afternoon, and I will mention that. I'm sorry, I will steal it without an acknowledgement. So climate change. I'm not a climate change expert by any means, but I mentioned it in passing. One of the arguments for carbon tax, that things get taxed according to how much carbon is in them, is one way to involve the average person without them even knowing it. So if they see two products, one is more polluting than the other, they'll tend to buy that. But I'm one pass on that, as I'm not really an expert on climate. Now, the first question about innovation and competitiveness, that's very, very true. But in manufacturing, let me stick with that. Nowadays, most of the manufacturing innovations are in machines. So take electric vehicles, for instance. Those are not that complicated. So in fact, lots and lots of, apart from the batteries, they're not particularly high tech, not difficult to assemble. So I suspect that kind of advantage of Tesla, where they're running ahead because they're innovating so fast, that's one company. But I think the vast majority of electric vehicles will be made much more locally than before, because it's much easier to make electric cars than it is to make, for instance, diesel or fossil fuel cars. So the innovation advantage, I think, will diminish. On services, the things that the U.S. exports are in terms of quality and reliability, things like that, and that will always be there. But what I had in mind was the office services, so intermediate services. So when B2B services, I did a paper for the European Central Bank last year on services and trade, and I calculated that a third of all the spending in the G7 countries is on intermediate goods, gross spending. And that's because every single business hires people, has office people. So essentially a third of the entire rich market is spending money on things that can be done without innovation. And as I mentioned in the talk, everybody's using the same software. Everybody has more or less the same training, and everybody organizes things more or less the same way. So it's unlike manufacturing, where you really need a big leap in order to be competitive in the rich markets. That's not true for all these looking through CVs or HR management, doing payroll, doing bookkeeping, accounting for expenses and all that sort of stuff. That can be done basically immediately. So with that, I'll stop.
So I'm going to give you the task to close, but yesterday Mr. Anant Nageshwaran introduced two beautiful terms. He said, he doesn't like frothy exuberance, but he likes tough optimism. So I want you to address any of the questions you wanted to and close for us with tough optimism.
Okay, so let me respond to that question on language, and how it can be an advantage. I actually make it more general. AI is going to be a great equalizer. I think that's the big thing. And once it equalizes advantages people may have because of language or level of education or level of knowledge or access to greater systems, then your genuine merit will actually start showing up. I think that's going to be the thing. I'll take you to a completely different field. In medicine, a doctor, most general practitioners are nothing but an algorithm in their head. And that's what their 5-10 years of training does. So you actually can automate all that a doctor does, except if it's a specialist and you have some serious stuff. So then that's how AI is going to hit sector after sector after sector. And you're right, which language they speak, what background are they from, all that will probably become irrelevant. But this is a future which is unknown. But again, given our ability in India, which we have demonstrated in adjusting to all these things, I'm very, very hopeful that, we will create opportunity where there is none for many others. Coming to the issue of, the green stuff, climate change, is it only manufacturing? I don't think it's just manufacturing. It's going to be huge. The Prime Minister himself is leading the clarion call with a clarion call for lifestyle change, mission life as he calls it, lifestyle for environment. Reducing this carbon stuff is going to be multifaceted. You reduce your carbon consumption, you also sequester carbon, you also reduce emissions. There's going to be multiple ways you're going to address it. And I think there's no single agency. In NITI, we're probably going to start work on creating a complete work stream on reducing carbon in the country through multiple initiatives, including recycling, which is circular economy, because recycling is another way of reducing carbon. That's something that's going to be there. Somebody said something about, education and schooling system, etc. I think it was Janmeja himself. I think the important thing is, I just remember, we run an Atal Innovation Mission in our place. This innovation mission is not about innovation. It's actually creating a scientific temper early on in schools. 10,000 schools have Atal tinkering labs. The idea is we want 1 million schools to have that. So if children are playing in class 8, 9, 10 with 3D printers, etc., that's when they start ideating. And then the disadvantages of their background, etc., can vanish and they catch up. That is that. But coming back, just to conclude, as Janmeja said, India is in a sweet spot multiple ways. We have strong strengths in services. We have a demographic advantage, which is going to be there for the next 20, 30 years. On manufacturing, there are global shifts that are happening. And mind you, one point we've all missed, and I think that relates to services. India has been fabulous in creating this public digital infrastructure. Be it Aadhaar, be it Jandhan, be it, your UPI, etc. This is where we are getting out of the clutches. We are breaking up services into smaller segments with the common node being done in a public platform. Creates a huge opportunity for innovation. Maybe that's the way forward for Africa. Because, the digital apartheid, technological apartheid which Janmeja referred to, India could be the beacon of hope where digital apartheid doesn't get a chance to get stuck. If UPI becomes the mode of payment across Africa, like we are all used to in India, think of how easy their lives would be and many, many other things. With this, I'll say last words, India is going to grow fast. We are the fastest growing economy today. Our projections say that we are heading for a $30 trillion economy in 2047. And this is very conservative. More details later, some other show of CII. Thank you.
Thank you so much. Thank you so much.
Many thanks to both our speakers for their expert deliberations on the relevant theme, and thank you so much to Session Chair for steering this conversation. May I now request Mr. Janmeja Sinha to do the honors in presenting the mementos to both our speakers, Mr. Richard Baldwin and Mr. BVR Subramaniam. With this, we conclude the session and we will now break for lunch. May I request everybody to kindly join us back at 2 p.m. for the rest of the sessions today.
Global, because our investor of today wanted a worldview. And well, the world has turned its spotlight on India. Who better than us to aid this? India's window to the world. Our flagship index, the Nifty 50, is the defining symbol of India. We are NSE, the stock exchange that changed perceptions. There's more to us. Our financial literacy programs across schools, colleges, and professionals makes us amongst India's largest educational enterprises. Our CSR initiatives in child welfare, elder care, and hygiene cut across a large swathe of India. Our approach: transparency, governance, and efficiency. Our focus: India. Our canvas: the world. Our inspiration: our investor. In our world, the end of one day is the start of another. As a new decade dawns for NSE, a brighter one dawns for India. NSE, an investment called India.
Challenging what is, inspiring what could be. This is IMD. It's in our DNA. Curiosity, innovation, Swiss roots, global reach, an entrepreneurial spirit, a pioneering mindset. 75 years in the making, and a future still to be written. A birthplace of ideas, a legacy of world-renowned research, strategy and leadership that set the bar, cutting edge in a changing world, close ties with industry-leading businesses, transformative custom programs, and a champion of startups. A program offering that is consistently ranked among the top in the world, centers of excellence that lead the way, and an alumni network that continues to nurture and develop the leaders of tomorrow.
I really value the human network that he brought to me.
They have an incredible bandwidth of capabilities, knowledge, experience, and competencies.
I don't think I would have got as far as I have had it not been for IMD.
I was mesmerized.
The light bulbs went on for me.
I thought it would be a better balance between learning about capitalism, making money, but also doing good for society.
I don't think I could do what I'm doing today without actually having had this opportunity to participate in this course, and I'm still extremely thankful.
Probably one of the best investments I've ever made. It certainly helped accelerate my career.
It was one of the most life-changing experiences I ever had.
This is our DNA. This is our past, our present, and our future. This is IMD.
Almost 3 decades ago, like the proverbial sun, we ushered in a new start, a new day. What we did was momentous. We converted a trading activity into an investment movement, and an isolated regional market became a pan-India canvas. We are NSE, the stock exchange that changed the nation. We identified 3 clusters that would drive our markets and propel our nation. At the core is technology to ensure smooth and effortless trading in metros and across the nation. On every touch point and device, our technology is robust, dynamic, but always ahead of the curve. Retail or institutional, investors are our guiding light. We enable them with updated, credible information and filter out unwarranted noise and data. We are NSE, the stock exchange that changed investing. We constantly create new products, new services, and an empowering environment for investors to access a complete basket of asset classes. To complete the service basket, we redefined our footprint. We started in India, reaching every village and city, and then we went global because our investor of today wanted a worldview. And well, the world has turned its spotlight on India. Who better than us to aid this? India's window to the world. Our flagship index, the Nifty 50, is the defining symbol of India. We are NSE, the stock exchange that changed perceptions. There's more to us. Our financial literacy programs across schools, colleges, and professionals makes us amongst India's largest educational enterprises. Our CSR initiatives in child welfare, elder care, and hygiene cut across a large swathe of India. Our approach: transparency, governance, and efficiency. Our focus, India. Our canvas, the world. Our inspiration, our investor. In our world, the end of one day is the start of another. As a new decade dawns for NSE, a brighter one dawns for India. NSC, an investment called India. Almost 3 decades ago, like the proverbial sun, we ushered in a new start, a new day. What we did was momentous. We converted a trading activity into an investment movement, and an isolated regional market became a pan-India canvas. We are NSE, the stock exchange that changed the nation. We identified 3 clusters that would drive our markets and propel our nation. At the core is technology to ensure smooth and effortless trading in metros and across the nation, on every touch point and device. Our technology is robust, dynamic, but always ahead of the curve. Retail or institutional, investors are our guiding light. We enable them with updated, credible information and filter out unwarranted noise and data. We are NSE, the stock exchange that changed investing. We constantly create new products, new services, and an empowering environment for investors to access a complete basket of asset classes. To complete the service basket, we redefined our footprint. We started in India, reaching every village and city, and then we went global because our investor of today wanted a worldview. And well, the world has turned its spotlight on India. Who better than us to aid this? India's window to the world. Our flagship index, the Nifty 50, is the defining symbol of India. We are NSE, the stock exchange that changed perceptions. There's more to us. Our financial literacy programs across schools, colleges, and professionals makes us amongst India's largest educational enterprises. Our CSR initiatives in child welfare, elder care, and hygiene cut across a large swathe of India. Our approach, transparency, governance, and efficiency. Our focus, India. Our canvas, the world. Our inspiration, our investor. In our world, the end of one day is the start of another. As a new decade dawns for NSE, a brighter one dawns for India. NSE, an investment called India.
Challenging what is, inspiring what could be. This is IMD. It's in our DNA. Curiosity, innovation, Swiss roots, global reach, an entrepreneurial spirit, a pioneering mindset. 75 years in the making, and a future still to be written. A birthplace of ideas, a legacy of world-renowned research. Strategy and leadership that set the bar. Cutting edge in a changing world. Close ties with industry-leading businesses. Transformative custom programs and a champion of startups. A program offering that is consistently ranked among the top in the world. Centers of excellence that lead the way. And an alumni network that continues to nurture and develop the leaders of tomorrow.
I really value the human network that he brought to me.
They have an incredible bandwidth of capabilities, knowledge, experience, and competencies.
I don't think I would have got as far as I have had it not been for IMD.
I was mesmerized.
The light bulbs went on for me.
I thought it would be a better balance between learning about capitalism, making money, but also doing good for society.
I don't think I could do what I'm doing today without actually having had this opportunity to participate in this course, and I'm still extremely thankful.
Probably one of the best investments I've ever made. It certainly helped accelerate my career.
It was one of the most life-changing experiences I ever had.
This is our DNA. This is our past, our present, and our future. This is IMD.
Almost 3 decades ago, like the proverbial sun, we ushered in a new start, a new day. What we did was momentous. We converted a trading activity into an investment movement, and an isolated regional market became a pan-India canvas. We are NSE, the stock exchange that changed the nation. We identified 3 clusters that would drive our markets and propel our nation. At the core is technology to ensure smooth and effortless trading in metros and across the nation. On every touch point and device, our technology is robust, dynamic, but always ahead of the curve. Retail or institutional, investors are our guiding light. We enable them with updated, credible information and filter out unwarranted noise and data. We are NSE, the stock exchange that changed investing. We constantly create new products, new services, and an empowering environment for investors to access a complete basket of asset classes. To complete the service basket, we redefined our footprint. We started in India, reaching every village and city, and then we went global because our investor of today wanted a worldview. And well, the world has turned its spotlight on India. Who better than us to aid this? India's window to the world. Our flagship index, the Nifty 50, is the defining symbol of India. We are NSE, the stock exchange that changed perceptions. There's more to us. Our financial literacy programs across schools, colleges, and professionals makes us amongst India's largest educational enterprises. Our CSR initiatives in child welfare, elder care, and hygiene cut across a large swathe of India. Our approach, transparency, governance, and efficiency. Our focus, India. Our canvas, the world. Our inspiration, our investor. In our world, the end of one day is the start of another. As a new decade dawns for NSE, a brighter one dawns for India. NSC, an investment called India. Almost 3 decades ago, like the proverbial sun, we ushered in a new start, a new day. What we did was momentous. We converted a trading activity into an investment movement, and an isolated regional market became a pan-India canvas. We are NSE, the stock exchange that changed the nation. We identified 3 clusters that would drive our markets and propel our nation. At the core is technology to ensure smooth and effortless trading in metros and across the nation. On every touch point and device, our technology is robust, dynamic, but always ahead of the curve. Retail or institutional, investors are our guiding light. We enable them with updated, credible information and filter out unwarranted noise and data. We are NSE, the stock exchange that changed investing. We constantly create new products, new services, and an empowering environment for investors to access a complete basket of asset classes. To complete the service basket, we redefined our footprint. We started in India, reaching every village and city, and then we went global because our investor of today wanted a worldview. And well, the world has turned its spotlight on India. Who better than us to aid this? India's window to the world. Our flagship index, the Nifty 50, is the defining symbol of India. We are NSE, the stock exchange that changed perceptions. There's more to us. Our financial literacy programs across schools, colleges, and professionals makes us amongst India's largest educational enterprises. Our CSR initiatives in child welfare, elder care, and hygiene cut across a large swathe of India. Our approach, transparency, governance, and efficiency. Our focus, India. Our canvas, the world. Our inspiration, our investor. In our world, the end of one day is the start of another. As a new decade dawns for NSE, a brighter one dawns for India. NSE, an investment called India.
Challenging what is, inspiring what could be. This is IMD. It's in our DNA. Curiosity, innovation, Swiss roots, global reach, an entrepreneurial spirit, a pioneering mindset. 75 years in the making, and a future still to be written. A birthplace of ideas, a legacy of world-renowned research, strategy and leadership that set the bar, cutting edge in a changing world, close ties with industry-leading businesses, transformative custom programs, and a champion of startups. A program offering that is consistently ranked among the top in the world, centers of excellence that lead the way, and an alumni network that continues to nurture and develop the leaders of tomorrow.
I really value the human network that he brought to me.
They have an incredible bandwidth of capabilities, knowledge, experience, and competencies.
I don't think I would have got as far as I have had it not been for IMD.
I was mesmerized.
The light bulbs went on for me.
I thought it would be a better balance between learning about capitalism, making money, but also doing good for society.
I don't think I could do what I'm doing today without actually having had this opportunity to participate in this course, and I'm still extremely thankful.
Probably one of the best investments I've ever made. It certainly helped accelerate my career.
It was one of the most life-changing experiences I ever had.
This is our DNA. This is our past, our present, and our future. This is IMD.
Almost 3 decades ago, like the proverbial sun, we ushered in a new start, a new day. What we did was momentous. We converted a trading activity into an investment movement, and an isolated regional market became a pan-India canvas. We are NSE, the stock exchange that changed the nation. We identified 3 clusters that would drive our markets and propel our nation. At the core is technology to ensure smooth and effortless trading in metros and across the nation, on every touch point and device. Our technology is robust, dynamic, but always ahead of the curve. Retail or institutional, investors are our guiding light. We enable them with updated, credible information and filter out unwarranted noise and data. We are NSE, the stock exchange that changed investing. We constantly create new products, new services, and an empowering environment for investors to access a complete basket of asset classes. To complete the service basket, we redefined our footprint. We started in India, reaching every village and city, and then we went global because our investor of today wanted a worldview. And well, the world has turned its spotlight on India. Who better than us to aid this? India's window to the world. Our flagship index, the Nifty 50, is the defining symbol of India. We are NSE, the stock exchange that changed perceptions. There's more to us. Our financial literacy programs across schools, colleges, and professionals makes us amongst India's largest educational enterprises. Our CSR initiatives in child welfare, elder care, and hygiene cut across a large swathe of India. Our approach: transparency, governance, and efficiency. Our focus, India. Our canvas, the world. Our inspiration, our investor. In our world, the end of one day is the start of another. As a new decade dawns for NSE, a brighter one dawns for India. NSE, an investment called India. Almost 3 decades ago, like the proverbial sun, we ushered in a new start, a new day.
Ladies and gentlemen, extremely warm welcome to you all to the post-lunch session. This is the plenary session 12, and on the theme of transitioning to a digital economy with inclusion, the opportunity and the execution. We have a very esteemed panel today with us, and may I request you to please join me in inviting and welcoming our session chair, Mr. Rajat Dhawan, Senior Partner and India Managing Partner of McKinsey & Company, Ms. Pratibha Mahapatra, Vice President and Managing Director of Adobe India, Ms. Nicola Jan Piskorski, Professor Digital Strategy, Analytics and Innovation and Dean of IMD Asia and Oceania, Singapore. Mr. A. Damodaram, Distinguished Professor, ICRIER, Process Center for Internet and Digital Economy, Indian Council for Research in International Economic Relations, and Ms. Rinda Kapoor, Chief Executive Officer of Third Eye Tech. May I request you all to please give them a big hand in welcome. Ladies and gentlemen, the digital way of growth is a reality, and as more and more businesses and organizations adopt the digital methods of business, the challenge for governments is really to ensure that these opportunities and benefits to all parts of the society, and also to ensure orderly and equitable transformation of our economies. With these words, I will now invite Mr. Rajat Dhawan to make the opening remarks and also to moderate this session. Over to you.
Could we pop? Okay, mic is working. Welcome back, and it's wonderful to be amidst you. This is going to be a very inspiring session because I have great panelists next to me, but also what we are going to talk about is so fundamental to the macroeconomic growth of the country. It's the topic of digital that sits as the fundamental enabler to how the macroeconomic growth in the country could happen. And it also connects the threads back with inclusion, which will fundamentally, make sure that the growth that we go through in the next 2 or 3 decades as we become a developed country is all inclusive and it's sustainable over a long term. And the benefits of this growth indeed accrue to all sections of society. So it's going to be an inspiring session. It's a session that will talk about the possibilities of digital and how that should also be extended to inclusion goals. Before I go further, let me just very quickly introduce the entire panel, starting with myself. I lead McKinsey & Company in India, 27, 28 years with the firm. Have served clients across most of the continents. Also in the last decade, a lot around digital transformations because that is so fundamental to all the transformation journeys our clients are undertaking. And I can tell you that the power of digital, the transformative power of digital that we have seen is just amazing. It's just amazing. And if you blend it well with the human capital and the human power, I think the possibilities are limitless. Let me introduce our panelists, starting with Pratibha Mahapatra. She leads Adobe in India. She is the managing director of Adobe India. She is a long-time technologist and a practitioner in the space of disruptive technologies, 30 years of experience in this domain. And she is always, she has that clairvoyance to look ahead on how disruptive technologies could unleash growth and innovation. So we're going to benefit from her commentary as well today. Next to me is Professor Mishek, a distinguished professor of digital strategy, analytics, and innovation. Also a dean at IMD Asia. I think his history is that he was a long-time professor at Harvard Business School till about 2014, and then ever since he has been at IMD Switzerland, and he has a co-faculty role across both Switzerland as well as the Singapore campuses of IMD. We're going to benefit a lot from your commentary. Thanks, Professor. To my left, we have Vrinda Kapoor. She brings the entrepreneurial lens to this entire opportunity landscape that we're going to talk about today. She's and that too, by the way, she's a dual entrepreneur. She leads a fabulous semiconductor company that focuses on the sort of design and embedded software elements of the semicon. Also, she is an authority on how technology enables national security. And she runs that venture as well. So Vrinda, thank you so much for being with us. And then to round up a practitioner and an entrepreneur, we have an equal weight to the academia. And Professor Damodaran has been a long timer at IIM Bangalore. And upon retirement from IIM Bangalore, he's been at ICRARE over the last couple of years. And Professor drives, he's a distinguished professor of digital economy at the Indian Council for Research in International Economic Relations. So that's sort of the panel. What we would do is maybe I could begin with a few minutes of opening framing commentary, just to bring the context as well as the opportunity into the room. And then I'll invite maybe from that side each of our panelists to chime in with their 5-minute sharp insights and additions to the overall frame, and then we'll have a round of questions. We can also open the floor to the House. So, look, I will start by saying that, you know, India, I mean, there is no other answer for India in the next 25 years but to pursue sustainable and inclusive growth. There is a set of sustainability objectives, particularly around energy transitions. That is for another day. We'll come back to it. Inclusiveness is super important for the growth and its benefits to reach all sections of society, for inequity not to prevail. And the way to get to inclusive goals is primarily through job creation. So in our research, in McKinsey research that we did for India's century, we see 600 million new jobs that will get created in the next 25 years, of which 220 million jobs will be non-farm jobs. Non-farm jobs particularly important because farm productivity levels more or less remain in the same band, but non-farm jobs have a huge potential to lift up the productivity levels, and then the benefits of that, you know, through innovation or productivity growth start to come to various sections of society. So job creation is an important one. Participation in the labor force is an important attribute to inclusive goals as well. For example, we see that today only 20% of women participation happens in the workforce in India, could go up to as much as 50% by 2047. So there is a paradigm of sustainable and inclusive growth. Keep that on one hand. On the other hand, I mean, all of us know the transformative power of digital. The transformative power of digital is huge, and I mean the big factoids are that over the last decade, the digital side of the economy has grown 2.5 times faster than the analog side of the economy, right? And then, I mean, if you look ahead and parse through the growth in the next 2 decades, you would say that roughly 2/3 to 70% of the growth, incremental GDP growth, for example, India going from a 4 trillion economy to 20 to 25 trillion economy, 70% of that growth could come from digital enablement, digitally pivoted business models, digital at the backbone. And that growth and innovation is going to be fundamentally enabled by digital, right? So put that on the other hand, right, which is sustainable and inclusive growth objectives and digital as the powerhouse. Now, what's the link here? What's the thread here that connects the two? In a recent research paper that we wrote around G20, culmination of the G20 presidency for India, we defined a new concept on inclusiveness called empowerment line. We took the traditional definition of poverty line, which is $2.6 of income per day, but we said that is just barely enough to live, to subsist, and that's not good enough. You need to empower people. And that definition comes to around $12 of PPP per capita income per day. On a PPP basis, $12. We think that with that kind of enablement, people have a shot at social mobility. You know, they can send their kids to education and so on and so forth. They have a shot at social mobility. So if you were to define that empowerment line at $12 PPP, we said that over the next decade, India needs $5.5 trillion of funding to be able to get to this kind of an empowerment potential, or capturing this empowerment potential. And where is that $5.5 trillion of funding will come through? Good news is that if India continues to grow its GDP and the business growth and innovation happens, 80% of this gap could be fulfilled. So you see the connect between sustainable inclusive growth objectives, digital as an enabler of growth and innovation, and the fact that inclusion goals, 80% of them are actually answered here in the digitally enabled business growth and innovation. So that's sort of the frame for today. You know, pursue the full potential of digital so that the inclusion gains come. Full potential of digital is super important. Now, I'll just end my framing commentary by saying, what do I mean by full potential of digital? I would say 3 or 4 dimensions. Firstly, you see the digital consumption that has started to happen is still pretty much at the higher layers of pyramid. At the higher layers, upper layers of the pyramid. So 45 million people in India today are shopping online with roughly half of their wallet spent online, 45 million. The next 130, 140 million shop many times a year. And then there is another 100 million that has shopped at least once. So the second and the third layer that I just described is a good proxy for building engagement, digital engagement and stickiness that's happening. So they will come into much more of the spending. So the first aspect, first dimension of full potential of digital is how can we rapidly percolate the gains of digital consumption through the layers of the pyramid. Point number 1. Point number 2 is not just at the customer interface, but how do you go back into the value chain and get digital embedded to enable innovation through the value chain. You know, think of logistics tech, think of, cloud, migrating to cloud, cybersecurity. Think of energy efficiency that can come on the back of smart and digital metering, grid, etc. Think of Industry 4.0 that gets into, we believe, 12 to 15% efficiency enhancement, waste removal. And, similarly think about some of the hardware manufacturing, electronics, component value chain. So get fully into the value chain. That's, I would say, the second dimension of full potential. Third dimension of full potential, not just India for India, but India for the world. Is there a way we can really capture the $1 trillion SaaS opportunity? Electronics manufacturing and so on. Once we figure out the ecosystem to serve the Indian demand, is there a way to take that to serve the global demand based on shifting supply chains, right? So that's the third aspect of full potential of digital. And I would just end by saying the fourth dimension is really not just for consumption of products and services, but for enablement. For enablement and inclusion, be it payments, getting benefits transferred, getting access to the government stack of all the services that can come, right? That would be a great vision for full potential of digital, and I already made the case on how, if we were to do justice to this full potential, inclusion gains and a lion's share of the inclusion gains could accrue to the various sections of society. Thank you. With that, maybe I would turn over to Pratibha first and request her commentary to just add to this discourse.
Okay, thank you, Rajat. As Rajat mentioned, I have been in this industry for almost 3 decades now, basically helping organizations adopt tech. So 3 decades back when we said adopt tech, it was more about automating some processes or digitizing some processes. That's about it. It was clearly an enabler or just, a nudge to make things faster. From that to today, the same companies want digital as a revenue generator. We talked of our country's expectation of having 20% of GDP out of digital economy. The corporate sector, actually the companies want 20% of their revenues to come from digital channels. That's the shift. The CEOs are asking their CIOs and CMOs that, hey, you are no longer my IT provider or who's just providing the tools and systems to my teams, but create digital channels so that I get 20% of my business from digital channels. So that's how the corporate sector is shifting in what they want out of digital. I think the growth imperative is very clear. He's laid out the numbers. I think last few years, our digital growth is around 11%, neck to neck with China. So the growth is there, the speed is there, the expectations is quite clear. Just to sort of say digital economy. Now, what is digital economy and where is that opportunity, right? In the middle is the core digital companies. The companies who generate, process, and help store digital stuff, which is data or content, right? These are the software, the hardware companies, the telecom companies, or the companies who deal with digital services. So that's one opportunity area. Some of us, including me, the company I represent, are hardcore digital companies. The other set is the digital enabling companies, semiconductor companies. Semiconductor on its own is not a digital containing or creating, but it is enabling this digital company. So the enabling digital companies, the digital companies themselves, and then the enabled digital companies, the autonomous cars, all the tech that you see in your washing machines, that's also digital. So you might be from different industries, but there's a little bit of digital in everything that you do. And the contribution to this digital economy, the 20%, is contributed by all of you. So that's a context of where is this digital growth coming from in a corporate organizational lens. That's a second perspective. So how does it all come together? Of course, there is the full ecosystem which has to do the orchestration, because the driver of digital adoption is new technologies. The technology of 10 years back, 15 years back is not what is driving the digital. Today, when we talk of digital adoption, it's IoT, it is data, content, it's AI. So all of these are net new technologies. So why will companies create these technologies? What incentive are we giving them to create these technologies? So the entire ecosystem, starting from government policies to corporate sectors' core strategies, has to be aligned so that every organization is incented to bring digital into their corporate agenda, into their strategic lever. The startups are incented to work on inclusive technologies, digital technologies. It could be agri-tech, health tech, whatever it is, but the startup should be excited to do that. That's how the dots will connect. There has to be a policy of how all this digital work will work, because the workplace will change, and we are seeing that. So if we are going to become a society where instead of the brick and mortar economy, there is a digital economy, then the workplace norms, the workplace ideas and services, the education norms, is it aligned to this pivot to the digital economy? So those are areas where stuff needs to be done as well. And finally, because digital economy is coming in, there will be content and data, which is the basic feeders to digital economy. That's the, as we say, brick and mortar. it is content and data. So that's sort of the correlation as to what is creating that economy. So there has to be a holistic synchronization of all of that, so to say, to make this economy work. I'll take an example like my company, which is in the business of making digital experiences real. We have a clear philosophy of course we will do tech innovation, but more important that what our technology innovation big idea is, it's about what impact our technology is doing. And many of you might be aware, we create a lot of stuff around images, around documents. So the entire innovation of these products is governed by ethics teams. They ensure that whatever we do around new content generation is not biased. If pictures are coming up, and more with AI, we have actually an AI ethics committee which starts before the products are developed. The committee will sit and say, hey, what's the intent of this product development? What digitization are you intending to do? Where are you planning to use it? Will it be inclusive? And inclusive, like we have what we call the Acrobat PDF, we have something called liquid mode. So that for the reader who is reading disabled, there is a way the formats will change and there is the font size will change and it will become bigger so that it's inclusive. You're getting, so there is core philosophy of bringing in inclusiveness into the product development itself. And I'm giving a tech company, any company who is trying to do digital, if you're building a washing machine with tech enabled, are the knobs big enough? At night, is it lighted up? So you take those things into consideration as well. Will it consume X power or Y power so that it's sustainable? So that's where the entire corporate sector is moving towards. And I have personally seen this tech adoption go leaps and bounds. And today, of course, in every boardroom, there is how will Gen AI trigger my next level of digital adoption. So that's more or less on the corporate sector.
Thank you, Pratibha. Thanks for that commentary. And I think clearly you set the aspiration on how the digital ecosystem of core digital companies and digitally enabling companies come together to really drive digital adoption and how innovation gets fostered. And I think one of the things I would add is, when we looked at the top 10 digital properties where consumers tend to spend the time, think of Google search, think of WhatsApp or YouTube, etc. If you look at the top 10, 8 of them are global entities. There are only a couple like, I think, Glance and Hotstar were the only 2 in the top 10. And I think this is an implicit push from Pratibha to say, hey, how can we have more Indian origin properties that could really get to the global stage? Thank you. So with that, I will invite Professor Mishek with your opening notes.
Thank you. So I'm very grateful to my panelists beforehand for introducing the idea of digital economy and going so deeply into this, because I do want to introduce another economy, and it's called the AI economy. And the argument that I want to make is that the digital economy is something very different from the AI economy. And digital economy is something that we already know, we understand, we have great examples of successes, we have also many examples of spectacular failures, but it's sort of like a known thing. And then there is this alien technology, and I really think it's an alien technology because we don't really know how to deal with it yet, and I don't think our imagination is quite ready for it yet, and that is going to be the next level economy. So let me just give you some concrete examples. I, day in, day out, work with senior executives across the world at IMD when we help them develop better strategies and better implementation for their digital transformation strategies. And if you ask any of the leaders, what do I need for good transformation, they will say, oh, it's quite easy. You need to understand what the consumers do very well. You need to be able to do this at scale. You then need to help to go to Adobe to help you with some analytics and how to deliver this very efficiently in terms of better marketing, or you go to, as you mentioned, to companies that can help you improve your supply chain, or you go to another set of companies to say, here's the data I have that I've collected about my users, can you help me do better R&D with that? And so all of these are obviously quite difficult things, very time-consuming things, but I think we have quite a lot of imagination about how to do this. So it's sort of, by now, it's a question of catching up and just doing this right. And I think there's enough books written on this topic that, you know, if you just follow the right books, I think you will get it there. And, you know, there's always going to be issues around implementation, but by and large, I think we have a recipe for how to do this. And if we just follow this recipe, that's great. And my recommendation would be for India to maybe do this rather quickly, but also as you're doing this, as you're really thinking about catching up on the digital economy and maybe building some of these properties in the old world, so to speak. I can't believe I'm talking about digital as an old world. It's very, I find it very, very funny, but I've been doing research on digital for about 20 years now, so for me, it feels like an old world. Is how do you invest very, very quickly to understand what is possible or what might happen in the AI economy, bearing in mind that we only just started. I very often give conversations and talks and parts of conversations where people say, AI can't do this. And I said, yet. Because as you've seen, the speed of advancement, every week we have some new technology that's just been developed. Just a couple of days ago, Google released out of nowhere, nobody had any idea, you know, a new set of capabilities related to vision. And, you know, immediately 100 startups died because they were trying to do the same thing, right? And then 100 people had 100 new ideas for new startups. And so this technology is changing really, really fast. And we need to be very open-minded and be open for all the changes that are likely to happen, and to start developing imaginations for what's needed to implement them, but also what we can do with this. And I have to tell you, this is actually extremely difficult. So this summer, I decided to go to San Francisco for 5 weeks. I used to do a lot of my research in San Francisco, so I decided to go and reheat all of my old contacts and say, guys, can you please help me understand what's going on? Because I'm not in Silicon Valley. It's sometimes a little bit hard to understand some excruciating details of the AI technology. So I went there for 5 weeks. And my first set of meetings before I was meeting with the software engineers were with venture capitalists. And these were venture capitalists from very, very renowned companies. So I asked them, what do you guys invest in? And, you know, they were getting me a little bit of a strange answer. I was like, what's going on? Like, just tell me what's your investment thesis? And they pulled me to the side and they say, please don't share it with anybody. So I'm not sharing this with you, okay? You've never heard this from me. But we don't know. So very, very accomplished venture capitalists in Silicon Valley still don't know what to invest in because the technology is changing so fast. So if they don't understand it and they actually dealing with a lot of money, you know, where does this leave us? Well, I think it leaves us in a position where we have to acknowledge that it is difficult and we have to just put a lot of effort. And as I said, thank God for ChatGPT because it at least brought it closer to our imagination. We can now experiment with it, now can play with it. We can see how it might work. But even now, ChatGPT has developed so much that most users use only a small proportion of its functionalities and don't therefore understand what's going on. So this is going to be quite a ride. The one thing that where I can recommend to you is as follows. As you invest in understanding more about what this technology is doing, and as you continue to try and experiment it, so if you don't experiment it with it on an everyday basis, I literally waste an hour of every day of my life, and I really call it waste, to try and solve some problem that I'm facing with AI, and of course, most of the time it doesn't work, right? So then I said, I'm not doing this correctly, but in the process, I'm really learning to see what it's really capable of. Another thing you can do, and that's something that you can start thinking about in your organizations, is to really start thinking about what is the new oil for these AI problems. And remember, we used to call data was the new oil, right? And it's still data, but now it's something different. And that something different is what we call corpus. And corpus is still data, but it's very different data, because data, usually the way we've been thinking about it, has been relatively well structured. These were records of customers, like records of interactions with customers and so forth. Corpus is much bigger. Corpus encompasses all sorts of data, which we normally call unstructured data, so things that we normally don't think about as data, which are data. So, for example, everything that is written in your organization becomes corpus of information that can be used by AI. Everything that happens physically, all the images of that action that happens in your organization, videos, sounds, all of these kinds of interactions become corpus of data. All of these things that have been previously impossible to analyze at scale and reliably are now part of what is considered to be data. So that was my third request for you. As you imagine this AI economy, first, are you experimenting with it enough to test it out? And second, are you sort of letting go of some of the existing conceptions of what data is? Are you thinking about it more broadly? Because once you start doing these two things, you might be able to start converting things into your economy. And I really hope that with all the technological prowess that you see in India, I think there is a huge opportunity to jump that, but you have to start doing this rather quickly. So we're going to continue on this. Hopefully, we'll pick up some of the AI topics and distinguish it from the digital economy.
Thank you, Professor Mishek. Thanks for putting the spotlight on the potential from AI of every kind, prescriptive AI, generative AI, and also calling it out that it is India's opportunity to take a lead in this and create some AI-backed digital properties. I think this framing of corpus is an important one, because what was ignored earlier, which was every form of unstructured data or stimuli, could now be put into the machine from a learning perspective. Also, it was a bit scary to hear the Darwinian reference of 100 startups died the day some big announcement happened from Google. But I presume those are the rules of the game in this venture creation phenomenon. So we'll leave with that. Thank you. I think with that, we turn over to Rinda. Rinda, your commentary, much more from an entrepreneurial lens. That would be wonderful.
Thank you, Rajat. And I thank my fellow panelists for actually setting a fantastic context to what I'm about to say. So I will deviate slightly from the context of the conversation, because I think that being a very large part of being entrepreneurial in a very saturated tech environment is also to be provocative. So I'll start with two provocative anecdotes that I think are both topical, but I find personally very fascinating. So one of the most interesting innovations of our times has been what the private space economy has unleashed, right? And one of the pioneers in that was Elon Musk. And there was one particular aspect of his thinking that changed the rules of the game. It was that a rocket motor for a spacecraft costs $100,000, whereas a similarly powerful motor in a vehicle costs $3,000. And he said that this dichotomy makes no sense. So he went into great detail to figure out how to drive down those costs. In fact, a big part of that was that the supply chain was controlled by a few key companies who, because of an artificial monopoly, because of a military checklist, were able to really drive up that cost. So he told his team that treat this checklist as prescriptive, as not prescriptive, right? And find a way to reduce the cost, and they did. They brought that cost down to $3,500, and that changed the commercial space industry, which changed what connectivity looks like, which further changes what digital economies can enable. And the second was he used his lens in space to redefine how a Tesla car was created. For those who have seen the Tesla vehicle, it doesn't have external handles on the car, right? It has this embedded internal handle on the car that pushes to open. That one simple change was able to drastically increase the energy optimization because of a fluid dynamic change in design, which led to a shrinking of the battery pack, which made the entire vehicle viable. So two very interesting cross-utilization of knowledge by an individual, where he took a philosophical approach to what is really going to drive change in this technological era. So I think that when we think about inclusion, we first need to define the lens in which we think about inclusion. Obviously, there's the role and the benefits of the marginalized parts of our society, and that's an important driver of how we are able to deliver value to them. But who catalyzes innovation? How are we including all of the important players that catalyze innovation in this conversation? And the second is, how do we create incremental benefit from it? So when we think about innovation, and I think that Pratibha alluded to it, we really need to think about the role of two pieces of technology. AI, of course, and that's for granted, but also semiconductors. Semiconductors are the way we sense our world and capture data, the way we use or compute our data, and the way we transport both data and insights in the communication layer. And each of these, there is a series of disruptions happening across each of these layers, both on the hardware and the software side. And that's something that we need to rapidly make larger investments in from the India perspective, right? There is a lot of adoption of that technology, but very little innovation in that technology going on domestically. And that's an area where we need to include corporate India in the R&D and startup ecosystem to fuel that growth. So that's the first part. The second part is the cycles of innovation. As one of the largest consumers of the digital economy, India needs to think about its relative position in the disruption, the innovation, and the adoption. And there we need to rethink how we think about, there we need to rethink the entire investment cycle. It takes 8 to 10 years to develop technology. OpenAI was created by 8 to 10 years of billions of dollars of research before ChatGPT became available and disrupted our worlds. So India needs to think about including itself more, embedding itself more, 8 to 10 years before these technologies become commonplace. And there we need corporate India to play a larger role or to be included in a larger role in what the technologies of the future are going to be. Not just in the adoption of the technology and the proliferation of the technology once it becomes more mainstream. There are two risks for India in this entire cycle. We need to think very strongly about the geopolitical risks and what that means for the localization of technology in our country. Because until we localize technology, all of the gains of the digital transformation are going to be controlled by somebody else, and we are going to get a very small part of that pie. And the second thing is the human capital. We run short very fast of the skilled human talent that we need to grow and scale these parts of our economy. So with that, I think I'm done, and thank you.
Thank you, Vrinda, for bringing out both the need to pursue disruptive innovation and also talking through what you call the cycle of innovation, which is a long gestation cycle with front-loaded funding and so on. I will come back to you, maybe in the question-answer session. I'd love to get your perspective on any government reforms or any enablement that is to be done to get these cycles of innovation going in India. But first, I think we must hear from Professor Damodaran. It would be wonderful to get your opening notes. Thank you.
Actually, when you were all talking and when the meeting started, I was reflecting on my predicament. Last two meetings on digital economy, I have always been seated to the left of the chairman. And I end up talking about digital divide all the time. I don't know whether it was a coincidence or whether it was just a deliberate thing. But I should tell you that I will pick up from where Rajat left. In his opening remarks. I will try to highlight the trend in the Indian economy, which is very interesting, and that trend is like this. We are, as we know, the fastest growing telecom network one of the fastest growing telecom network in the world. Internet, we have a fairly 50 to 60% penetration. We hope to almost hit universal coverage by another 10 or 20 or another 3 or 4 years. So given all that, I have been doing some data analysis of how the multiplier effects pan out. So what is happening in India is there are some sectors which are showing lots of promise based on the propellants given by telecom and internet. And those sectors are fourfold. The first sector is obviously digital payment. We are very famous in the world for that. We are second in the world. But leave aside digital payment, we are going to make it big once that the internet coverage goes up from 50 to 100%. Definitely it is going to improve. The second point is exactly the point which we have to be really taking note of. And that point is related to the two other sectors which are going to really benefit from the digital economy. One is education, and the other is health. And the third one, I will come to it, unorganized sector, especially the small retail establishments which are getting digitized. So you will call mom and pop stores in Europe, but here we call it kirana, that common word. It's getting digitized. So all the three opportunities that we are talking about are basically promising percolation effects, which Rajat mentioned. These sectors, if you start digitizing, I'm not saying it's an automatic solution to all the problems. You will find wonderful effects coming from India in terms of percolation. Let me give you an example. I have been working on education sector, school education sector, for the last 6 months. And I have now been able to track the data of northeast states where the internet coverage is good, the broadband quality is good. Private schools have taken to basically AI, ChatGPT, in a big way on the learning side, learner's side, not on the teacher's side, right? There's a lag between the two. And the most interesting thing is it goes with blended learning, which means from now onwards, even small schools in remote areas are thinking of having not just classroom lectures, but also having virtual exposés. So that means a lot. That means that blended learning is going to create infinite opportunities for learning and spread of education in new ways in the most remote and disadvantaged areas of India. So that is one strong point that I see. The other thing is, most of these northeastern states, Mizoram, I have been to Mizoram many times, not in recent times, but I have my friends in Mizoram. They tell me that education is opening up. They're aware of what is happening in ChatGPT. They're looking forward to generative AI because they are low resource language speakers. They have a high resource language handicap. In other words, they are not very familiar with English. So today morning we had that presentation of simultaneous translation, but with generative AI, we are going to have a big change in terms of education levels of these schools. Let the internet reach there, quality internet reach there, it will happen. The other sector is health. Health, something which is very interesting, which has happened, again, because of the government policies in recent time, is Indian systems of medicine are coming up. And that is going with the traditional modern medicine. So there's a hybrid of solutions now being offered to a normal customer in a primary health center, right? That is a possibility. That's a deep percolation. Primary health centers are notorious in India for their non-performance. But with this, things may change. Again, how do you make the choice? It is AI at work. So that is the second. Third is the kirana stores or mom and pop stores, which are getting digitized. Huge opportunities in SaaS, particularly software as service. It is being opened. Currently, corporates are funding them. It is going to catch up in a big way. Consumer household data will be more accurately available, and you know where to plug the problems. So these are huge, socially distributive kind of advantages that I can see happening. And then what I think Brinda mentioned about the semiconductor thing, the semiconductor supply chains and others complement all these changes. So this is the way I look at it. And one more point before I get to the end of my opening remark. The most interesting part is, now I have a few of my friends in this audience. India is the 13th largest data center market in the world. And we are going to come in the first 5, the way we are going. And it is funded by Indian corporates, right? Most of these hubs are funded by Indian corporates. Now, this creates newer opportunities for cloud formations by smaller companies, mid-sized companies in India. They would like to borrow the space, the data storage space of these joints for storing the data. That means it's a big push given to data-based companies in India and new enterprises in India. Mostly mid-sized, I wouldn't say small-sized, but that is how it will be. So all this opens a phenomenal possibility. And governance systems are happening. They could have been better in some ways. I hope some of the rules and regulations get plugged, and I'll come to it later.
Thank you. Thank you, Professor. You beautifully broadened the dialogue along three other impact dimensions, including education and science-based solutions, and finally, of course, on the unorganized sector, MSMEs who could be enabled. So that's wonderful addition. Perhaps at this point, we could just, there are a few questions that we could pose to the panelists, but please also, at any point in time, raise your hand if you have some question to any of the panelists. There are already 2 hands, so which is wonderful. So by the time the mic goes there, yeah, why not?
So actually, I have 2 questions. First one is to Vrinda and Professor Damodaran. When we look at innovation, the interaction between industry and academia is really, where the spark arises, and we've seen this across US, Europe. So, as representatives of industry and academia, what are your thoughts in terms of what more India needs to do to get the two together and really kickstart that process? And then the second part is, we've heard a lot about ONDC, Open Network Digital Commerce. So what's your take on where do we stand on that journey, and how do you see that, becoming more mainstream and disruptive in India?
I'd request the panelists to keep the answers very short and sharp so that we can have a breadth of questions.
I think let me start off with where Professor Pisorsky left. He mentioned about the significance of the difference between digital economy and AI economy. And I would draw another difference, that is the digital economy is different from the data economy. You know why I feel that way? Because in the Indian context, data is something which Indian academic institutions are not very, naturally attuned to processing. So what I say is after the digital economy, and perhaps with this Indian National Data Sets program, we will get much more data available for research. And this data is very operational and applied, and it will be real-time data. Now, you have asked me a very interesting question about ONDC. ONDC, the advantage that ONDC has as compared to the conventional legacy databases India has, starting from National Sample Survey, Consumer Survey, and all that. They are not real-time. ONDC is real-time. So if we start harvesting the ONDC data, you will see a phenomenal result. And that phenomenal result is, something very interesting. Kirana stores in a city like Bangalore, which I used to survey during the pandemic period, they could know every customer by his name and his bank balance. They knew it, right? It's personal data, so it should not be revealed. But the mapping of that knowledge to the consumer expenditure data, which is maintained by NSS, was never happening. Now with the AI and the ONDC coming together, there could be a merger of databases. In which case, we will be able to understand as good as a Swiggy or an Amazon as to which consumer is behaving in what way without compromising on privacy.
Thank you.
So that's a great opportunity ahead.
So on that academia innovation complex, first we need to think about startups and their role in the innovation economy in 2 parts. The first is the app-based economy, which means that we license technology and we build products. So that is where we see a lot of growth happening in India. The second is where startups build technology. There is a concept called a technology readiness level. So academia typically comes in to invent technology readiness level 1 to 2, maybe 3. Startups come in to bridge that gap, technology readiness level 3 to 6. And corporates come in to take that technology to scale, TRL 6 through 9. That's typically what we see in the West. That's typically how Europe has operated. That bridge hasn't been plugged in India. I think we're starting to see that bridge getting created now, with the advent of deep tech startups. So Stanford University, Cambridge University, they have seeded a lot of technology companies around those areas. ARM, the semiconductor giant, is a great example of that, right? Spun out of Cambridge, and look at the value today. But that's the continuum that we need to see here.
Thank you. Thank you. There's a second question here.
Yeah, covering the areas of digital economy, data governance, semiconductor inclusiveness, how you foresee the role of knowledge industry in the enhancement of digital economy, capturing the innovative inclusiveness for inclusion gain?
And could you just say knowledge economy, could you just specify that?
Knowledge economy, nothing but under the knowledge economy we have the knowledge industry, but it's an embedded form of technology and knowledge.
Okay.
When we derive the knowledge derivatives, this comes the digital economy, the innovations, etc.
Professor Mishek and then maybe Pratibha. Yeah.
Yeah. I mean, there's different ways of defining knowledge economy. It's a very broad term, so let me kind of narrow it down. And maybe narrow it down to the industry that two of us represent on this panel, which is the education industry. I think what you're going to see in the education industry is a tremendous amount of change for inclusiveness, because as much as we've made universities and access to higher education more inclusive, there's still massive differences in access. And partly that's because of our teaching models, right? They're still very much based on faculty talking, faculty teaching. And if you go back to the concept of AI economy, you can imagine a brand new set of universities that have as little as possible with human teachers. And then all of a sudden, you come up with different models that could be as good as, or maybe even better than what universities offer. And how do you do that? Well, you harvest what's in best faculty's heads, you put them into advanced models, which quite honestly already exist. And you can actually start rolling out this education at a very advanced level to everybody. And by everybody, I actually mean inclusiveness across all dimensions. So the first one that comes to mind is obviously economic, but also geographic. We know that, if you go to certain parts of India or to certain parts of Asia writ large, access to education is still quite poor. But you can also start thinking about education across different age groups. We largely forget people in the 50s and 60s when it comes to education, and they're probably as worthy of education, if not more, than young people, right? So again, I think what you're going to see, and this is why I sort of talk always about AI economy as a big disruptor to just about anything that we've seen before, because again, in the past, the only way we knew how to do knowledge economy is to either, be very specific in one-to-one conversations, or very broad and very undifferentiated, and then we could scale up. And I think what the new technologies are giving us is this ability to interact, ability to measure what you need to learn, how we deliver the knowledge to you that's relevant to you in real time, in ways that we were not able to do beforehand. So I see massive, massive changes coming up.
Yeah, in the context of India, knowledge workers, we've been taking pride with the software services industries and so many engineers. It's time to act now, because it's no longer geography, chemistry, civics, which is the subjects. I think the subjects in school which has to be taught in very, very early days is interpretation of data. Not really mathematics, algebra, but interpretation of data. All of that. But if you're not familiar or comfortable with interpretation of data, maybe prompt engineering, right? You understand, you learn different languages, but possibly how to write right prompts will become important. And of course, multilingual, which India's no economy is going to flourish unless you do multilingual. So that is, again, paramount. So I guess for knowledge workers, it starts with education. The current way of education, we are talking of our education policies being rewritten, the courses being rewritten, but we are going slow. We have to really hasten up. Otherwise, there's one wave which will come, like till last year we were saying it, Google it, now we're saying ChatGPT it. I don't know what next year it will be. So the obsolescence rate is so high. Unfortunately, our education, the way we teach, how we teach, how we learn is completely not keeping pace. So, time to act.
I'm Arvinder Brara of Mentech Consultants. I want to express regarding the dangers of AI. You know, AI may impact on the fundamental knowledge of children, of students. So how do we make sure that before they get to start using, you know, these advanced techniques of AI and ChatGPT, etc., that they are also made necessarily knowledgeable about the fundamental aspects of mathematics and stuff, so that without these tools they can still operate. Like these days now, without a calculator, some people just can't operate. So my question is, how do we tackle this?
It's about the ethics around particularly Gen AI. Yeah, Professor, and then Pratibha.
It's like, I mean, mathematics was there and the calculator was there. I know when we were in engineering, till second year we were not allowed to take calculators, but then third year the functional calculators you could carry, because people said understanding the philosophy behind certain thermodynamics equations or certain formulae in others was more important than being who is the fastest finger first in solving a mathematical equation. So I guess the shift is happening. Core concepts needs to continue, because if people don't understand what is gravity and what do you mean by heat converting to other energies, then we have a big problem at hand. So when I was mentioning the course curriculum needs to change, I think some of the fundamental chapters, fundamental building blocks of education need to be there. But the middle ones, you know, learning a lot of history and a lot of fast equation solving, we can jump up. So fundamentals, and then the level 2, level 3 is the shift I'm seeing. Fundamentals cannot change and should not change.
Yeah, so of course there's an institutional set of things that need to be done to safeguard the ethics. But I want to give a very personal answer to this. You know, I have 2 kids, a 5-year-old and a 7-year-old, and you know, a couple of years ago I was teaching them how to ride a bike. And now I have a 7-year-old daughter with whom I also spend half an hour a day actually going through AI. And so I learn and she learns, and we learn it together. Because I think it's way too easy to kind of impose our views on what you should be doing and we should not be doing. But I think it's actually our responsibility to sit with them and work on these things together. And we haven't advanced to ChatGPT yet. We're still working with Midjourney, which creates beautiful pictures, but we're learning prompt engineering together. And you know, and it's great because she's learning about what's possible, what's not possible. And you know, as you would expect, she's already 10 times more clever than I am in actually doing these things. So, you know, I was teaching her, and now I think she's teaching me how to do these things. So I think that's the other component that's really important.
No, that's very interesting. In the interest of time, what we will do is maybe I'll pose one question on behalf of the very engaged audience, one last question to the panel, because I think that's an absolutely critical piece of the jigsaw if you have to capture the full potential of digital as a country, which is around upskilling and reskilling the human capital. So I'd love to get some very, very sharp reactions in terms of what India must do to upgrade its human capital, particularly to capture the full potential of digital and AI. And we know that, look, 1 in 5 in the workforce by 2042 globally will be an Indian. And if 70% of that economy is powered by digital, we better start to race hard today to upskill our human capital. So maybe this side of the room, and any concluding comments on this.
Well, a very quick reaction, as you wanted. Have ChatGPT introduced in schools with human supervision.
Actually, that's a great format. So 1 or 2 ideas, very sharp ideas. Have ChatGPT get introduced in the schools. Vinda? With human supervision.
I think the one missing gap in India is thinkers. Our education system is very rigid, it's very rigorous, but it also kills the ability to think. To take one step quickly back, The 5 nanometer semiconductor technology enabled the GPU, enabled machine learning, enabled large language models. And today we have, last week, an Indian company building large language models for regional languages came up. So we need to be able to understand the journey. For that, we need to be able to think from philosophy to ethics to mathematics to code. That's a missing aspect that we need to close as a loop.
Thank you. My very specific idea is continue to drive investments in this, because the founding OEMs in any cluster would then draw in the entire ecosystem of talent, and then they also enable to upskill the talent. That is what we have seen that happened in the tech services industry 30, 40 years ago. It can absolutely again happen in digital and AI.
My idea is very similar to what you brought up around just the spirit of inquisitiveness. I really loved your 2 examples that you gave about like, why is this so expensive? Can we make it, 10% of what it was? And you guys are all aware with the very, very famous Indian innovation. So people here excel at this. How do we take it to everything? I really think that the inquisitiveness is going to help.
I think we should have some we should be fanatic about being the leader in digital economy as we are fanatic about cricket, right? I guess if every home believes that, how do we get digital? What am I studying? What am I doing? How am I adopting? It's as fundamental as that, because digital is going to become fundamental. It has become fundamental of how we live, how we entertain, how we shop, and obviously how we educate ourselves. So it has to be that fundamental and at every grassroots level.
Thank you so much. And with that, we come to the end of this very engaging session. Please give a round of applause to our esteemed panelists, Pratibha, Professor Mishek, Brinda, and Professor Damodaran. Thank you so much, and enjoy your day.
Thank you, speakers, for your interesting thoughts on transitioning to a digital economy with inclusion. May I request Session Chair, Mr. Rajat Dhawan, to please do the honors of presenting the mementos. Firstly to Ms. Pratibha Mahapatra. The next one to Mr. Mikołaj Jan Piskorski. To Mr. A. Damodaran. And to Ms. Rinda Kapoor. If I may request Ms. Pratibha Mahapatra to do the honors in presenting the CII memento to Mr. Rajat Dhawan. With that, we conclude this very interesting and fulfilling session. We will now move on to our next session, which is the plenary session 13. And requesting everybody to kindly remain with us while we make the necessary changes in the table arrangements. Ladies and gentlemen, extending a very warm welcome to our plenary session 13, which is on strategizing India's prosperity, the role of our states. I'd like to take this opportunity to extend a very warm welcome to all our eminent speakers for this session. Mr. N.K. Singh, who's the co-convener of G20 Independent Expert Group on Reforms in Multilateral Development Banks and President of Institute of Economic Growth and Chairman of the 15th Finance Commission, Government of India. We are told that he is likely to join us during the course of the session. Mr. Anand Mohan Sharan, Additional Chief Secretary, Industries and Commerce and Information Technology, Electronics and Communication, as well as Higher Education from Government of Haryana. Mr. Ajay Seth, Secretary, Department of Economic Affairs, Ministry of Finance, Government of India. Mr. Hemant Sharma, Chairman of IPCOL, which is the Investment Promotion and Investment Corporation of Odisha. He is also the Principal Secretary in the Department of Industries in the Government of Odisha, and he's also going to join us during the course of this session. Our session chairperson, Mr. Raj Chengappa, who's the Editorial Director Publishing from the India Today Group. May I request you all to once again join me in extending a very warm welcome to eminent speakers on stage for this session. Ladies and gentlemen, the Indian states are the key movers of India's economic growth and development. The state governments have undertaken partnership roles through various proactive engagements with private sector to bolster social welfare, spur the manufacturing sector and strengthen the agricultural sector and other key sectors like exports, health, education, etc. to achieve overall prosperity. Our speakers will be delving on these particular issues, and without any further ado, I would like to now hand it over and request our session chair, Mr. Raj Chengappa, to kindly make his opening remarks and moderate this session. Over to you.
Good afternoon, everyone, and thank you very much. We have a very interesting session here, and of course, we'll have to do with waiting for two of them to come. Unfortunately, held up by traffic, and that's Mr. N.K. Singh, co-convener, G20 Independent Expert Group on Reforms and Multilateral Development Banks. He's got a long, long designation. Chairman, most important chairman, 15th Finance Commission, and of course, a former distinguished secretary to government. With me also is Ajay Seth, the Secretary, Department of Economic Affairs. If you saw him in G20, did brilliantly with our negotiations. And of course, there is my friend, Anand Mohan Sharan, who's Additional Chief Secretary, Industries and Commerce for Haryana, apart from the other designations that we have. Oh, we just have Mr. N.K. Singh here. I was about to pop up the question to our gentleman here, but we'll wait for half a minute. I think Mr. N.K. Singh is here. So let's give Mr. N.K. Singh a warm round of applause. So we just kicked off with this, just the introduction. But since Mr. N.K. Singh is here, so maybe you could kick off the discussions with some opening remarks if you'd like to, or if you'd like to make a presentation if you come with it. But preferably if you can get a few points in, looking at center-state relations. You handle the 15th Finance Commission, some of the big issues that you had to deal with, the controversies that had arisen, and how you see some of the key things in terms of either cooperative federalism, competitive federalism, given the fact that the correlation is very clear. If the states don't develop, the center will not. You cannot have growth at the center without the states contributing their might to it. And the other aspects of it is in terms of the equity aspects. There's a lot, since I come from the South, there's been a lot of heartburn where good states that perform well are not rewarded in many ways, whereas states that are laggards seem to get a lot of the funds and finances. The other aspects, of course, is to look at how we can develop interstate relations. There's a lot of competition going on, which is good, but are we competing for the same resources? Can we do things that in many ways states complement each other like countries would do in terms of how they run their businesses, run their industry? And of course, let's come to the more contentious issues in terms of welfare, the state's welfare programs, whether the center's welfare programs, where do they meet? We have seen in recent times the increase in the amount of freebies that have come out. We've seen the recent elections in terms of all the SOPs that have been offered, with every political party wanting to give more. Where does that leave our finances? So with these broad strands that are there, Dr. Singh, could you throw a few points, maybe for about 5-7 minutes, as to what you see are the key issues between center, state, and where we need to go, and then we'll get the other panelists in. So.
Well, thank you very much, Raj. First of all, let me apologize that we're a little behind time, and really there's no reason why I should have been late. So, don't want to keep the other two very eminent panelists waiting. Let's make a few broad observations. First, on a lighter vein, as I began to prepare for this session of yours today, Raj, I asked myself the question, which I've often been asked in multiple ways, pertaining to my own state from where I come from.
Tell them where? Bihar?
The state from Bihar, or the state of Bihar. When two questions I could not answer. One question which was often popped to me, Raj, was that all over the world, particularly and in India, of course, Biharis invariably do well, but Bihar does very badly. So how do you explain the enigma of flourishing Biharis with languishing Bihar? So that's one question that I started wondering. The second question, which perhaps I think that I mentioned to Secretary Economic Affairs in a lighter vein, that as part of the Finance Commission responsibilities, when I visited the state of Kerala, the then Finance Minister of Kerala, Mr. Thomas, who's an eminent economist in his own right, he asked me the question, Raj, that, it's very nice, Kerala's economy is doing very well, or comparatively better than many other economies, but the fact remains that people from Bihar are coming here, they are upsetting my social and economic equilibrium, because first they come as laborers, then they begin to do some activity here, then they bring their families, they multiply here, and what do I do? So, of course, to him I replied by saying, that, look here, if you decide to export all your labor force to the Middle East, and you get a huge amount of remittance income as part of the circular economy, and you have to import more competitive costs from labor from other parts of India, you are better off at the end in terms of welfare maximization, which raises the first issue, the importance of migration, migratory income, and the economic and social hazards of migration. Is migration a challenge? Is migration an opportunity?
Excellent.
And now I think that I was trying to look at some time series data. I find that intrastate migration in India, the remittance emanating from intrastate migration every year was around 110,000 crores per annum in a data which is as old as 1516. So add to that, it's a very large migratory income. So the first issue that came to my mind was the issue of migration. The second issue that came to my mind, that clearly incomes alone do not result in congruence of growth trends. Growth trends in Maharashtra, growth trends in Gujarat are significantly higher than growth trends, let's say, in Bihar, UP, and Rajasthan. Is it because of the fact, well, growth we know, it doesn't require too much of an economic genius, is a function of investment, total factor productivity, the productivity of land, capital, and so on and so forth. That doesn't require too much. But is it on account of resources? Is it on account of investment choices?
Yeah.
What is it that leads to growth divergences instead of congruence of states? And would additionality of resources really result in that? Therefore, you asked me the question of one of the challenges of the Finance Commission, and that was this, that what should be the basis in which resources should be distributed between and among the states.
Right.
Having arrived at whatever is the divisible pool of resources, what should be the criteria? Should population be a criteria? Clearly, resources are meant to look to the needs of people who live there. Clearly, a populous state like, let's say, UP or Bihar, if it has more people, it will need more infrastructure, more schools, more colleges, more healthcare facilities. That's one way of looking at it. Well, what about the challenge of states who have very consistently, through investment in girl-child education, through other parameters, taken steps to manage their demography better? How do you reward them for demographic management without denying the fact that resources legitimately must go to meet the needs of the human? So this is one important conundrum. The third issue which I want to raise, and this is really strictly in the domain of Secretary of Economic Affairs, and I think that he's best equipped to answer, is, you know, this morning when I opened my newspapers, I found that the centerpiece article in the Times of India today had been written by my good friend Dr. Arvind Pangarhia, and this is on the Rajasthan elections and what has happened in Rajasthan. You know, I was very frankly appalled to read that on account of the fiscal profligacy being pursued by the state of Rajasthan, it was always a difficult state, and the reason for that is something that I just mentioned per se. But I was appalled to see that notwithstanding the very large revenue deficit grants which the 15th Finance Commission gave to the Rajasthan, its debt to GDP ratio now has deteriorated to really close to around 38 to 39%. Now, really speaking, if you really begin to apply the rigors of the targets in the Fiscal Responsibility Management Act, as amended in 2017 by Parliament, it should be heading towards 22 to 23. Right. So what does one do to manage or help in the management of finances of states in a manner where macroeconomic stability is ensured? Would it be that the rigors with which Article 2933 of the Constitution is being used for purposes of adherence to the subjects for which the borrowing should have been undertaken is not being enforced in a manner which is rigorous enough? Or is it that the fact that there is a bailout provision of all borrowings ultimately upon the Consolidated Fund of India, as far as the states are concerned, upon the Consolidated Fund of the state, that is a comfort enough where those who contract borrowing do not ever hesitate to not worry about the cost of borrowing, and those who lend are assured by the fact that there will not be ever a sub-national bankruptcy. And is that an infirmity in which the market discipline of rewarding the prudent and penalizing the profligate, that factor does not infiltrate to the states? Final comment. As you go forward, Raj, I think one of the big challenges which awaits us is a challenge, two challenges. How does one harness technology and nascent technology, artificial intelligence in multiple ways which we are shaping? How does one harness that in a manner which is growth multiplier? And how does one do it in a manner which is also consistent with the environmental obligations which are inescapable? One great advantage of India, they tell me, is that India is in a very advantageous position that the bulk of India's investments in infrastructure has yet to take place. And therefore, India has a great latitude in selecting the technology and technology choices by selecting technologies which are which leave less of an impact on fossil fuel versus technology which are more and more environmentally friendly. And this, if India has this option, states have a bigger option. The bulk of the investment in states which have lagged behind the national averages enables those states to have those choices which are based on environmentally friendly technologies, and would they exercise that choice more prudently? So these are some thoughts come to me because I do believe that at the end of the day, there is no substitute to growth. There is no substitute to macroeconomic stability. There is no substitute to inherently following policies which allow investor confidence to be reinforced and which will enable private investment to take place in a manner when it can really act as a multiplier along with public outlays.
Thank you. Thank you, Dr. Singh. And I think you made several relevant points. And if you look at some of the key issues, one is migration and the income that it comes. And of course, you have the other issue of states objecting, the son of the soil kind of phenomenon that's happening. Haryana, I think, tried to impose it, but without much success. And we've seen some of the protests that have happened in other states. So how do you balance that? Use the resources, skill resources that come in, as well keep the sentiments within the state also on an equitable plane. The second thing I think you talked about is allocation of resources. And how does one work out, and you said, in terms of rewarding those that do well and punishing, or not punishing, constraining those that are profligate. And that comes to the business of fiscal profligacy that you talked about. And finally, technology and the absorption and whether, how does one enable? And I think, Ajay, this is a good point for you to come in, because the center has a bouquet of various welfare schemes. It expects the states to kick in terms of the resources that are there. Also, you know, in the sectoral allocations that you'd like to make, what can be, how much more can we improve the system? You've now been handling it, you know, and you've also looked at an international perspective recently with the G20. Where do you see the 3 or 4 big things that you would say as reform that you think the states and the center could move forward on?
Thank you, Mr. Chengappa. And after a very broad and comprehensive overview by Mr. Singh, my task is quite difficult to respond to that. But before I get into the quality of expenditure or the welfare or what the roles are, let me share some of my thoughts more on a macro level, and then thereafter subsequently get into more details when we get into more conversation on this. Today, Bharat at 76, we look at Bharat at 100. And where do we visualize? And that we are what we are strategizing global prosperity, or strategizing India's prosperity and the role of states. So what is the vision we have in mind? A Viksit Bharat, which has opportunities for all. That is what I will put it in that manner. Quite often we end up measuring ourselves in terms of growth. That's important. Without growth, not many things will happen. But growth is not an end in itself. It is a means for prosperity, for creating opportunities. So basically what we are looking for, a virtuous cycle. Growth leading to jobs, jobs leading to savings, savings leading to investment, investment again leading to growth. Now the challenge for governments, both union government and state governments put together, that how do we make that cycle run faster and swifter? That is really the challenge. And wherein our efforts should be focused on, and what are the 4, 5, 3 or 10, even 10 things which we need to do. If I have to sum up that, not sum up in the sense, say in a very brief manner, and the quote is not entirely mine. More skilled workers using more capital and using it more efficiently. Workers we have, 145 crore of us are here. Right. Skilling more skilled worker, and that is, will come to that part. It's not just a one-time skilling, reskilling, even within the government. My personal experience has been that at least it was very much necessary. I felt that every decade at least I have to acquire entirely new set of skills, keep on updating myself in terms of the knowledge. Market is much more competitive. So whether a white collar or a blue collar worker, reskilling is a requirement of the market today. So more skilled workers, more capital, that part I will put it largely in the union's domain. First, skilling is largely in the state's domain. We know for sure that cost of capital for us in India, at least in foreseeable future, will tend to be higher than what it would be in advanced economies or for developed countries. And I'm not talking about a short term when the global interest rates are more, because our policy goal for inflation is 4%. For others, they have chosen a 2% kind of a thing. They have a head start on productivity on us. We are trying to catch up with them. But what is in our hands is cost of intermediation. Those tools, those mechanisms, those organizations are largely in the union list. So the cost of intermediation, that is a big role Government of India and its organizations have to play. Then comes the third part, using that capital more efficiently. Right. That part is again largely with the states. In terms of if I've got to put in the resources or the factors of production, so labor we talked about. Second is the land. How efficient is the use of land? There are few areas where land is getting smaller and smaller, or the way of using that land is getting shifted from an owner-driven to somebody who does the agriculture, because a lot of people do migrate and somebody else is doing it. But more importantly than that, the economic opportunities are coming increasingly in urban areas. How efficient is that land market? How efficient is the land use itself? There's a big area to be addressed. Whether big cities, not just about big cities or 1 million plus cities, even for tier 2, tier 3 cities. And the third element, and I'll stop there, is on ease of doing business. Where would, if an entrepreneur today has to think of or putting up a new plant or even an MSME wants to start a business, to get that confidence to move forward, looking at what kind of infrastructure is there, what kind of a labor is available, skilling of that labor, how easy or difficult is to start a business and sustain a business. That is with both, but a large part is with the state governments. I'll stop here and then come back again.
Wonderful points, and I think you very succinctly put it. Skilled, which is and then looking at capital, and of course the efficiency with which you're dealing with. And that's a good point for you to come in terms of the fact that the states, the onus lies on the states on two fronts. One, of course, is how, as he was mentioning, Ajay was mentioning, the ease of doing business. And second, of course, on the shortage of skilled manpower and how you can catch up with the rest. So what has been the experience of Haryana? It's one of the most progressive industrial states that are there. What have, in about 4 or 5 points, you think you could elucidate on that?
Thank you, Raj. A very warm good afternoon to the distinguished gathering and esteemed panelists here. As Mr. Singh and our senior colleague, Mr. Ajay Seth, had put it very clearly. India is a union of states, having a federalism in its very DNA. It is very important for a nation to progress that each state within the union contributes and performs to the best of its ability. That too, holistically. Starting with Haryana, it is a strategically located state, surrounds the national capital on 3 sides. Over the years, successive governments, Haryana, say 2.5 decades back, was primarily known for its predominant agrarian economy. Today, retaining its position in the agrarian field, it is now also known for its industrialization and urbanization. I won't say it is a paradigm shift, but it is more of a balancing act or conforming to the needs of the day. As Mr. Seth just mentioned, ease of doing business. The latest ranking of last year, Haryana was the top achiever in the ease of doing business index carried out by Government of India. This year, it is not just the ease of doing business. Along with it, citizen-centric reforms, because they also play a huge role in ease of doing business. They have been added, and again, Haryana has taken a lead in that. Now coming to, as Mr. Singh was earlier saying, and Raj mentioned, every state has its own strengths and maybe a few weaknesses. Haryana over the years has come up with a very robust, not just the infrastructure, a sustainable economy by way of institutional mechanism, whether it is for land allotments, whether it is for various schemes and policies to support entrepreneurship. For example, today, Haryana has a plethora of schemes, nearly 100 schemes and policies to support industrialization. Haryana is one of the first to come up with a policy to support an ecosystem for electric vehicles. Keeping in tune with the vision of the Honorable Prime Minister, wherein very regularly he mentions about the circular economy. Haryana is again one of the first states to come up with a vehicle scrappage policy or an electronic waste recycling policy. Very recently or even currently, one hears about this pollution in Delhi or in the NCR area, the stubble burning. I can very emphatically say that just a week or 10 days back, the Honorable Top Court of the country lauded the efforts of the Haryana government. It is not just the stubble burning concern. Today, we have around 5 or 6 incentive schemes by way of policies where we incentivize an entrepreneur to adopt more environmental friendly technologies, be it the green technologies, be it the energy saving. If anybody wants to shift by investing in energy-saving devices, we incentivize that. Now coming to the infrastructure. The states, of course, have their own roles to play. As Sir was mentioning, basically the onus is on the states to come up with the infrastructure. The national highways, yes, the National Highway Authority does it. But standalone, it doesn't have an impact if we don't have a last mile connectivity. Talking about Haryana, the KMP Expressway, which surrounds the national capital, Delhi, to ease the traffic and the pollution. We have been a bit futuristic. Haryana has 22 districts. Each district is connected by a national highway. It's a small state. We have our own 5 airports on which very soon domestic flights are going to start on 2 of them. And then we have the airports in Delhi and Chandigarh, which are next to us. We are coming up with a heliport in Gurugram. We are coming up with an orbital corridor all along the KMP, which is around 125 odd kilometers. In the next 3 to 5 years, the work has already started on 2 corridors of RRTS. As far as land is concerned, it has been a sensitive issue in the NCR area. It is costly. We have come up with a very transparent system of land allotments. It's through a complete e-auction module, where is not even an iota of human intervention now. Even while planning for the auction, which plots are going to get into auction, that is also through a random selection. At the end of the day, I can only say, with all these measures, the transparencies which have seeped into the system, today, the last 5 years average, Haryana's economy has grown at a rate of average rate of 8.67%. I was talking to Raj before coming here. The ratio of debt to GSDP in Haryana, I have the exact figures, it is 25.5%. Mr. Seth would agree with me. It is one of the best figures in the country. The average or the projected figures are generally in the range of 32, 33, 34. So at the end of the day, I would say, yes, the role of the states in the overall prosperity of the nation is very, very important. And Haryana over the years, be it the agrarian economy, be it the industrialization, be it the overall economy, Haryana's contribution in GST collection per unit of population is again the highest in the country. Haryana is contributing and playing a very important role. One last point. Mr. Singh and Raj both mentioned about cooperative federalism and competitive federalism. Haryana is a harbinger of both of them. Yes, cooperative federalism with the center. We always look up to the center for showing us the way, for guiding us by various policy mechanisms and financial support from time to time. And competitive federalism, the guidelines set by the Government of India, there is always a one-upmanship. We always want to perform the best in ease of doing business on the export performance indexes. Again, Haryana is one of the leading states. So with these words, I thank you, all my esteemed panelists. I thank CII for having given me the opportunity to talk about my state. Thank you.
Thank you, Anand. And I think you've been a really good ambassador to Haryana in terms of the way you presented it. Also, the fact that Haryana is punching far above its weight, you can see how a progressive state can make a difference that's there. And we've had a long relationship. I used to be editor of Tribune, and you used to come and talk about Haryana to me, and I think you've done that job superbly. Dr. Singh, can we come back to the points that you had raised? And I think the interesting thing was that you talked of fiscal profligacy versus prudency. I mean, that's a debate that we need to look in, because you've seen what has happened. I mentioned that earlier in the elections, the amount of freebies that are being distributed, or SOPs, or if you'd like to call it Rave D, whatever terminology that you'd like to use, depending on which part of the political spectrum you stand in. But one can see that results are being impacted because of that. Two questions on this one. Does it in some senses reflect that despite the fact that we have an economy that seems to be booming, from all figures that's there, very high percentage of growth, Mr. Ajay Seth can talk about that, and at the same time a stock market that is booming as well, and yet the people are flocking to get these kind of doles that are there that give them subsidies in various forms that's there. Is there a distress signal in that, or how do you see the way this is shaped? Is there a K-shaped growth that's happening? We're having the upper middle class and the rich doing well, and the poor and others. And is that a signal, a red line that is happening there?
Oh, well, you have raised, Raj, several questions. And give you some. First of all, let me make, with your permission, a comment on something that Ajay said. Ajay, I think you mentioned about the fact that you are skilling yourself every decade, or each one of us is skilling ourselves every decade. I totally agree with you that the nature of challenges that technology enforces upon us necessitates a constant reskilling at every stage. And fortunately, a flexible pedagogy, which the NEP in its letter and spirit will offer, will enable this kind of a reskilling, which is now a compulsive necessity. And since you look after the education of Haryana, I'd really suggest to you that this kind of a flexible pedagogy, which enables a periodic renewal and reskilling, because as we look forward, we will not be doing one job, we'll be doing perhaps multiple jobs in our lifetime. And what we learn in terms of pedagogy must offer us the flexibility to be able to move on in terms of our skilling. So I agree with you, Ajay, on that point. Coming to your point, it's a very difficult point. Well, there are two strands to. One is, let me ask you rhetorically, Raj, is this kind of a race to the bottom in terms of comparative populism a consequence of India being in a mode of perpetual elections? Are too many elections being held in this country? Is government and governance constantly mired into an electoral campaign of one kind or the other, which propels political parties to offer the kind of populist freebies which you will choose to mention? And what are the macroeconomic consequences for that, not only for the states, but for the general government, which means for India, in terms of realizing its true growth potential? And I think this is an issue which requires a wider debate on the issue of simultaneous versus elections in perpetuity, if I may say so, and the electoral consequences. To your sharp question, that I think there is too much latitude for states to indulge, and there is no penalty or consequence for breaching the targets the states have laid it upon themselves to accept certain obligations. These are not obligations that the central government has forced the states. Each of the states have enacted their own Fiscal Responsibility Management Act. So it's a question of adherence to their own targets and to their own objectives, which each of the state legislatures. And shouldn't there be some kind of a consequence which does that? My last question to that, my response to that is this. That while that may be so, the market does not differentiate between the cost of the state loan borrowings, between a profligate state versus a prudent state. And can there be measures which could be conceived in which the states which manage their finances more prudently in some ways are really rewarded by the market for better management of their state finances? So
You have not looked at the question of economic growth and the fact that we might be seeing a K-shape versus what is your own analysis?
Well, on the K-shape, look, when I looked at the last figures, this may be a bit dated, on the Gini coefficient, which is the only accepted methodology that economists have, a Gini coefficient between states and Gini coefficient. So there are two ways of looking at it. One is to look at the Gini coefficient numbers between rural and urban, and that number has not moved very much in any adverse way. The Gini coefficient between different income groups, that does not really give you, if you look at the last numbers, any suggestion that we have become more unequal than we were in any significant measure, leaving aside episodic or anecdotal kind of examples. I do not think that the figures are robust enough to be able to alter the broad conclusion that in this country the Gini coefficient has not been adversely impacted on account of the kind of growth patterns which you have experienced both pre-pandemic and in terms of getting out of the pandemic. So I wouldn't say that whereas there are enough anecdotal evidence of that, there isn't a robust literature on which you can build a modeling which would suggest that India has become a more unequal society than it was. And the fact that the architecture of governance has used increasingly towards using technology in terms of transferring government benefits, in opening of bank accounts, in transferring of financial resources, in terms of transference of beneficiaries, that would be a very important factor, that the governance model has become more technology-based, that to some extent greatly bridges the tendency to come to the conclusion which could be romantic, but alas is not true in terms of serious economics.
Thank you. Mr. Ajay said, let's look at some of the points that Dr. Singh raised, and also some of the solutions or actions or reform that you would think could come in. We have seen in the case of the electricity sector where DISCOMs, which are losing heavily, the current policy is to impose, if you're going to give free electricity units, you'll have to pay it from your kitty, from the state, and if you don't meet your commitments, we'll cut off the power coming into you. Quite drastic, but seem to be having some effect. What would you say when you're handling these various sectors in terms of allocation of resources, all the key sectors? Sorry, please. Please, come in.
That, not to complicate Ajay's life, let me add to that, Ajay, that one could have different experience. But one common experience I had in visiting all the 28 states as part of my responsibilities in the 15th Finance Commission, state after state except one or two, the giant elephant which is staring in your face is the unpaid dues of power distribution companies, and the inability to reform the power sector remains one of the most debilitating factors in contributing to overall economic stability of the union as a whole.
Ajay?
Again, a very diverse set of observations I'm hearing. We have to have clarity on 2 or 3 things, and these are very hard decisions. Certainly business as usual, that what we did in first 76 years, we will do the same one in future. In fact, what we need to do is to grow faster, grow more equitable manner, sustain it over a long period of time, and that requires some hard decisions. If I can mention the first thing, as we move from year 76 to year 100, we have to choose our path wisely. Option A, do we see role of governments as facilitator and enabler for growth and jobs, and job creation rather? Or option B, we see roles of government or role of governments as primary driver of the economy, investing into the economy, creating jobs, and providing incentives for more capital.
Good. Yeah.
And that, where our wisdom takes us, to which path, and there's a clear fork, I see it here. It's not that we can choose to go into one path and then muddle our way to come back there. Yeah. There's a clear choice to be made by all governments onto that decision. At the same time, we need to, and there's a question of profligacy versus prudence, we need to avoid the temptation of short-term gains versus what is needed long-term for the country. And there lies the hard choices to be made. Mm-hmm. Apart from the skilling piece which I mentioned, that yes, if you were to move 2 areas, and you mentioned it about electricity sector. Right. That's one of the very most difficult area, and that is a reform. I'm not sure whether as a country we are ready to reach there. And I'm hearing, and I can go back to my initial years, in the province, in the state where I worked in for long years, the then electricity board chairman suggested that the state was collecting about 20 crores from agriculture sector, which is not much, so that can be given free. Now, moving from 0 to even 1 paise is an infinite increase. More and more states are now traveling into that path. Where do we see? Are the taxpayers going to do the heavy lifting, or it is the ratepayers are going to do heavy lifting? Or is the next generation will do the heavy lifting? So that choice to be done, that we are not ready. What we are collecting is about 17–80% of GDP gets collected at taxation. There has been an improvement in recent years. But when we say it won't happen overnight, but a sustained efforts to move our economy, move our public services from taxpayer to ratepayers, that is the need is needed. It is a long haul to happen. And there I'll cite one example, or the one area, which is the urban areas, orderly urbanization. Today, if you can cite one number, and this is one of the most stark number comes in. Today, just about 5% of the investment getting into urban infrastructure is either from a bank or from a private capital. 95% is from government resources. And that is something underfunding of our urbanization. There lies the jobs in the future. So we have to reimagine our city. We have to rather look at that transforming our cities, and I'll use a word in a positive sense, a creative redevelopment. We have been investing into mass transport systems. We have been investing, some of the cities have gone for BRTS, but we have treated them more as engineering projects rather than as a project which is a catalyst for transforming those cities.
Excellent.
So unless our population is living and working closer to those transit systems will continue to have a problem. I have lived in a city for long where traveling for 90 minutes one way is a norm. On the other hand, another city which prides itself and continues to pride itself, saying that from anywhere to anywhere, do it in 45 minutes. It's not a small city. It's also a population of 25 lakhs. And that kind of a loss to productivity which we are doing it, where the professionals, whether blue collar or white collar, is spending 3 to 4 hours in just by commuting, is a huge loss. And we can't afford to have that kind of a loss. So that is something which is right policies, right incentives, action is with the states. That how do we facilitate cities becoming more transit-oriented, making the city infrastructure more and more viable, getting their governance right. Cities can't be governed from Delhi. Cities can't be governed from a state capital. True. They have to be governed in each city. So that's another challenge where we see the role of states as we travel from year 76 to year 70.
Excellent points, excellent points. And let's get to the state itself so that we get the feedback from there. I think 2 or 3 things which Ajay raised. And if you take, I'd been to Gujarat to study some of the infrastructure issues that were there. 2 interesting examples. One is that water, and Gujarat is a perennially water shortage state. The way they had created these Pani Panchayats, where it was entrusted to the people, they actually controlled the water distribution, and even the farmers controlled and paid the money. So there were no dues in the sense they were responsible for what they're consuming. Is that a model? Not necessarily, but I'm saying there is. And the second thing was in terms of power, where I think that time Mr. Modi was the chief minister, where it was decided that there'll be no free power in that sense, but he will assure 24/7 power, rather than, just subsidize but not supply at all. And they will pay for that. Now, so there are various interesting models that we've seen across, even in Odisha and in this thing. So, Haryana, when you are dealing with these issues of subsidies, power, land, or this thing, what is the, few models that you can, 2 or 3 things that you, from your experience, worked? And that could be applicable from this, because we are dealing with this prudency versus profligacy issue.
Just 2 points before what you said. Mr. Singh was talking about the NEP, National Education Policy. In relation to the skilling, we got to change the pedagogy there. And I hold the additional charge of higher education. Just a very simple point. NEP was announced in 2020 by the Honorable Prime Minister, which brings about an absolute paradigm shift in the higher sector of higher education. And the Haryana government decided to implement it by 2025 and not 2030, which was the aim of the NEP. And we are on track to implement it by 2025. The pedagogy is going to change, and I'm sure by 2025, there is going to be a right mix with the skilling. Sir was mentioning about skilling and reskilling. I would add a further dimension to that, that is upskilling. Haryana was the first state to come up with a skill university. Every scheme for the entrepreneurs which we are coming up, as I said, roughly around 100 odd schemes. In every scheme, we have a component for skilling. We do fund a center of excellence for that trade. For example, EV policy, we have a center of excellence. For a data center policy, we have a center of excellence. For a vehicle scrappage policy, because we need a trained, a skilled manpower. For the upskilling, a new experiment which we did and we are now scaling it up is the recognition of prior learning. Haryana, Gurugram and Faridabad is the hub of industrialization ever since Faridabad, ever since India got independence. There is a workforce, there is an aging workforce which have been working on the shop floor for nearly 10 years, 15 years, 20 years. We have come up with an upskilling program called the RPL, under which on the shop floor, we have designed a course in a way that they get a higher degree so that they can get a jump in their work. Talking about the reforms, Haryana was one of the first states to come up with reforms in the power sector, I think late 1900 and early 2000, where we have 4 different power utilities. It is one of the states, yes, we have a subsidized power tariff for the agrarian sector, but a very small component. And we are moving towards 24/7 power supply. I think 25% of the villages in Haryana today are already 24/7, and we are gradually moving towards that. As I said, again, Haryana has been taking institutional reforms, be it the power sector, be it the water sector. Again, Haryana is the first state to come up with a groundwater authority to manage or the usage of the groundwater. How to restrict the use in the dark blocks. Even on the industry side, we give higher incentives to the industries on the non-dark blocks to incentivize the entrepreneurs to come up to the other ones.
I think these are excellent points. I'm just told that we have to wind down the session, so I'm just going to ask each of you all, and this has to be very quick. Dr. Singh, we'll start with you. One big reform you think, when it comes to center-state relations, that you would advocate? Just one big, right, urgent, and red light.
Reward states which move into capital expenditure based on renewable fuels. Second, if I may add to that, reward states in some manner who manage their finances more prudently compared to states which are more profligate.
Ajay said.
One particular program which has worked very well for a uniform good development is aspirational districts program. And just one data that over the past 6 years, 25 crore people, their HR and their human resource development could improve very significantly. Perhaps we need to have aspirational states program to catch up with the rest of the country.
Excellent. Anand?
With your permission, I would just like to pop up a question or a suggestion. Since I look after the MSME sector, which is today the backbone of the Indian economy, and on the social side, the priority sector lending. One issue is all the banks which do the priority sector lending and the MSME sector lending, if we can have a very transparent, open portal, a centralized portal where this lending can be done so that an applicant can know the position of his application.
Excellent. Excellent. Maybe Ajay, you could look at it. But ladies and gentlemen, let's give Dr. N.K. Singh, Ajay Seth, Anand Sharan a very warm round of applause for this. Thank you so much.
Thank you, speakers, for your excellent deliberations. Thank you, session chair, for steering those conversations. May I now request you, Mr. Raj Chengappa, to kindly present the mementos, the CI mementos. Firstly, to Mr. N.K. Singh. To Mr. Ajay Seth. and to Mr. Anand Mohan Sharan. And with that, it's a wrap for this session. But never complete without a group photograph. We will now, ladies and gentlemen, move to plenary session 14, which is on strengthening India's competitiveness in a transforming world. And we will just take a few moments to make the necessary table arrangements. Kindly bear with us while we do so. And we will start the session soon thereafter. A very warm welcome, ladies and gentlemen, to our plenary session 14, which is on the theme of strengthening India's competitiveness in a transforming world. May I now take this opportunity to extend a very warm welcome and invite on stage our eminent panel for the session, Mr. Arturo Briz, Professor Finance and Director, IMD World Competitiveness Center from Switzerland, Ms. Shraddha Suri Marwa, President of ACMA and Chairperson and Managing Director of Subros Limited, and our session chair, Mr. Kamal Bali, Chairman of CISR and President and MD of Volvo Group India Private Limited. May I request you, ladies and gentlemen, to please welcome them with a hearty applause. Ladies and gentlemen, this session will delve into the concrete steps India's leaders can undertake to drive competitiveness of the country and welfare of its citizens. Critical to this growth are the continued transformations of organizations across the country, added by growth as well as infrastructure and government efficiency. With these words, I would like to now hand it over to our session chair, Mr. Kamal Bali. May I request him to kindly make his opening remarks and take this session forward. Over to you.
Thank you and welcome back. Distinguished guests, dear friends, ladies and gentlemen, it's my pleasure to welcome you once again to this important session on strengthening India's competitiveness in a transforming world. Friends, we are privileged to have in our midst this evening Mr. Arturo Briz, the Professor of Finance and Director of IMD's World Competitiveness Center based in Switzerland, an award-winning teacher and a program director. Professor Briz ranks amongst the top 100 most read finance academics in the world. He has published several books and is a frequent speaker at international conferences. Today, we look forward to listening to his valuable perceptions and in-depth analysis on the new world order based on his work on competitiveness. A special welcome also to Ms. Shraddha Suri Marwa, who is also the President of ACMA, the Automotive Component Manufacturers Association, and also the chairperson and managing director of the well-known Subros Limited. Prior to this, Shraddha has held significant portfolios with various organizations, including a short stint with 6 continents in UK, Reebok India. She has spent over 11 years in the automotive and telecom industries. We are keen to listen into her thoughts and ideas for strengthening India's auto and telecom sectors from the lens of an entrepreneur. But before that, let me make some very quick reflections around the topic. Ladies and gentlemen, as we all know, we are in the midst of a once-in-a-lifetime transformation where the needle of change points towards paradigm shifts across almost all factors and attributes that influence the way nations, economies, and businesses operate. To make things complex, at one end, we have pressing challenges to overcome, namely climate change, depleting resources, geopolitical conflicts, rising urbanization, growing inequities. And as things conspire, we also have emerging technologies across automation, alternate fuels and energy sources, connectivity, digitalization that provides us several innovative tools and solutions to overcome many of these challenges. As a result, in a world where everything is increasingly getting connected and data is the new oil, the impact of some of these tech tools is profound across business and commerce, or the way society expresses itself, or even the way governments govern, as well as the partnerships that are being forged. In other words, an ecosystem-wide transformation in most cases. Therefore, while being competitive continues to be important, a few crucial preconditions for success in today's complex landscape is collaboration, partnerships, and resilience. Meanwhile, in economic terms, India is relatively in a good position today, backed by several factors that are converging to make India attractive and competitive. Clearly, these contributing factors are our demographic dividends, digitally savvy and aspirational workforce, a strong democracy, decisive and reforms-oriented government, a fast-growing middle-income group, and an increasingly innate disposition to deploy digitalization in private and public sectors alike, as well as in national governance. India has also explicit focus on carbon neutrality and with its stated ambitions across electromobility, hydrogen, and a range of non-fossil fuels. In parallel, the nation continues to build robust digital and physical infrastructure, including roads, ports, freight corridors, and airports. In addition, India's national logistics policy and Gati Shakti mission are clearly going to be some of the important enablers for India's competitiveness. As things stand today, India is slated to become the third largest global economy by 27-28, while doubling its current size by 2030 or 2031. The question, therefore, is not whether we will continue to grow. The question really is how fast or how inclusive and without a digital divide. The challenge India faces in this respect is to create 10 million jobs every year. While billions have been lifted out of poverty in the last decade, the next imperative is raising the quality of life for many. And that is still a job to do and work in progress. Therefore, ladies and gentlemen, manufacturing will play a key role in all of this, and with India at just 3% of global manufacturing compared to China at 20% and US at 18%, this is both a clarion call to the Indian industry as well as a big task and an opportunity. This said, it is clear that we have still much more to accomplish. Let me therefore quickly list out a few factors for strengthening India's competitiveness in this fast transforming world, so that we can get reflections from both Professor and from Shraddha. I'll quickly list out those points. One, raising productivity levels. I think that's the first one. We know that our productivity, we lag on productivity levels. Indonesia is twice as high as us. China and Korea are 4 times. So by adopting Industry 4.0 and automation, we could really spruce this up. Number 2, our MSMEs must build scale. with government support for competitive cost of capital. I think that's the second very important area. The third, our progress and mindset should include matrices on societal indices such as diversity, equity, inclusion, and be rewarded or incentivized on that basis. Number 4, given constantly evolving technology and ways of working, a new culture of learning and new skills needs to be nurtured in perpetuity. Number 5, embed the principles of holistic sustainability encompassing people, process, and planet, as this is going to be a prerequisite for businesses to succeed. Number 6, fix our cities' infrastructure for a sustainable future, as these will be our ecosystems and engines of growth. 7, need further push on digitization of governance of at local levels to reduce the cost of doing business and improve ease of doing business. Number 8, augment R&D and innovation ecosystem. We spend just 0.3% of GDP when it comes to R&D, and the global average is 1.5%. We really need to look at that for the long term. Number 10, establish and reinforce brand India as a trusted partner based on reliable quality, fairness, speed, transparency, and law of the land. And last but not the least, quality needs to be back on the boardroom meeting agenda once again. I know quality is taken for granted. It is supposed to be there. It's a hygiene factor, but actually this should be very, very important. So, ladies and gentlemen, with this, may I now invite Shraddha to share her views on the subject. Shraddha, over to you. Thank you.
Good afternoon, Professor Arturo Brice, Professor Finance and Director, IMD World, Competitiveness Center, Switzerland. Mr. Kamal Bali, Chairman, CII, Southern Region and President and Managing Director of Volvo. Distinguished guests, ladies and gentlemen, very good afternoon to everyone here. Just adding on to where Mr. Bali actually left off. India, as we all know, is on the cusp of an exciting and transformative phase as it looks to realize its dreams of being a developed nation by 2047. With a robust growth for GDP projected for the next years on the back of sound government policy and strong macroeconomic fundamental, India today has emerged as a beacon of hope for the world and a sweet spot for investments, especially in the global south. While India's achievements are noteworthy, it is imperative that our growth is sustainable, inclusive, and responsible. We also need to be cautious of today's fast-changing global geopolitical and economic dynamics. The impact of COVID-19 has led to realignment of supply chains across industries. Focus on sourcing from low-cost destinations is not necessarily a priority anymore. Industries are de-risking their supply chains by engaging with suppliers closer to home or even geographically spreading them so that they can be closer to the supply point. The auto industry that I come from is now also focusing on creating inventories of suppliers, a move that would have been scoffed at in the pre-pandemic era, when all of us swore by just in time. The pandemic, in fact, has taught us to be nimble and take things, including the supply chains, just as is. As India works towards its ambitions of becoming an integral part of the developed world, our industry will have to be open to accepting FTAs with open arms for aligning with like-minded economies and with major trading partners. Our government's policy initiatives such as PLI, digitization, GST reduction in corporate tax, and many more are indeed laudable. That apart, the fast pace of infrastructure development that we are witnessing today would improve India's competitiveness in manufacturing, as also our attractiveness towards investments. Taking a leaf from the success of the auto industry, here are some of my thoughts on how we can be globally competitive. One, the Indian industry, especially MSMEs, will need to scale up, which Mr. Bali also alluded, with a long-term roadmap on uncompromised quality, capacity, capability, and digitization. In this new and connected world, I would like to underscore digitization as we need to leverage technology such as AI, blockchain, IoT, and develop the skills of our workforce for significant value addition. 2, India must continue to give priority to infrastructure development as well as improve logistics across sectors. 3, I must mention that sustainability is not merely a buzzword. It's a responsibility that we bear for our future generations. Embracing environmental friendly practices, reducing waste, adopting circular economy principles are just not choices anymore. They are imperatives for the longevity and ethical standing of our industry. With the target year of 2070 for carbon neutrality for India, our supply chains will have to collectively work towards this nationwide objective. Further, I would request the Indian entrepreneurs not to shy away from being ambitious. The government would like us to increase our exports in the auto component sector 5-fold to 100 billion by 2030 from currently 20 billion. That's a 5x growth. We have accepted this challenge at ACMA. Being a woman entrepreneur, I'm very passionate about diversity and inclusion, and I'm hopeful by 2047, there'll be more women in this room, in our workforce, and also in leadership across sectors. We cannot uplift a nation if we fail to economically empower 50% of our population. In conclusion, on the backdrop of a significant market opportunities and the zeal and enthusiasm across the Indian industry, I'm confident that India will emerge as a manufacturing hub for the world, boasting robust, resilient, inclusive, and sustainable industrial supply chains. That's not too distant for us in the future. Thank you very much. Namaskar.
Thank you very much, Shraddha, for your inspiring words. Let's then have Professor Breeze. Thank you.
Good afternoon, everyone, and thank you to the Confederation of Indian Industry for this opportunity to speak, and also to my co-panelist, Kamal and Strada, for their very useful introduction. You know, let me start with a question for you. Think about how many countries in the world today have a national strategy. Okay? And think about the number in your minds. Is it 10%? Is it 50%? Is it 60%? How many countries do have a national strategy? In our center, we have actually asked ourselves this question, because when you answer yes to this question, you are already building the pillars for a competitive nation. And the number is 5%. So only 5% of the countries in the world do have a national strategy. I come from Europe. No single European country, probably with the exception of Denmark, do have a national strategy. And if you subtract non-democracies, you can actually count with the fingers of one hand how many of these countries have a strategy. Luckily, India does have one. And so does Denmark. Denmark is the most competitive country in our 2023 World Competitiveness Rankings. And I will argue to start with that the first pillar of a national strategy, the first pillar of competitiveness is to have a national strategy. But strategies obviously make choices, and as a good business school professor, I will tell you that a good strategy needs choices, needs analysis, needs execution, and also needs KPIs. Okay? And here I am, coming from a center, a research center that provides governments with a KPI to measure the quality of their strategies. And this is what we call competitiveness. I want to start with that, because very often when we discuss competitiveness, many people misunderstand the concept because of its suggestion towards competition. Okay? This is the definition that many international organizations, including ourselves, have embraced as the objective of economic policy. Competitiveness is the ability of a nation to generate prosperity for its people. But we follow through an economic system that fosters productivity, fairness, and efficiency. That is, competitiveness is an economic concept whose end game is prosperity. Prosperity is a very intangible, unmeasurable parameter. But in order to generate prosperity, quality of life, safety, happiness, you need to have a productive economy. Of course, then the first question to ask is whether a nation is productive. Because our competitiveness model goes very simply by stating that when an economy is productive, in principle, it could be competitive, but it's not a sufficient condition. And here I go back to Kamal's point about increasing the productivity of the nation in order to make it competitive. And you can see that this depends on inputs. It depends on how well we set up our national industrial strategy, our digital transformation strategy, our AI strategy, and how we make other choices regarding, for example, regulation. Countries like Switzerland, where I come from and where I live, have actually made the right choices in a context where they don't have anything else. Switzerland is a country without natural resources, landlocked, surrounded by big countries, with no commodities or agricultural product, no mining industry, that has managed to build a competitive economy by mixing up in a very good salad a good regulation, good education, and a good industrial strategy. It's of course a very innovative country. But the competitiveness equation doesn't end with the productivity. It needs to be conducive to prosperity. And for that, we need that both the public and the private sector work together so that productivity is translated into quality of life, good education, attraction of foreign investment, increase of the image of the country abroad, and in a virtual circle, this leads again to better inputs and then better productivity. So it's a very simple equation. When I start actually analyzing countries, I always ask these very simple 5 questions. The first question is, first of all, is the country productive? Second question, does the country have a strategy? Third question, does the country have a good government, a good public sector that facilitates the creation of enterprises, provides good regulation, is efficient, preserves inclusiveness and sustainability? Fourth question, does the country have the right private sector? Entrepreneurs, innovators, creators of jobs, a good chunk of small and medium enterprises that create employment. And the fourth question, and the fifth question, does the country have the right infrastructure? That is not only roads and airports, but also the intangible infrastructure of the country, such as hospitals, schools, scientific infrastructure, technological infrastructure. These are the very simple 5 questions, and we can go and answer them for India. Question number 1, does India have a national strategy? Yes, check. Second question, is India a productive economy? Well, you can see, and I just showed you this in a graph that is taken from the conference board that shows the productivity of labor for a large sample of economies, and where you can see that since the 1950s, it is true that the increase in Indian productivity has been amazing, as shown in the solid red line, but it is still below the productivity of labor in countries like China or Brazil, and of course in countries like Denmark, Singapore, or even Switzerland. So there is more to be done there. Of course, in a country that is as largely populating as India, this is going to be difficult to do. But as you can see, China has done in that front a little bit better. Okay, so let's go to the other questions. And I will just skip a little bit of the less interesting slides and focus on 2. Here you have, if you can hopefully read, a snapshot of our 2023 World Competitiveness Ranking. Just to give you a very short and brief introduction, our ranking looks at the competitiveness of 64 economies in the world, those for which we have good quality data and where we have a good, solid executive class because we conduct a survey. And then out of these 64 economies, you can see that India ranks number 40. The top 15 economies, if you look at the names, include mostly European economies, but primarily small economies. I think that if you exclude the United States, most of the other economies, by size or by population, they tend to be small economies. And in fact, the top 5 are Denmark, Ireland, Switzerland, Singapore, and the Netherlands. Being a large economy, is a handicap for being competitive, but not because size makes it difficult, but because in large economies, building the right consensus is more difficult than for a small economy. If you take the example of Denmark, Denmark has a very clear strategy that irrespective of who is in power, then it's always pursued. And I think that's where the secret of India is going to lay. If you are able to preserve the current economic and political consensus that dictates and says what are the right things to do in this economy, you will certainly become one of the top 10 most competitive economies in the next generation. This is extremely difficult to do. I am amazingly surprised by, for example, the success of India at implementing a national identity program. It's the only large economy in the world that has succeeded and implemented that. And I think it shows not only the political consensus that exists in the country, but also the public-private sector collaboration that has led to the success of this program. Okay. So I will just move directly, and I skip lots of numbers that are available in our website, and I will move directly to what I think is worth discussing, which are what I consider to be the challenges for India in the coming years, that I think summarize very well our main findings in 2023. I think challenge number one is to resolve the contradictions among different pillars of growth, such as digital transformation and sustainability. That is, if you look at these three in isolation, we want to grow the economy, we want to do it digitally, and we want to do it sustainably. And my colleague, Carl Smethers, addressed this audience yesterday on this aspect. But these three are contradictory. And what I mean is that you cannot be sustainable and focus on economic growth at the same time. There are compromises to make. I know that some will say that that's not the case. But the fact is that if you look at what has happened in 2023, many countries have given up sustainability and then focus on growth. Because, for example, energy in Europe was very expensive. So what did Germany do? They went back to coal, okay, and fossil fuels, because they couldn't actually use the energy that was coming cheaply from Russia. The same happens with digital transformation and economic growth. Digital transformation is costly, and very often it will not lead necessarily to economic growth. Okay. The second challenge is how you find your place in a fragmented economy. And I think we have had interesting discussions about that in the last days. We are not anymore in a world of blocks, and China has to play its own role. And I think, India is going to play its own role. And I strongly believe that India has to be one of the new powers in the world economy that dominates international organizations. Challenge number three, in order to grow employment and productivity, you need to focus on value-added activities. That is going to be key. And that's the secret question for which I don't have a magic answer. How do we increase the productivity of India? It certainly goes by moving into value-adding industries that will increase productivity and salaries. Lead Asian economies, that is, you are in a fantastic economic region. And I think you need to enjoy the benefits of such an economic region. In a deglobalized world, we need to focus much more on the countries that are close to us. And obviously, India has to be the leading country in that region. Truly empower the private sector to be a creator of jobs. So, there is a certain collaboration between the public and the private sector. But do not forget that the economic model of India is one where the private sector pulls and the public sector follows. It's not like Singapore. It's not like the UAE. The Indian private sector is extremely innovative. It's a creator of jobs. And it requires a government that is powerful enough with the right institutions to create employment. The final point that I will make, and I will leave it here, is that we need to focus on infrastructure. That's a long journey. I will not promise you that India will be in the top 10 in the next years, because building the right infrastructure, particularly digital infrastructure, is going to take a lot of time. Just let me give you an indicator. Out of 64 countries, India ranks number 62 in the speed of broadband internet connection. So, based on international organizations, what we're saying is that we need to make a bigger effort. If we want to be a digital nation, we need to make a much bigger effort on digital technologies. So that's it. My hope is that the country will be a winner. It is already a winner. You are making a lot of progress. And I look at you, and I use India as a good example of how you build a competitive nation. So thank you very much.
Thank you. Thank you, Professor. Thank you for those very insightful presentations. Sorry, we've completely run out of time. We have the next session starting, so we will have to conclude the session here itself. Thank you all. Thank you for listening in. Thank you.
Thank you, Mr. Kamal Bali, and thank you to our speakers. May I request Mr. Kamal Bali to kindly present the CI mementos, firstly to Mr. Arturo Briss and to Ms. Shraddha Suri Marwa. Thank you to our speakers as well for their wonderful deliberations. Ladies and gentlemen, I'd just like to mention here that our Honorable Minister Srimati Smriti Zubin Irani is already at the venue, and we will be starting the next session immediately. Ladies and gentlemen, we will move on to our next session, which is the plenary session 15, and it is also the last session of the Global Economic Policy Forum. We are very pleased to have with us our Honorable Minister. We will just take a couple of minutes to make the necessary table arrangements. May I request everybody to kindly be seated? Ladies and gentlemen, may I please request you to join me in welcoming our Honorable Minister, Ms. Smriti Zubin Irani, Honorable Minister of Women and Child Development and Minority Affairs, Government of India. Ma'am, an extremely warm welcome to you, and it is indeed a proud privilege to have you amongst us for this plenary session. May I also invite and welcome Ms. S. Anukruti, Senior Economist Development Research Group from the World Bank, Mr. Aditya Ghosh, co-founder of Akasa Airlines, and Mr. Chandrajit Banerjee, Director General of CII. An extremely warm welcome to our 15th plenary session on strategizing India's prosperity, role of women-led development on the occasion of the Global Economic Policy Forum 2023. With these words, I will request Mr. Chandrajit Banerjee to kindly make his welcome address and moderate this session.
Good evening and a very warm welcome to begin with to our Honorable Minister for Women and Child Development and Minority Affairs, Madam Smriti Irani ji. We have with us also, as you heard, the co-founder of the Akasa Airlines, Aditya Ghosh, and Dr. Anukruti, the senior economist of the Development Research Group of the World Bank. Excellencies, very distinguished ladies and gentlemen, we come to an end of a 2-day of deliberations on various subjects. And we have none other than a very dynamic person who has been always supportive, a person who has always led us, who has listened to us, who has been giving us insights of, on many, many areas of our work. And when you hear, she is always very candid, if I can say, besides being informative. And when she likes discussions in a conversation mode, so not keynote addresses, but when questioners feel that she can be challenged, well, she reverts back with a challenge to whoever asks the question sometimes, and those are very interesting conversations with many of whom you have heard her before know of that pretty well. A great orator, which is known to all, extremely knowledgeable not only in her field but in a huge gamut of areas that we always go to her for discussions. So it's with great privilege and honor that I welcome the Honorable Minister for Women and Child Development and Minority Affairs, Srimati Smriti Irani ji, and I would like all of us to please join in warmly welcoming us to this valedictory session. As I said, that this is the last session of the forum, which has been addressed by over 60 policymakers, including leading global and domestic experts from industry as well as from the government over the last 2 days. And in the 2 days, we had the privilege of many, many thought leaders, 21 sessions, more than a couple of thousand delegates in different sessions. And we know that the topic today is about India's prosperity and the role of women-led development. Madam Minister, as I said, you always wanted meetings in a conversation mode, so I just wanted to leave 4 points. And one, I just wanted to mention about your overwhelming support and encouragement on many areas, but I must once again mention that you conceptualized and helped Indian industry to come up with a global center on women leadership, which you yourself inaugurated. And this particular center of excellence, which will be based out of Delhi, will have many satellites. We are so glad to be the implementing institution for it, but we shall be so glad to see satellites coming up across the country, and this will help us streamline the industry's efforts in capacity building, promotion of some of our best practices, and of course nurturing leadership amongst our women in industry and economy at large. And we look forward to further gaining insights from today's conversation as to how we can feed into the agenda of the center. The second, of course, we have been in many, many sessions over today and yesterday talking about the great leadership that we saw of India's G20 presidency. And in this, I would just like to mention about, again, the W20, the Women 20, which was led by our Honorable Minister, which witnessed seamless mainstreaming of women-led development into many conversations at national and international level. And that was, again, another huge level of commitment that we saw of our minister on this issue. Third, ladies and gentlemen, as we all know, much more than half, if I would rewrite of the population of our women in India live in rural areas. And over the past decade or so, we have seen our women in rural India play a phenomenal role in the economy through engagement in the self-help groups. And this has been enabled greatly by, again, our minister's leadership, her vision. We are now seeing initiatives such as Drone Didi program, which talks about upskilling women in these SHGs to operate drones and serve in the agriculture sector. Honorable Minister, we'd be very keen to hear your thoughts on what more can be done to build on this emerging source of economic power, that's the rural women to propel the prosperity of India. And lastly, again, when I have heard you earlier, we have seen in the last few years, we have a phenomenal uptick on STEM education, skills for women, which has in turn resulted in great career opportunities and growth for our women. In fact, we see 48% of the STEM graduates to be women. And the recent accomplishment we all know about Chandrayaan-3, a program which has been led by our women scientists at ISRO, is a phenomenal example of what women in STEM as well as leadership position can help us achieve. So this story is indeed today world acclaimed, and you communicate it so powerfully. And this audience, I'm sure today, would like to know how do we collectively contextualize our education and skilling so that women and girls are able to participate and prosper. I just wanted to leave these 4 thoughts as we welcome you, Honorable Minister, for this conversation session. And to begin with, I would ask the 2 panelists to pose their questions and their thoughts before I open it up to the floor, and then our Honorable Minister would give her responses and comments to those questions that come up. With that, once again, a very warm welcome, and also I'd like to add thank you at the end, because this is indeed the last session of this wonderful conference. Welcome and thank you. Do you want me to make some opening remarks and then do a discussion? Yeah, pose some questions. Pose some questions. So yes, Aditya. So we have now Mr. Aditya Ghosh, the co-founder of Akasa Airlines, to give his remarks and also to start the process of conversation that we can have with our minister.
Absolutely. You know, with Ms. Irani, there is never a predictable line. So, thank you, Mr. Banerjee, and thank you, Anukriti, for joining us. So I chair the Skills Development Committee at CII, part of the National Committee where, of course, Mr. Banerjee is leading us. And one of the areas that I've been working on over the last maybe a decade or so is on trying to bridge the gender gap, at least in some of the industries that I've been involved in. So I'll just leave a few thoughts as maybe a conversation starter. Now, it is a fact that we are, I think, quite sure that we are now set towards this path of becoming the 3rd largest economy in the world, heading to be a $10 trillion economy in 2035. But it's also that, for companies, businesses, which do not actively look at women as being a very integral part of the products, services, workforce that we need, we as a country are going to leave behind almost a $700 billion opportunity. It's a fact that as we seek experiences from around the world, the moment the female labor force participation goes up in any economy, in any country, there's a direct correlation with which the GDP of that country grows. Right? Now, at the same time, there are many aspects that kind of, interplay with each other in a very complex fashion, both at the household level as well as at the macro level. Whether it is education, whether it is fertility rate, whether it is the age of marriage, the economic growth or urbanization, all of these have a very, very integral role to play in where we see how women get to participate more in the labor workforce. Now, if you look at the India Skills Report 2023, which we are actually at CII going to present very shortly, I think it's next week. Very interestingly, at 52.8%, India has more number of employable women than it has actually men. So that basically means that if that demands, if that supply side issue is not there, then we must focus on what are the demand side, structural issues that we are facing, because of which the labor force, the female labor force participation is less than what is desirable. Now, when we look at women taking breaks, or professionals taking breaks in middle of their careers, more often than not, we have more women taking career breaks. But it is also a tragic reality that women who come back into the workforce after taking a break, they have a 24% less chance of getting accepted as opposed to men. The next interesting fact is that despite all the urbanization that has happened, huge development in the tech space in India, only 4% of venture capital in 2022 went to women-led entrepreneurship. While that looks like a, such a small number, what is interesting is that in the UK, it was not even 4%, it was 2%. So again, there is a structural issue somewhere where we've got to break through these barriers. When we look at rural India, I'm the chairperson of the social enterprises at the country's largest women's trade union called SEVA, and where we are working with across 125 trades across 18 states to change the narrative and push the narrative from women benefiting from development to women-led development. And again, what has kind of worked for us, and I'm just sharing some of these experiences, is by using technology, technical training, microfinance, and natural resource management across these 125 trades. We have seen members organize themselves in self-employed groups or even as micro-entrepreneurs, which is leading to a year-over-year rise in their own household livelihood. In my own sort of little way, our 8 out of 10 of the ventures that I have invested in are all women-led entrepreneurs. And that gives me a bit of a sort of ringside view on the kind of challenges that they face when they go to the traditional VC, angel, private equity world to get funding into their entrepreneurial journeys. At the same time, there has been some dramatic improvement as well. In the airline business, where I've spent a lot of my last 20 years, I remember in my previous role at Indigo, when I took over the role in 2008, 18% of our workforce was women. 10 years later, it was 43% of our workforce was women. And Indigo had the highest number of women pilots in the world. Today, India has the highest percentage of women pilots in the world. But when I look at the Akasa journey, while it took 10 years to get from 18% to 43%, at Akasa in its first year, we have 37% of our workforce as women, and some even non-traditional sort of sectors like finance, about 50% of our workforce is women. 1 out of every 3 leaders at Akasa is women. So again, some kind of, at least green shoots of examples where it can work. We've done a study where we've seen that Udeti Foundation did a study of about 200, boards, and they saw that in the startup world, 8 out of 10 men involved in startups have directorship positions, and only 5 out of 10 women have the same equivalent positions. Again, kind of goes to show that not just in the rural landscape, but even in sort of urban, progressive, tech-led world, there are definitely some opportunities to improve. If you look at the Nifty 500 companies, in 2017, only 69% of boards had one woman director. Today, 95% of Nifty 500 companies have women board directors. And 40% of companies have actually taken a step further and appointed more than one woman board, independent woman board member. And then there is the whole, and this is where I'll kind of, maybe hand it over to Anukriti and then Mr. Rani, that there are a bunch of policy initiatives that are happening, that have happened in the last few years, whether it's the Women's Reservation Bill, the Maternity Benefits Bill, Mission Shakti, where there is some push. So now the question really is, if that is the gap, that is the opportunity, here are a few things where things are going well, then how do we bring in industry and business and policy to come together to realize that close to $1 trillion opportunity that we have if we raise the participation of women in the labor workforce. And I think I have to end by saying it really is upon us as business leaders, as people who have some position of influence, to take responsibility and take accountability of this mission, as opposed to not being just a good thing to do in a CSR program somewhere, but where it just becomes integral to every discussion and every conversation that we have. Thank you.
Thank you. Thank you very much, Aditya. Thanks for really setting the context so beautifully. And I'll turn to my next panelist, and Dr. Anukriti. She's the senior economist in the Development Research Group of the World Bank, to give her remarks and comments, please.
Good evening, everyone. I want to start by thanking the CII for organizing this incredible event over the last 2 days, and for also inviting me to share my thoughts on this topic. So I'll start by sharing that during the last few decades, India has made remarkable progress in women's educational attainment, as well as other things like Aditya mentioned in reducing the fertility rate, which is the average number of children a woman has in her lifetime. Now, these are remarkable achievements not only in their own right, but also lay a very solid foundation for women to participate in the labor market. They are essential for women to be able to do so. So what I'll try to do today is to give you a researcher's perspective, since that's what I do, on what we can do to leverage this large pool of educated and ambitious women to lead to this women-led development that we are talking about. So, like any other market, as Aditya mentioned, women's labor market outcomes are also determined by demand-side factors, supply-side factors, and also how we match job seekers with employers. Right? So let's start with the supply side. And I think I agree with Aditya that the demand side is important, and I'll come to that, but I also think that we need to think a bit more about the supply side. So by supply side, I mean whether women are willing to work and what type of jobs they want to do. So I think one of the big issues here is not that women do not contribute to the economy. In fact, if we measure the unpaid domestic work that women do and add it to the GDP of India, it's going to significantly increase the GDP. So the problem is not that women are not already contributing to the economy. I think one of the issues is that what we see is a gendered division of labor. By that I mean that men tend to be the breadwinners and they get paid to do the work they do, whereas a lot of women tend to be homemakers and they do unpaid domestic work. Right? And this gender division of labor is problematic for various reasons. Right? So one is, in fact, one evidence of this is that even when women do participate in the labor market, they still spend a lot of their time doing household chores, taking care of children and the elderly. Right? So it's not that participating in the market work actually reduces their domestic burden. So the problem with this gendered division of labor is that it leads to misallocation of labor. We are not allocating talent and ability, we're not allocating individuals to the labor market based on their talent and ability. Instead, we are using gender to allocate who does what. And this misallocation can have a significant negative implication for India's growth potential. So there's research which has shown, for instance, in the case of the United States, that roughly 20 to 40% of the growth that took place between 1960 to 2010 was actually driven by the reduction in misallocation of labor due to race and gender. So if India can manage to also allocate its labor more effectively and not along gender lines, that can significantly lead to true women-led development. And the other way this matters is it affects what women want to do. So I do a lot of data collection, I talk to women everywhere, and if you ask them what sort of work do you want to do, a lot of them express a desire to do flexible jobs, right? Either they're flexible jobs which they can do from home, or they want to work close to their home. And the reason is because these jobs are more compatible with the domestic duties that we expect them to perform. Right? But why is it that only women are responsible for taking care of these domestic duties? There is no reason for that to be the case. Right? So if we truly want to improve the productivity of the economy, we really need to rethink whether this gendered division of labor makes sense for us anymore or not. The other way this matters is when women don't have access to paid jobs outside the home, this affects their bargaining power within the household with respect to other family members. It lowers their financial autonomy, which then has negative implications for their ability to leave bad marriages or to even raise money to start their own businesses. Right? Another problem is that being restricted to the home sphere restricts women's access to social networks. I don't need to tell this audience that access to social networks is one of the most important things we need for our career and professional aspirations, right? When women stay at home or engage only with other women, that reduces their ability to benefit from social networks, get access to jobs, get access to credit, get access to insurance and information in general. So what can we do to enable women to overcome these supply-side barriers? I think the first thing is we all need to share the domestic load. If we really want women to meet their true economic potential and have true agency and choice in what they want to do, this could be wage employment, this could be self-employment, this could even be stay at home and be a homemaker. But what we need is for women to be able to make these choices independently based on their own interests and ability. So one way we can do this is by obviously involving men, right, and encouraging them and incentivizing them to take a bigger role in the household chores, in parenting abilities, through information campaigns, through role models, by changing how marketing and advertisement portray what men should do and what women should do. The second thing is we need to raise children differently, and they should not perpetuate the gender norms that previous generations have followed over time. Right? And there is a lot of evidence that boys who grow up with working mothers tend to be more likely to have working wives and then play a larger role in their households. The third thing we need to do is provide enabling infrastructure to women which enables them to work outside the home. And this can take the form of excellent programs like we have the Palana scheme, which provides access to childcare facilities for working women. It can take the form of providing better transportation facilities for women, better access to working women's hostels. We also need to encourage women to work in non-traditional occupations. So while it's great to hear that women, are participating as pilots, they are, participating in finance, we still see that a lot of women want to work primarily in education and health, and which is great, but that's already an overrepresentation of women in these industries. We also need to expand women's networks through things like self-help groups, as well as maybe utilize digital connectivity to improve that. So I think I'm going to wrap up now, but essentially we need to create jobs for women for sure. We need to let them match with existing jobs, but we also need to focus on some of these supply side factors that prevent women from effectively participating in the labor market. Thank you.
So three of us have spoken. Some of us have put some questions, comments. Much of it Madam Minister might respond to, but much of it she might also differ with. So let's have our opening comments before we open it up to the floor.
Well, CB is being a typical man. He's presuming a prejudice on behalf of the woman. But I think if we are looking at policies and corporate structure, CB, one needs to recognize that when I talk as a working woman, we need to differentiate between the need for a gender workforce which is productive, competitive, negotiates hard, and gender activism within industry. Those two issues have to be separated, firstly. I think one of the greatest takeaways of the opening remarks, let's say by Aditya, is that the report that CII is to present on skills today, what you've said, Aditya, is the headline of the day. That India now has more employable women as compared to men, but that is a great reflection of the journey which is academic and skill-based, not only for the woman concerned, but also the community to which the woman belongs to. I think that needs to be captured well. Now, when we talk about female employability or women's participation in economy, I would differ with Aditya on one issue. Everything that is gender vis-a-vis economy is looked upon from a perspective of how many women participate in the labor workforce framework. We need to start adding layers to that conversation and say how many women today are encouraged to be entrepreneurs and not be reduced only to being a part of the labor force. What I think is a great challenge, which Aditya has highlighted in his remarks, is the number of companies that are willing to fund and be adventurous in the startup ecosystem if those institutions are owned by women. We know of cases where women come up with a startup idea but have to digress from ownership because if they have a male face to the industry, then there will be more inclination from funding institutions towards a male-led enterprise. I believe, CB, there is absolutely no company today which is mindful and meaningful when it comes to its hiring or operations that wants to be gender biased. No company, no corporate structure today can afford to be prejudiced against women. The question is, how are we now creating opportunities in non-traditional sectors? Mostly when we talk about women and their contribution to economy. Today, definitely the buzzword is women's self-help groups. Yes, in the rural ramparts of our country, 9 crore women who are associated with close to 90 lakh self-help groups today manage an economy size of $37 to $38 billion worth of work. That itself is a great, I think, economic tenet to leverage. But how do you create new opportunities and new age opportunities within that ecosystem? The Prime Minister's Drone Didi program is one such effort. 15,000 self-help group women. Now imagine, this is a new skill set, Aditya, where 15,000 self-help group women means per self-help group there are 10 women, which means there are 1.5 lakh women today in the country who will operationalize drone services for local farm needs and fertilizer needs. That is the big headline. So we need to move our conversations from women only in self-help groups as though they are making papads and achars, and now look at the capacity that we can leverage in the new age economy vis-a-vis this huge force of women who are trained now and experienced enough to manage money. The second non-traditional emerging market, where I don't think much effort has been undertaken to highlight the participative nature of women. Recently, there were news reports about EV retail sales going up by 25% in the month of November. Now, how do you look at it from a female prism? Automobile industry has 30% women as a part of their workforce. What is the female contribution to the EV manufacturing facilities in our country? More and more women are being hired in the manufacturing design components. More and more female-led enterprises coming in to women who are possibly doing businesses in battery recycling or charging.
Can we have an industry base focused only on those elements where the ancillary industry of charging, recycling of batteries, or for that matter, repair and maintenance is going to be led by women? Another industry, there are reports of, let's say, hydropower taking up 40% of the energy sector by the year 2030. Now, industry says that hydropower is a segment which will employ close to 3.7 million people in our country by 2050. We have enough lead time. We know one of the greatest challenges there is only 30% of the workforce in hydropower today is women. One of the greatest debilitating factors there is that in the hydropower segment, they say we do not have women enough from the STEM segment to become productive for the hydropower industry. So when you're looking at skill, I think what would augur well for not only women, but also industry on the whole, is what are the industries of the future and not reduce it only to sunrise industry. Because there's a caveat which comes with the word sunrise, that there will be a sunset. And I don't want to promote that for women. I want women to today have an identified pathway. Yeah. And what are those identified pathways? The challenge is, Aditya, we don't talk much about the identified pathways or careers of the future when it comes to women. So how can we create conversations around careers of the future? One. Second, how can we then help women reskill on one issue, which I'm extremely vehement about always. How do you help women negotiate better for themselves when it comes to their own career progression? So most of our conversations today are limited to the entry-level foundational issues. I am not looking at issues of how do I reduce a woman's fertility so that she can become more and more beneficial for the economy. I think the reproductive rights of women have not become a part of the economic pie that she wants to participate in. The reproductive rights of women is her personal choice, her personal issue. The minute you bring that to the table, then comes the old noises. Oh, acha, you will give birth to a child, hence you will not be available. Today, there are reports after reports which say that the loyalty of the female workforce in a corporate structure far outstrips the men in the structure. So instead of reigniting a bias which has sustained conversations, let's now start talking about issues that really mean well for women who are already in the industry, well for women who want to be a part of the industry, not the traditional one, but because now I think even aviation and becoming a pilot has become a traditional industry for women. And I'm proud of that. So what are those non-traditional spaces? Space, astrophysics, yes. EV, yes. Renewable energy, hydropower, yes. So can we now designate a conversation which says these are the careers of the future, where you need precision in science. These are the careers of the future where you need more evolved economic outlook. So what do business schools have to do, science schools have to do now, so that you prepare that woman to lead in these emerging sectors? No sunrise, because I don't want a sunset for women with capacities in my country.
That was actually, CB, I was just, before, I wanted to give two examples of what you just said. And one I saw last week and the other one I've been involved in. In rural Gujarat, right, there are salt pan workers who have been working there forever. And they used to use, traditional diesel-powered agri-water pumps to pull out the water. In the last few years, they've moved more and more towards solar-powered agri-water pumps. Now, not only has that helped in increasing productivity, etc., because you don't have to walk now 20 kilometers to get a jerry can of diesel and come back, etc. But as the minister was saying, the girls over there, the younger women, have also become now experts in repairing those solar panels, rigging them up, etc., etc. Something that I saw last week, I was at the Symbiosis, I was presiding over the convocation at the Symbiosis Skills and Professional University in Indore. And there they have an entire program which is dedicated only to women students on manufacturing and repair and maintenance of two-wheeler electric vehicles. Just the point you were making. And Dr. Swati was telling me that the entire batch is getting hired out. Now, in that pocket of excellence, can we kind of do it across industries is where of course, we will make a huge difference.
And I'm of the opinion that not only manufacturing, if 55% of your GDP is consumption-based, what are the service segments in which you want more and more women to not just be reduced to somebody who's serving, but actually owning that service-based enterprise? The other issue, when I talk about negotiating skills for women, not only women who are now going to enter the economic force, but also women who are already experienced. Because when Mr. Ghosh spoke about women who cannot come back to their jobs, one of the greatest challenges is that one, they need to look at how their industry is now positioned vis-a-vis technology. And the second is most of them cannot negotiate their return back to the workforce. Another aspect, I think, which we need to recognize, and possibly that doesn't get much traction, is the language challenge. If you look at percolation of industry now, which is not centered around specific urban populations and is going and becoming more and more a urban phenomena, how much of our industry is ready and the urban population ready to have a female participation then to an industry that goes towards certain demographies or geographies in our country. Lastly, I think that when we talk about negotiations, I will want also to see more and more industry participation with regards to, let's say, a segment like arbitration.
Right.
How many women are we from law schools now encouraging not to become just lawyers, but great arbitrators, because and mediators, because that is again a segment where we'd like the participation of women to be enhanced. Now that being said, I think when I take away from Mr. Ghosh's opening remarks, that does not say that the government or society at large, or even industry for that matter, does not recognize the hereditary challenge that women have, or societal challenges that women have. The government has dedicated itself to programs of nutrition, programs of maternal health. The government has dedicated itself to making sure that the education policy now has a specific gender inclusion fund where monies to build up capital infrastructure does come up. So in terms of social infrastructure and social justice for women, women have become the fulcrum of all administrative initiatives by the Prime Minister, by the Prime Minister's government. The issue is, for the industry now to complement that effort, we need to now create those conversations which are diverse. And not only because it's a women's issue, it becomes constrained to one silo. So there has to be an industry-wise engagement, skill-wise engagement. Women are ready. The question is Indian business?
So with that question and note, let me turn to the industry, and I'll turn to an entrepreneur. I'll turn to a leading lady entrepreneur who's heading one of the most important sectors of the Indian manufacturing industry, which is today well linked globally. Shraddha Marwa Suri, the president of the Automobile Component Manufacturers Association.
Thank you. That's a very, very kind introduction. Honorable Minister, first of all, I must congratulate you for the exemplary work that you've done for women and child development, and also the government and the leadership. As a nation, we couldn't ask for more. There's one thought that keeps crossing my mind, and it's not so much a question, I thought it's a suggestion. What is it that we can do, industry and government together, to actually educate men to accept women across segments, across the 3 segments that I look at, which is family, education, and the workforce. Because I truly believe the problem lies there. So, that's the thought. And I'm more than happy to work and help out in any which way that we can.
I think what has happened for our generation, and allow me to say our generation between the two of us, there is now an acceptability that if a woman contributes financially to her family, that is in no way a disrespect to the men in the family. I think that's a tectonic shift that has happened as compared to our mother's generation. What we need to build on is the safety component, where an industry can communicate to the local community that if a woman in need of employment has the skill set and needs to move geographically, then there is a sense of safety. Not only physical safety, but also job safety. And I'll give you a very small example from textiles. There is a company called Shahi Exports. Now, Shahi Exports has close to 80,000 women who are working on his factory floor. They're working in Bengaluru. Most of them are from Odisha, and that too from the rural parts of Odisha. They come, many of them while they are working, complete their education. Many of them take maternity leave, come back to the factory floor. That's because that one industry leader has created a framework within to ensure that they not only hire, but also sustain the female participation in their company. So I think that in terms of the societal challenge, much has changed in our country. For instance, today when you remember the ISRO story of Nigar Shahji, Aditya L1 mission project director, is a lady. But she was not looked at from the prism of her gender for the success of the mission. She was looked upon as a scientist, and her contribution was measured accordingly. And I think that is the revolution that not many pay credit to. It has happened in our country. The narrative that men are keeping us back, albeit an old one, has actually changed. And I'll give you another example of it. How has it changed? We had a 3-decade-old legislation pending in Parliament, which was medical termination of pregnancy at 24 weeks. I can challenge today many economies which are advanced and developed. They cannot pass such a legislation without furor in their country. In my country, and I'm very proud as an Indian, it passed in both houses of parliament without a single man from any political organization or a single male citizen in this country getting up and opposing it. What does that tell you? So I think that yes, historically we have seen challenges when it comes to gender. We may still, I am not claiming that we are in a utopian age where all is kosher. But I'm saying that we have taken great strides and we need to accept it and recognize it. Because till such time we keep wallowing in the challenges of the old, we cannot move forward towards the new. The story that Mr. Ghosh gives you of salt pans and new motor engineering, those are stories of success. So how do you build from there? Those are the stories, those are the women who we need to keep talking about. For instance, today the commander of all armed forces in India is a lady from a tribal family who could barely afford to educate herself. That's the president of India. Those are the stories that need to be told repeatedly.
But I think the one thing that Shraddha mentions, and you and I have had this conversation before, there is one implicit bias. And, men have to be made accountable. And I've mentioned this to CB also. I go to these national committees of CII and CB, you and I have to take account.
If there is a problem with CII, don't blame the rest of the country.
I look at the national committee of CII and look around the room. There are like some 10 women. And it's an overwhelmingly number of... And Shraddha, you and I have not personally met, but we know who each other are. Shraddha is one of those exceptional women who have taken on the mantle.
Like I said, I've had the privilege of addressing the National Council, and I'd raised the same issue. The problem is, Aditya, if there's a problem with CII, that is not a problem of the country at large. You need to fix your own home first.
That is true also.
Can I jump in here?
And I think the challenge is, the challenge is that there's an expectation this is not a house that needed to be fixed. That you are some of the most erudite, educated people who know better. You're supposed to fix your own house, buddy.
But I think just to add to what you are saying, I do think that we need to look at men. So while I agree with you that a lot has changed, and especially maybe in the our generation or the people we engage with, things are changing. But it's still, if you look at the majority of the Indian population, there is, I think, still a bias against working women and them. So I'll give you a very interesting study that recently was done on online matrimonial agencies. And what they found was that women who were either working or said that they want to continue working after marriage, they received fewer marriage interest proposals from grooms, right? And if these women said that they were working in the masculine jobs, it was even worse, that penalty.
So Anukriti, I think it's a male problem which is global. It is not
No, I agree.
Indian
I agree.
problem.
I'm not saying, but I'm just saying since it is also a problem in India.
Like I said, there is an issue with regards to every society.
I agree.
The issue is not that all Indian men are a problem. The issue is that the male-female challenge or whatever friction there is, it's an international issue.
Yes.
The issue I'm trying to focus on is that when we come to platforms such as this, and when you have an audience which are economic leaders of our country, what is it that you'd like to ascribe to them and ask them to do? So if Aditya is going to come up with a skills report, what is the report 2.0? What are the pathways? What are the career choices? What is going wrong in our science-based schools or our business-based academia, which can help encourage more and more women to become leaders? And I think that till we don't get to that part of the conversation, old conversations, yes, we don't deny they exist. The issue is we need to bring the new issues on hand, on the table, and ask for a fix now.
No, I agree. Like if you actually look at young women, they are so motivated and ambitious and have great career aspirations. But I think we fail them if we just provide them technical skills and do not cultivate these leadership and negotiation skills. That really hampers their progress.
Just my experience in the last 10 years, the two areas, if we had to kind of put a flashlight on, one is mid-career, how to build leaders. Leaders for, CXO level, board level, just women leaders, right? One is that. The second is, when people come back from their career breaks, even in the middle of their career, what is the structural mechanisms we are creating within the companies to bring people back? You can't, somebody comes back after 5 years and then you say, go swim in the deep end of the pool and now kind of try to catch up. That's unfair, right? And I think that the conversation has to be around equity, not just around equal opportunities, and then try to say, okay, what do we, not just at the entry level as Mr. Rani was saying, but at the mid-career level, growing leaders for, I don't know if Shraddha has a view. There Indian business families, and Shraddha is an exception. You look at how many women from traditional Indian business families then take on leadership roles in these promoter-driven companies, right?
Aditya, we have to wrap up because a minister has come out from where but just to for the heck of balance, because the dais is balanced. The questions from the floor, I'll have to balance. So I'll have to give a man a chance to ask a question. Kamal Bali, the Managing Director and CEO of Volvo.
You're being inclined only towards the automobile sector, which is a bias.
Insane bias. So manufacturing sector.
You don't have a gender bias, you have a sector bias, yes.
Sectors are all converging now. So they won't be very soon, you won't find different sectors. First of all, ma'am, congratulations for this Didi drone program. I think this is very inspiring and I think this can become a trendsetter for new pathways, Ma'am, since technology is permeating all sectors of economy, and very soon you will see very blurred lines between services and manufacturing. So, in my view, there'll be many more opportunities available for women. So, my suggestion would be, just like Didi drone program, Can we think of 2 or 3 other programs simultaneously, launch them so that we can build scale and we can get better experience?
I think you know my boss. By the time we have finished talking, he would have thought of another program. But I think what is great today is not only that the Prime Minister has been incessant in making sure that every segment of society and economy has a new solution for women. What I would hope is the segment of affordability of devices.
Right.
That will have a huge impact with regards to digital participation by women. Or for that matter, families at large, especially families who want to afford more and more technology. So I think that most definitely you can count on the Prime Minister of finding new engagements and opportunities for women, like I said, like the drone Didi that he started. I also believe, while you're talking about the intersection of an amalgamation of all sectors, I believe CB is on the anvil of producing a mobility report, which will show that, as I was talking to Ms. Suri, that one of the greatest challenges is how do you inspire confidence in communities. When you look at women now, the employable ones, which are more than men now in number, one of the greatest factors for them will be mobility. So I think that there is new opportunity that is coming. My question to you, sir, is as an industry leader, Modi has walked 10 steps already. It's time for you to walk at least 2. So come up with 2 new programs on behalf of the industry that can benefit not only women but society at large and enhance more and more participation. Because I think given now predictions for the Indian economy, this is the right time. As the Prime Minister says, yahi samay hai, sahi samay hai.
Right, thank you ma'am. No, it's happening and it will happen. Thank you.
On behalf of CII, thank you, Mr. Rani, thank you, Dr. Anukriti. At the end of a 2-day conference to have such an engaged session, that's pretty cool. But I didn't expect anything less from you. So thank you very much for making the time. I know you have to rush to cabinet. So again, thank you everybody. Thank you for being such a participative audience.